is. Okay. Morning, guys. Morning, guys. We're just starting. It's 9:14. It's Wednesday. I'm going to hand this over to Marcin. We're getting ready to go live. We will continue doing what we did yesterday with the presentations. It's going to be about 6 hours today to about 4 o'clock. We're also doing a full demo on Node 40 at 3 o'clock. So you guys want to show for that. Apologies for any of the glitches we had yesterday, some of the low profile, some of the audio feeds. We'll fix all that for next time, but just bear with this. Marcin, thank you very much for taking over, buddy. And I'll leave it to you, buddy. We just need to send this link to these guys, right?
Yeah, I'll get it done.
Awesome, man.
Awesome. Welcome, guys.
And then let's see, put this on. Where's the chart at? Oops. You got the, do you have the code?
The link, you mean?
Yeah.
Yeah, I'll need to take us. You need to do invite again. Just take a photo of that. Okay. Now get them the code, the link. I'll come back.
Awesome, buddy. Thank you. Thank you. So, Jen, I'm sending this to you now.
Okay. Yeah, I'll give them the link and then so on your the same as yesterday. Just switching over, right? Yeah.
Yeah, man.
Okay. Check. Everyone's in there ready?
How exhausted do I look? I am so tired. Okay, you guys restream the room. Thanks a lot. Santino, thank you. John Paul, thank you. Mex in the room. Dude, thank you so much, buddy. Oh, the panels have been great. Thanks, buddy. Gerhard Schneider, morning from the Republic of the UK. All right, guys, I will present. There we go.
Looking forward to that. If you don't have to rush out to an airport or anything, if you have any questions today, please let me know. But with regard to, certainly N40 Alliance, want to just thank everyone for being participants. We will extend some thanks throughout the day today to some of our new members and do some celebration kind of things. And in terms of photography, I know some of you have asked, we will post out to the gallery over the next few days and into early next week. But really, again, this is meant to be a live kickoff of a community effort and an ongoing relationship with all of you and expanding from there. So we'll have event dates and online and in person and a lot more to come. So thank you very much. And I know Gary wants to say a few good morning things and we'll kick to the panel.
Yeah, Jen, thank you for everything you've done. Really, it's helped a lot. I tell you, one thing I'm really interested in here
This one.
is this summit thing that we're doing. I've had a conversation with, like, I didn't really get it early on, but I've had a couple of conversations just this morning. I think there's something here. Like, I think that we could actually create a really cool community with some gravity. And so we're going to be probably reaching out to a few of you guys and throw an idea about, I haven't even talked to Jen about it, but I've spoken to a couple of people about expanding this geographically, and maybe looking at one, upgrading, bringing in more depth, more experience, but also like maybe doing a traveling educational. And I think if we were to do that properly, we'd also be able to like maybe lobby properly. And I think a lobby from a bunch of family offices would be very, very impactful. So I just think we're doing something here that's really cool. Really appreciate everybody being here, the contributions you made just to get here on planes. I mean, I know how much hassle it is. That's why we've tried to make it really fun and pleasant here. Hopefully that we've accomplished that. And why don't we just let these guys talk, because they know more about this stuff than I do. Thank you, guys.
So with that, I'm going to kick over to some of you heard from and got to meet Joe Woodard yesterday. And Joe, I know you've only done this once or twice, so thank you very much again, and we'll leave it to you.
Okay. Well, my name is Joe Woodard, and we consult with CPA firms on all matters related to their operations and strategy, their technology, but of course, digital assets are part of that, so that's why I'm sitting in this chair. And I'll let my panel introduce themselves.
Hi, I'm Ben Taylor, CEO and co-founder at Subledgers. We help multi-entity organizations consolidate their financials quickly and easily, and that includes most of our customers have digital assets. So yeah, great to be here. Looking forward to the conversation.
Sam Leichman, I'm the blockchain practice lead at Propeller Industries. Propeller was founded 17 years ago to offer a full stack CFO to staff accounting services for VC-backed startups. I founded the blockchain practice about 5 years ago when Solana Labs quite literally fell in my lap as a client and fell down the rabbit hole.
My name is Javier Cáceres. I've been in the industry for 10 years. I am the owner of Interim CFOs. We specialize on crypto companies. And I'm happy to be here.
So let's just kind of jump right in, and I want to jump right in from the reporting standards side of things. And I'll start with you, Sam. What are some of the shortcomings with US GAAP specific to digital assets?
Yeah, so when I started, the way that you would account for Bitcoin, Ethereum, and other digital assets, for the most part, would be at the level of cost or impaired value. They were considered indefinite-lived intangible assets, which we talked about this yesterday, could only be marked down, but could never be marked up. Last year, FASB came out with the ASU 2023.08, which did allow for the fair value reporting of some digital assets, but did exclude native tokens, NFTs, wrap tokens. And in a lot of ways, I think it was a step in the right direction, but it made things actually a lot more complex. So the balance sheet is there really to tell you what you own your assets, what you owe your liabilities, and what's been invested in you. Digital assets on the balance, or businesses that have digital assets on the balance sheet's fundamentally broken because you've got no visibility into actually what you own, depending on how you set your chart of accounts up. Certainly, you don't have any idea of quantity, and then you could potentially have three distinct asset types or valuation methodologies for low-com, fair value, and then we also, I'm not sure if we didn't really touch on stablecoins, but stablecoins do not belong in cash on the balance sheet. They're not considered cash per US GAAP, so they are considered a digital asset, which we then break them out in a digital asset bucket. So what I'm getting at is you have essentially three distinct asset types that have different valuations sitting next to each other. Final point, and this is a whole other ball of wax, is with the rise of tokenized RWAs, all of a sudden you're not just looking at one spot on the balance sheet. I think we're going to be seeing in the coming months, years, you're going to see tokens all over. So I think that it is it's highly complex, and there's no easy answer to understand your digital asset position by just looking at a balance sheet.
So follow up on that, Sam. Right now, ASC 350 classifies stablecoin as intangible, right? Which is, well, the guidance is unclear. Let's just put it that way.
Yeah.
So we're going intangible as an industry. Obviously, those are going to be in a separate area of the balance sheet. But when that catches up with reality, especially with this tokenization of RWAs, that's going to catch up with reality. They're going to go with their new fair value on that kind of an asset. So when that happens, do you see that simplifying the balance sheet? And if no, why?
Oh, I think that if you can, right now we break stable coins out as a separate line item. For a startup, when we go through our close process, there are 3 questions that every founder wants to know is how many months runway do I have? How much cash do I have in the bank? And when do I run out of money? And stable coins informs that. Other digital assets can get squishy. So I think being able to actually look at it as a cash and cash equivalent will make things, I think, better, but you're still going to have 2 distinct valuations with fair value and book value sitting next to each other on the balance sheet. I think it's another step in the right direction, but again, it's not going to make things crystal clear.
And that's where somebody like Javier would come in because of your CFO layer.
Yeah.
So how would and I may have anticipated your question, but how would a CFO help to navigate that? Or if you had another comment, make your other comment.
Yeah, I wanted to double click on this regulation that was passed on December of 2023. Okay, in my humble opinion, moving to fair market value was godsend. And why is that? Because it puts cryptocurrencies more in the same way that you would book any other FX in your balance sheet. It has depreciation, appreciation. You get to book the gain and losses. And when you're looking at the balance sheet at any given point, you have a real view of your assets at that point. I think last week or something was reported that Tesla added 600 million or something like that, and that was just a revaluation thing. All triggered because of this regulation from December of 2023. So because of that, you see things happening in different assets like stable coins. USDC is really straightforward, is one-to-one. You are not going to see anything changing there. But if you're looking at things like USDT, it varies, 2 cents here and there, but depending on how much you're carrying, you're going to see a variation there. And then when you're looking at the profit and loss, seeing how much you have unrealized short-term or long-term gains is fundamental. It allows you to make better decisions going forward. And I'm going to stop there.
While you went to the P&L, can we talk a little bit about revenue recognition, ASC 606? So, who wants to speak to that? Anybody can.
I can go quickly. Okay. So in terms of the revenue recognition, it makes it easier too, depending on the type of company that you are running, right? If you're doing a play in which you are just trading assets, okay, you book the revenue right there and then with that transaction, but you're also going to be carrying some sort of inventory at a certain point. And differentiating between the revenue that was generated from the swap, from that sale or whatnot is one thing, and then you're going to have whatever other gains, and they're supposed to be booked differently, other income versus the top line.
Can I add one point too? If you have a business or if you're getting revenue in any digital asset, you book that revenue in the US dollar equivalent when that transaction happens. And you owe your taxes in US dollars, not in any digital asset. So one of the things that we tell all of our clients is if a substantive amount of your revenue is coming in, to make sure that there is a tax liability wallet in USDC that you're squirreling away money for come tax time.
Makes perfect sense. I'm going to come to you next, Ben. I know you have a lot of users of Subledger, a lot of your customers. are family offices. So what are some digital asset challenges that are specific to family office and really any kind of investment company?
Sure. Yeah. Great question. I think, one of the challenges, and we were talking about this earlier with family offices, is that you're investing in a diverse set of investments. And so while the digital asset complexity often isn't necessarily that much taken on its own, if you have private company investments, digital asset investments, are whatever this very wide portfolio of different types of investments, and have to consolidate them all together. That's where it becomes challenging, and having a durable, consistent process where that you're going to get accurate financials is pretty critical there. And yeah, maybe adding to what Sam and Javier said, as prices fluctuate and you're transacting with the digital assets, it's not intuitive to know where you're at gain or loss wise, and so tracking that as you're operating with digital assets is critical, because the numbers don't lie at the end, what your gains and losses are, and it may not feel like you're in a large gain or loss territory, but once you run it through the cost basis calculation to determine what your realized gains and losses are, sometimes that's the case.
Well, I'm just going to stay on you for a second. So there are blockchain native solutions that can address some of that. You're one of them. You're blockchain native in the sense of where your programming base is, but I mean your code, your feature set is tailored to handle that, right? So it's blockchain first, right? But can you speak a little bit to the technology side, not just Subledger, but sort of beyond, and how can that streamline the back office of the family office?
Sure. Yeah. So if there's one thing that blockchain data has, it's not standardization. It's kind of the Wild West still of different chains, different data sources that are centralized as well. Wallet providers, do you pull from the wallet? Do you pull from the chains? It's so I think most importantly is to start with what are the data sources, standardize those, come up with a process where you can consistently get that data in an organized fashion, and then I think Perry during his panel yesterday was saying, I'm going to paraphrase, but transform data into information. I think that's kind of what you need to do, and then we are the next phase where and then you have the information that you can use to turn it into journal entries that gets into your financials, and then that's kind of the whole picture.
Yeah, we saw a little bit of that with Node 40 yesterday too, as well. Anytime I see a sheet like that going to zero, the accountant in me just feels warms and fuzzies. So because I know I can turn that into a journal entry. It's just all right. So we haven't yet touched on, when we're talking about recording the journal ledger, we haven't touched on costing methods. We had a long conversation about this yesterday. It can be a little complex, but with the new guidance, you can be FIFO, you can be HIFO, you can even in some situations be specific identification. Who wants to tackle that one, break it down, and at what point can I use what costing method?
So I normally recommend FIFO for all my customers, right? To me, it makes the most sense. It's easier to apply. But I think the conversation that we were having yesterday was around the question that you could allocate different functions to different assets, okay? And yes, you can do that. You can choose a wallet and have whatever coins in that wallet and give it a specific purpose, okay? But for the most part, I recommend FIFO all around, unless any of you recommend otherwise.
We, for our clients, typically lean into FIFO. It's the most straightforward. I think also there was IRS came out with a RevProc, which allowed for cost basis rebalancing, because now, in addition to obviously making the election of what cost basis tracking you're following, you're also going to have to be doing that at the wallet level. So It used to be global FIFO, and whatever your average cost of ETH was, it made it very easy. But I think looking ahead to, especially, I think we were talking about the 1099 DAs coming up, the IRS seems to have taken a very thoughtful approach. They gave a safe harbor period where you could actually go in and reallocate your cost basis, but really with the intent of knowing that they're going to be taking the 1099 DA filings very serious.
Yes. Does anybody want to drill down on 1099 DA?
I would love to. I would love to. What they're trying to accomplish here is good, okay? But it's going to be messy, okay? It's going to be very messy, because in order to calculate the gain and losses, okay, you need to know what you bought, when, and how much you pay for it, or how much you sold it for, or swap it, okay? So blockchain is amazing. It can tell us exactly when that happened, okay? But if you did the transaction, let's say at an exchange, and then a different transaction through MetaMask, okay, you are not necessarily going to be able to know how much you pay for it easily. But let's assume you have fairly okay records and that you know exactly how much you pay for that. Now you have to go to each exchange, okay, and fill in the blanks. For instance, if I bought something in MetaMask, let's say I bought one BTC at 50,000, right? And I send it to Coinbase, and I sold it in Coinbase for 100,000. Coinbase doesn't know that you pay 50,000. Has no idea. There is no way for them to know that, okay? Therefore, when you sell it, it's going to assume that it had zero value and that you sold it for 100,000. Therefore, now you have $100,000 gain, but that is not true. It's a $50,000 gain. So you have to fill in these gaps, and you literally go into Coinbase and enter how much you pay in order for this calculation to be accurate. Okay. Now, if you have extra time in your hands and you feel like sitting down for a day and just going back a year or two or three or more, figuring out how much was paid back in the day, good luck. Okay. Most people don't have that kind of time, and even if you have the time, they don't remember. They have to go to different bank accounts, etc. So you can imagine where this is. Now, let's say you didn't sell it for good old cash. Let's say you swap it. You went from Ethereum to BTC to Solana, blah, 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 right? You need to be able to keep track of these things too. And that is where the power of a subledger or some sort of solution to keep track of these trades, these movements, and give you a true and accurate gain and loss become fundamental to reflect proper financials, right? And this year is the year in which everybody is going to have to be doing this. And you cannot rely, please promise me that you will not rely on what they give you, because chances are that there is going to be some sort of mistake. And depending on how much you're trading, is a very costly mistake, right? So if you have if you have a tool that you can go and compare it and be able to ask for a revision or be able to support that this 1099 is wrong, this is the real amount, is going to go a long way. Sorry.
You have something to say?
I've got sort of a shameless plug here for Node 40, but on the corporate side, for our clients, I can't do my job, my controllers can't do their job without a subledger. And fundamentally, being able to take, plug in wallet addresses and create a set of rules, but being able to, translate on-chain activity into journal entries and being able to track everything that Javier is talking about, we just wouldn't have a practice if folks like Node 40 weren't making subledgers.
Okay, great. And so now we've mentioned Node 40 a couple times. You mentioned Subledger. So I thought, Ben, kind of tell us how a solution like Node 40 and Subledger both come at to this problem together in concert, because they're different and they both go at the problem differently. So how?
Sure. Yeah. And so for accounting firms, it's so important, even more so than a direct, than if you have your accounting team in house, to automate, because you can't build a business around doing a different thing each time and having all these bespoke cases for each client. And so, particularly in that case, also on the direct, internal accounting side, but particularly on the accounting firm and family office services side, it's important to treat these as two different, big problems. And one of them is the data standardization problem, getting the data off these various sources and making sense of it. And that is, where Node 40 does great. Another plug for Node 40. They do that great. That's why we enjoyed partnering with them, and do it in a way where you have that, in the app is there's a lot of useful information. Obviously, that report we saw yesterday is great. But that's the starting point, getting everything organized, very standardized. And then we take it and convert it into journal entries into your financials so that it all kind of ties together. So if you have different representations of a particular asset, you can have asset that that's your internal holding, something that you're maybe custodying for another entity. You can split all those out separately directly in your financials and have everything tied together. So when you look at your balance sheet, you can just kind of drill in and go to the next step, and then ultimately go back to the transaction that happened on the blockchain or in your exchange. That's the goal. And it isn't a magic, wave a wand solution. You can't just, take all the chains, automatically ingest them and make it, make that whole process happen. And so I think you have to be realistic going in, what are the data sources we're dealing with? Sometimes you might determine, is this more trouble than it's worth to be in this business with this DeFi protocol that we're working? That's an assessment you can start to make once you lay all that out.
Anybody have anything to add to that? Okay, so Sam, I want to talk to you a little bit about some VC-backed crypto startups, especially when they're early stage, right? Mm-hmm. There's some challenges there. It's a little bit of a landmine. I know you work with that category. Can you speak to it a little bit?
Yeah, I think, we tell a few stories for sure. A lot of...
A story's good. Tell us a story.
This is kind of an anonymized compilation of, what we see when a new client comes knocking on our door. Maybe 5 or 6 founding team members, all technical. The least proficient coder gets to be the head of ops, HR, marketing, sales. And they will have just raised $15 or $20 million, and they may not have a bank account. Now, that profile is maybe a little bit more true a couple of years ago, but I think...
They don't have a bank account.
But, it really, there's... how do you, be the adult in the room as a CFO and, let the builders build? For sure, these entrepreneurs didn't get into building cool stuff to become experts in QuickBooks, 100%. So, from our perspective, it's, how do we make sure at the earliest stages that they get the support they need to make sure that they've got a clean set of books, that their chart of accounts is in good order. And as they scale up, being able, we're a fractional firm, to lean into FP&A, to lean into more strategic work. And we kind of have a very unfortunate business model. If we do a really good job, we work ourselves out of a job. We've worked with Solana from testnet through their meteoric rise, same with Optimism. And eventually these projects get big enough that they go and hire their team in-house. But it's an incredible ride. And, again, it's, for me, I just feel so incredibly lucky being around these kids who are just so much smarter than me, and in a lot of cases, less than half my age. can go off on this for some time.
Give them 5 more years, maybe 5 times your money, right? So there's all of that too. Maybe. See, that's the thing. Maybe. Who knows? All right. So we talked a lot about subledgers. We had a very fun conversation sitting on that couch last night about third ledgers, fourth ledgers. I think, Sam, you even kind of maybe toyed around with the concept of a fifth ledger. Somebody want to unpack that a little bit, and how's that specific to sort of blockchain environments?
I don't mean to hog the mic, but I would like to mention, one thing that we've done and standardized at Propeller is we call it the statement of digital assets. And it basically is a bridge between what you have on chain and US GAAP reporting on the balance sheet. And we developed this. We thought we had something really proprietary, wallet asset, quantity, fair value, and book value. And it was really spun up just so we can make sense and actually just prove out that the number on the balance sheet was accurate. But we realized there were other applications for this, and tax, audit, regulatory preparedness, venture reporting. Andreessen has adopted this as a requirement for their information rights at year end. But I think there are everybody on this panel and who's working in the space. We've got this incredible opportunity to create standards and best practices. And anyway, we have a white paper, sodafinance.xyz, with some tier 1 firms that have contributed, but happy to talk about that separately. But again, I think this is a supplement to the financials that really, again, if you look at the balance sheet, that number doesn't make sense. This will tie that out and give the full story of a firm's treasury.
But in a way that's different than the subledger. Javier, do you want to speak to that?
So I'm just going to take a quick poll. Does everybody have an idea what a subledger is? Let's just start there. Raise your hands. Yes? Okay. So kind of like half the room. And just so I have a general idea, raise your hand if you have 10 or less assets, crypto assets in the balance sheet. 10 or less? Different types. Okay, 10 or less. More than 10? Okay, good. That's great. All right. So I'm sorry, and the question is, unpack the subledger.
Yeah, well, and make it distinct from this concept we were mentioning of the third ledger and the fourth ledger.
The third ledger. Okay. So let's start with the third layer, and then I'll walk my way through the subledgers. Okay. So the third layer is unique to crypto accounting, right? So you have your debits and credits, and that's just 2. Okay. The third one is basically the confirmation of whatever happened on chain. Okay. So all things being equal, whatever is happening on chain should be what is reflected in your debits and credits. And that's really where that comes from. I'm sure we can, split hairs all you want, but in a short sentence, that's all it is. Now, subledgers and why they are important. When you have so many assets, you're going to be trading, right? And depending on your trading strategies, you may be doing a lot of microtransactions, and these microtransactions sometimes will generate revenue in the 5th, 6th, 7th, 8th decimal. Most accounting systems only go up to the 2nd decimal. Okay, so you kind of have to put them together in order to be able to book revenue, in order to be able to affect your assets, to affect your liabilities. Okay, and the whatever accounting system you may be using will be overwhelmed with all these microtransactions coming in on the daily basis. So what the subledgers are solving for is bulking these transactions in whichever period you want, daily, monthly, whatever works for you, and you make one entry in which is going to affect the increase or decrease the price of your asset, generate some revenue, some COGS, and if you had any gain and losses. Okay, So whichever setup you choose, let's say you do it on a daily basis, you will have just one entry. And the whole idea is that if you go back to this entry, it will be supported by whatever node 40 or whatever subledger you may be using, and be able to say, okay, this is where this gain and loss came from. This is where this revenue came from. And that simplifies the process. And which leads me to a point I wanted to make earlier. The question that you answered. Like, I'm in the business of selling CFO services, okay? And as much as I want to sell CFO services all day long, okay, I'm actually selling a lot of accounting, okay? Because we cannot really do our job if the books are not good. And I had a conversation with them, like, listen, I know you thought you needed a CFO, but quite honestly, you go back to basics. We just need to do good old bookkeeping and accounting. And this is what, these subledgers and these best practices are for. If you have that done properly, your taxes will be a breeze, your financial reporting will be a breeze, and making decisions on a timely manner would be super easy.
And
don't forget about audit.
You're more audit proof.
Wow, but the audit, okay. That's really when it becomes super meaningful, okay? Because when they're gonna be doing selections, okay, whether it's revenue. No, but
No,
no, but this is really where their subledgers shine, right? Because if you're doing an audit and they ask you for selections, whether it's assets, revenue, or COGS, if you can just double click and unpack the subledger data behind it, then you just put it in a CSV, ship it, and it's up to them to figure it out.
A world that we all are more familiar with, or let's just say it has a longer runtime, would be, say, inventory warehousing. So it's not dissimilar from that. That's inventory is a subledger. And there's a high transaction volume like there is with cryptocurrency. I'm grabbing a product and putting it back on the shelf. I'm grabbing a product, putting it on another shelf. Its value changes if I grab it, do something to it, then put it on a different shelf. And Javier's point, if I'm trying to track all of that at the general ledger level, then my financials are going to be insane. So I track all of that minutia at a way where every once in a while I need to drill down on it for management purposes. Hopefully never, but could defend myself in an audit when I have to defend that inventory asset or that cost of goods sold allocation. It's exactly the same concept here. It's just that where instead of needing an ERP, a warehouse management solution or something like that, you need a node 40 or so, and combined with a soft ledger. And so Ben, I'll let you kind of speak to that. So
sure. No, yeah, it's a great comparison. Is if your business is moving a lot of physical inventory, selling it, distributing it, whatever, then the companies we talk to like that have it's mission critical. Their ERP is everyone knows that's a decision made right from the top. It's not something that's kicked down to the controller. It's everyone cares about the ERP, and it's because if you lose $100,000 worth of merchandise, that's gone, and you lost that, and that's the lifeblood of your business. And so there are some interesting parallels between digital assets and inventory, and that this is really critical to nail this. If you want to engage with these with digital assets, especially if even if it's just spot trading, that you need a system that's going to track that. If you want to go a step further, then you definitely need a system that's going to if you're validating or staking or then you really need a system that tracks this deliberately so you can know how you're doing in your business. The accounting becomes much more intertwined with your operations than some other businesses like SaaS, for instance. It's obviously it's important, but it's not like the lifeblood of our organization that we have our accounting completely automated.
I think there's kind of two pieces of getting the work done. It's obviously the systems, but it also the professionals who are actually running it, the accountants, the CFOs. We've got 150 people at Propeller serving 360 clients. In my practice, we've got 60 crypto and blockchain related clients. I do not have anyone on my team who doesn't either work on crypto exclusively or primarily. And I think you need to have the mindset of thinking about digital assets. And you can't be thinking about, inventory for a dog food company I worked on this morning, and now let me switch it on and start thinking about a L2 business. The systems are very specific, and I think just the thought process, and I think it extends also when you're dealing with this stuff, you really need folks that are doing this or almost exclusively this, and whether that's tax, legal, but again, I think people who have run down the rabbit hole are obsessive about it, as you can see this panel is. But it's really hard to, I think, have someone doing this work who's not really understanding it and doing it almost, this is all they do.
And perfect. Yes.
Talk about this for a long time, but I think a lot of people have questions. So
Yes,
if you guys are
absolutely.
ready, let's talk. Let's see what those are.
Sam, you said the magic word legal, so I had to stand up. I want to circle back to the 1098 DA issue, and there is one other problem with this Treasury reg that concerns me that isn't really talked about broadly. I was on a short list of people who testified telephonically during the Treasury public hearing about this, and I expressed concern that the KYC, know your customer, requirements of this thing to these qualifying broker dealers is very troubling, because the amount of DeFi transactions that are happening on things like Uniswap, Pump.Fund could loosely be considered a broker dealer. The consumer is having to now trust their tax ID number, date of birth, name to all of these digital asset providers in order to comply with this. So it's not just the cost basis concern with the 1098 DA that troubles me, but it's also the fact that people are going to have to release all this very sensitive data. Now, there's a definite distinction between Coinbase and other lower tier broker dealers. And I think this creates a real data privacy issue. And I have to believe that the blockchain can solve that too. And I think collectively, Treasury needs to be aware of that there has to be some kind of an alternative way of verifying identification. And I would love to get your thoughts on that, because it's something that's bothered me since this thing came out.
I can go to that. Yeah. So that's a great point, and unfortunately, I don't have a great answer. There's nothing we can do about it that we can change, but perhaps I can make you feel a little bit better. So the most exchanges that are on operation, they have invested a lot of time and effort improving their security and their KYC. So I would not be hesitant to provide any of that information for any centralized exchange. Now, anything that is in DeFi, like MetaMask, is not going to give you a 1099 DA. They have no idea who you really are. Okay, so that is pretty much up to you to figure it out. Okay, and that's another layer of complication that you're going to have to be dealing with. But the good news is that as long as you're organized, as long as you have your records, and as long as you have the paper trail, even though we're not using paper, then you should be good. And ultimately, the responsibility of your personal tax returns is on you, and making sure that you file properly. So if you're able to support the correct amounts, I mean, you should be in okay shape.
And one other issue, I think, is that any entity that qualifies as a broker is going to have to be issuing the 1099 DAs, which means also, and thank you, Rob, this is basically, if you're trading stocks and there is confidence that Schwab is going to get you your 1099, every other step along the way is kind of free and clear. Now, and hopefully this is going to get worked out, every piece of that transaction is going to be responsible for 1099 DA. And I think, as you mentioned, the definition of a broker is broad, and any MetaMask, if there's some swaps going on, I think a lot of that stuff has to get figured out. Yeah. So it's wait and see. And if I had a solution to the identity problem, I'd be building it right now. But
I got one. I'm open to talk.
Great. Stephen Smith, Celestial Mining Management. we're Bitcoin based, so we're Bitcoin miners, and we're looking at our income and revenue in Bitcoin terms. And my question to you, the panel, is do you see any of your clients looking to judge their business or operations or returns on a Bitcoin basis as well as a dollar basis?
We see, I mean, US GAAP means you have to be reporting in US dollar equivalents. But, you know, when we've done work with leading L2s, not Bitcoin, but, you know, you want to see essentially the crypto P&L, and you want to see it at the token level, and you want to be tracking, you know, token, you know, we have a P&L going down to kind of a modified balance sheet at the token level. For a management tool, absolutely. You know, obviously, you know, GAAP is the language of business and the government and everything else. So you have to have that. I think the more you can double click and understand, you know, your token flows. And another piece of this too that is really important is, you know, you might be getting $10 million a month in revenue, whatever your business may be, and it's coming in digital assets. But, you know, as noted, that's not cash. You can't pay taxes with Bitcoin yet. And so making sure that you're clear on, you know, what your actual cash flows are, as well as your token flows, is very much a part of our monthly reporting at Propeller.
Yeah. Hi, Sean Ryan, Note 40. First a comment, then a question. You had mentioned about Subledger systems being, you know, out to many decimal places. I just wanted to give an example where important with Solana, the Solana validators vote, and they vote hundreds of thousands of times per day, and the cost of each one of those votes is like hundredths of a penny. So if you're valuing that, you know, in a traditional ledger system, it's zero. But because it's hundreds of thousands of votes per day, over the course of an entire year, you're talking, you know, upwards of $40,000 worth of value. So there's plenty of examples where you really got to bring those decimal places out. There's a lot of value there. Totally unrelated to what I just said, I'm curious about these 1099 DAs. We all kind of know, at least in this room, and plenty of people who are watching on stream, that they're going to be wrong. Is there a history of other 1099s that are also just always wrong? And how do you advise clients to deal with this problem that's coming? And what do you think the fallout's going to be about that?
So, you want to go?
Get a good tax accountant.
I mean, hope for the best. Listen, all you can do, that's a variable that you have no control whatsoever. But there is a variable that you have control over, and it's making sure that your internal accounting is spot on. And in the case the IRS decides to audit you, you're able to provide records. That's it, man. I cannot. I wish I could.
Thank you all for such an amazing panel. I'm with Gary. I didn't expect it to be so dynamic here.
Why
and
not?
I feel like this could go on.
We're accountants.
But I guess so. We'll
have
follow
fun.
up on the
That's our brand.
patio. Thank you all very much. That was great.
Thank you.
Wait, hello, good morning. Wait, hold on. Everybody's jumping up. Okay, so this is a tough crowd. Everybody got so excited about accounting that now you're gonna rush up. Yeah, look at that energy in here. I've never seen this before. Okay, I feel suddenly, yeah, I am an accountant and it's never been this exciting before, so that's great. You're gonna
Fireside now.
Yes. Okay, so it is with great pleasure Wow, this is a really tough. This is a rambunctious group today. All right. So I can see that we have people excited to be outside. You can hear from outside, right? You can? Okay. Peter, I'm specifically asking if you can hear this outside. Thank you. Okay. All right. So it is a privilege to introduce many of you. Well, she was just your Q&A person. So, but also a collaborator and co-partner in this event this week. So, and have now known for several years. So Sparrow Mahoney, and I'm going to not do justice to the amazing things you're about to share, but involved in so many areas across entrepreneurship, successful exits, mega entrepreneur force, as you're going to see. I had the pleasure of meeting her now a few years ago at a mutual family office event. And now she's doing some incredible things that actually are getting a lot of national attention and global attention. So Sparrow, thank you very much for being with us.
Thank you, Jen. So yeah, I'm Sparrow Mahoney, the founder and managing partner of Stacks Capital. Stacks Capital has now launched Stacks Energy because we are, like everybody, we're building the plane while we fly. So I have a background in, as Jen mentioned, in building companies and exiting. I'm sort of industry agnostic. I love putting puzzles together and opportunistically looking for lanes.
Hey guys, let's be quiet and give Sparrow some attention, okay? Thank you.
Thank you, Gary. So originally, when I was going to be a part of this event, I wanted to keep very, very quiet about what we're working on. To me, it's a highly confidential project. And then our president decided he would talk about it. So I said to Jen, I guess the secret's out. So I want to talk to you a little bit about the energy side of the business, because everything that we're doing, whether it's building, mining Bitcoin, or mining Bitcoin as we like to call it, or doing all the validation on chain, everything that we're doing requires extraordinary compute capacity. And a lot of family offices are exposed to land, and a lot of that land has accessibility to energy. And a lot of people that I'm talking to are going, what do I do with my property? Should I be building AI data centers? Should I be working on shards? Or should I be Bitcoin mining? And so I have a strong opinion about it, but it's up to you. I just wanted to talk a little bit about what I'm seeing in the energy landscape. So, yeah, this is our president. On January 20th, he announced an Alaska-specific initiative, which is, by the way, my home state. I live in the Bay Area now, but I'm born and raised in Alaska. So he announced that Alaska is where Bitcoin mining and data centers are going to be located in the US. This is where it's going to grow up. And it's because Alaska has more land and energy than the rest of the US combined, and certainly than a lot of other countries have. So this is just a couple of excerpts from an executive order specifically addressing how he's going to develop Alaska. So as a lifelong Alaskan, I realize if we've got all this energy in Alaska, why the heck aren't we seeing the massive builds that we're seeing in Texas, Louisiana, where Gary's from, and other people? And the answer is that Alaska's complex. Most of our land and energy is owned in a combined tier structure between native corporations, tribal entities, as well as state and other owners. So building in Alaska is not easy. Not only is it all the way up there, right? But it's also a very complex legal and cultural landscape. So to build in Alaska, you need to speak Alaskan fluently. We're a very funny little tribe. So we do. And so what we started working on quietly was on the north slope of Alaska. Many of you may have heard of the Alaska Pipeline, or maybe you've seen ice road truckers, and you know that we've got one road to get to the north of Alaska. One road, private road, by the way. So building up there isn't easy. So we realized that anything that we were going to do in Alaska, we needed to approach with a mindset of building within these cultural frameworks so that we could build projects that will last. Big CapEx requirements, so you really need to make it fit. So part of our team, we have Senator Murkowski's brother, who's been a lifelong energy guy, works for me, a couple of other people like that really helped me get up to speed on how to do business in Alaska. So what are we doing up there? So we have on the north slope of Alaska, we have over 50 trillion cubic feet of stranded natural gas that is generator ready. Now, what does that mean? It's more than the whole Gulf of Mexico, just to give you an example. But you don't have a single large data center there, and you have tiny Bitcoin mines. As a matter of fact, Exxon and Hillcorp and some other big producers just recently in the last 3 months announced pilot projects, 1 to 3 megawatt stuff. They're putting their toe in the water. But they're not there at scale yet. And why? Because it's stranded. It's sitting out there and they don't know what to do with it. We have a pipeline, but that's for oil. There's no infrastructure to monetize or electrify the natural gas in Alaska. Huge opportunity. But apart from that, what else are we doing? For those of us who are trying to make the environment a little greener, what are we working on there? Alaska has the second highest tides in the world. There's a body of water called Cook Inlet. We're doing a study right now in Alaska with a company called ORPC, which is the second largest tidal and riverian energy company in the world. There's 18.5 gigawatts of stranded energy in one location at Cook Inlet. And it happens every single day, predictably, reliably. All we need to figure out is, does the silt content work with their units? So we are unstranding rivers, tidal energy. We have volcanoes that consistently go off. We have earthquakes every single day. Alaska is an energy mecca. And a lot of it, like right now, there's one project in Alaska, which will be the very first US clean coal project built from the ground up, meaning that it's not a remediation project at all. It's a brand new facility. DOE is backing it. So it's already been identified as having 50 gigawatts of power on that one coal vein. So Alaska, I believe, is where energy is going to grow up in this increasingly hungry marketplace, whether it's Bitcoin mining, data centers, shards, or any of the other optionality there. So I think Alaska is great. I had to throw this in yesterday that we saw some We Love Math, so I had to do a wink there. Man, I'm Alaskan. I love energy, and energy is power. And never forget it. I heard it from that guy in Nashville. I said, Gary, how should I approach this? He said, get your energy. That's what I'm doing. All right, so what do we do? Timing is everything, and especially when, so we have, that's metaphorical, but it's also literal. In Alaska, there are only 2 seasons you can move anything up to the North Slope. That ice road, it's unusable when it's spring or fall. So you can go up in the dead of winter, or you can go up after it dries up, but it is absolutely impassable for much of the year. Same goes with barging. So you really have to think about these projects. It sounds really great to say we have all this energy, but actually getting stuff done is complicated. So if you start looking at projects, or if you're working with people looking at projects in Alaska, be aware of the complexity. And you know what? Be supportive. Things happen when you're up in the northernmost part of the world, certainly the northernmost part of Alaska. So what we like to do is we like to start with our toe in the water, get up there, get our team on the ground, and start measuring data. While we do that, we're actually doing a couple of other really important things. We're working with DNR to get our own permits. We're working with the state to become licensed as an independent power producer. So we have none of the constrictions of being a utility, even though what we're really doing is producing electricity. So doing everything in parallel, thoughtfully, cautiously. The other thing is, if I'm a family office or an investor, I'm looking at this and going, wait a minute, you'll all do a sample project that we're working on right now, but Alaska, it's got to be expensive, right, to get stuff all the way up there, and labor might be more expensive. So the question becomes, are these deals feasible? How do they work? And the answer is they work for 2 reasons. One, energy cost is a huge input on all of the modeling that you should be looking at if your family office is evaluating data centers or Bitcoin mining or anything else. So energy costs are low. But the other part of it is, guess what Alaska loves? Alaska loves energy debt and energy equity. So of the top 13 largest corporations in Alaska, 12 of those are tribal corporations, multi-billion-dollar entities whose average LP allocation can be up to $500 million. Over and over again. These are institutions that have been getting oil revenues for a long time. They do 8A construction. They do lots of other businesses. But you know what? They're also very focused on energy. So a lot of dry powder sitting in Alaska. Alaska also has 2 lending authorities specifically to support energy projects. So you can get debt on energy projects, even in the early stages, at as low as 3% today. So if you have a qualifying project, you can go start stacking your capital design as strategically as you stack everything else. So that's part of how we approach Alaska. And they love it, because what they really need is they need us to unstrand these resources so that everybody in that state and our country can start accessing these massive stranded reserves. So this is just a highlight project to tell you all about, go big or go home, right? I'm from a state that likes to call Texas the little state. So I started working on this project actually with a NASDAQ listed Bitcoin miner. The funny part is I'm working on Bitcoin mines. I don't know the first thing about how to run these things. I'll just tell you truthfully, I really don't. I speak Alaska fluently, but I really don't know how those little things plug together. So I was working with a NASDAQ company, and what they wanted to come to the North Slope. And they said, let's form a JV. Let's create a new company together. You guys do this part of it. We'll do the other part. Fan-frickin-tastic. And then we got up there and they said, we were going to do a gigawatt of power because we've got more than one. And so we get up there and they said, wait a minute, what do you mean it's not already electrified? I'm like, you thought there was like gigawatts of power for a place that has a total population on the North Slope of about 2,000 people? So you thought we were just hanging on to gigawatts of power and running that? What do you mean you didn't know it was not electrified? And they started going, well, all right, that's fine. We still want to do the project. You just have to electrify it for us. Oh, I just have to electrify it. So a Sparrow has to figure out how to electrify and fund and design and manage. And I started going, why am I in a JV? I think I'll just get it done. So that's what we're doing. So we're now working on our electrification designs because we think hyper arrays of modular electrification are the future. Get behind the meter. If you're investing in projects in front of the meter, guess what? You have a variable interest rate loan. So get behind the meter. Own the energy. Go work with the producers directly. Talk to them about some profit sharing. Put some bit on the balance for them. Let them get excited and lift up with you. Design your partnerships with that in mind. Bring people in. Don't keep them out. All right. So one of the biggest questions I always get, you've got access to all this power. Why are you doing Bitcoin mines instead of AI data centers? And the answer is, it just fits our particular circumstances better than others, but also personally, I guess it's my company, so I get to make the decisions. But the reality is, I think it's a better investment. AI data centers, they'll pay you a lot upfront for your power. They really will. But they are land intensive. AI data centers need about 10x the land that Bitcoin miners do. They also need a lot more connectivity than Bitcoin mines do. So you start getting into these very narrow parameters of what you can do with data centers compared to what you can do with Bit. And especially if you have some really good financial people helping you out, you can start making hash rate and having a lot of fun. So AI data centers are an incredible investment right now. We can in Alaska, we can build AI data centers for about 3 million a megawatt. We have buyers at 25 million a megawatt right now. Right now, the market is hungry for energy, so we can do that. But I, along with other people who are really long Bitcoin, think, why in the world would I take that bet when I think that Bitcoin is going to 100x or more? I just don't understand it. I don't understand taking it all up front and giving away that upside. So for me, I want to build Bit because I really think that that's where the play is. But you can do both. It depends on your project. I met with a gentleman who unfortunately had to leave last night, but he was here last night. He has this beautiful project where he's got a 1.2 gigawatts of power that's coming online on his project. He's like, should I be building Bitcoin mines or data centers, and should I be leasing it, or should I own and operate? And these are all incredible questions that really depend on your circumstances. What are your resources? Do you have access to the capital to own and operate it? Have you figured that? Have you cracked that nut? Do you need an anchor tenant to bring you the first build, to get your first power station built? How are you electrifying your site? If you're letting the utilities come in and build power plants, guess what? Your property, but you're in front of the meter. They are the ones who determine what your baseline cost is. So I think people need to look at their land, figure out how much you have, what you can do with it, but run real numbers and then make informed decisions. And think about it like any portfolio. If you have an energy and land asset, make a balanced portfolio. Just go 86% Bitcoin. You can do 14% data center if you need to. But that's it. So we're building in Alaska. We think we're all in Alaska. We started in the Midwest on a number of projects there, which are very exciting. But you know what? Compared to what we can do in the last frontier, we think it's absolutely nothing. So we're all in. We're going to build up there and turn Alaska on for all of us so we can start validating, building, mining, and supporting. Thank you.
That is awesome. I wish we would have done I wish I would have done the fireside chat with you, because I know a lot about this particular space. I spent 25 years in energy And when I first came to the big world, I'm like, you guys aren't going to make any money mining Bitcoin when you're in Texas. And please don't tell me that you're going to be a power arbitrager when I don't know one person in 25 years that traded energy that didn't lose $150 million. And I'm one of them. 1 year smack, gets slapped down like a little girl. Now we have a guy that's, hey, I'm an engineer, I'm doing mining, and I'm going to arbitrage electricity against Duke and Williams Energy. Like, you're going to have a colossal breakup. These companies will just lose $150 million in a month and be gone. What she is talking about of mining behind, in front of the meter, get off the grid. You have to be zero. Like, I love this project because it's trapped energy. Like I have ideas about how you can even price this stuff that's good for them and it's great for the mining. So I've heard these pitches for, you and I met a year ago. I didn't even know what you were doing, so I'm so glad you're here. I have heard this mining pitch about 400 times, hate every one of them, except this, because this is what Putin is going to do. Russia has so much trapped energy, it is staggering, okay, that we will never, ever run out of fossil fuel, ever. The question is, are you paying $70 for it, or are you paying $82? And we're never going to see $100 crude oil. We're not going to see $5 nat gas ever, maybe in Europe, and they will go broke. Europe is done. They're not going to mine anything. They have no resources. Like, for us to be very, very resource heavy, like, we should just collect every damn piece of energy, anything that we can do, and we win the game. Because if you look at I'm going to give you a chart on China power usage and America. It is staggering. So I really love this project. It makes a lot of sense. It makes sense for the royalty players too, which you kind of skirted onto, but we will most certainly move there because this energy, the net present value over 10 years is next to nothing. It's 25 cents. Okay, $3 nat gas today, delayed, getting paid $3 today, getting delayed for 10 years, dude, it's 30 cents. Like, so it's just sitting there eroding. The time is killing it. And that's the cool thing about Bitcoin. It can remove time, right? Thank you.
Oh, sorry. I was going to say, Node 40, if you're done with this guy, I'd love to get him on the team. Sorry, we'll have a pit fight.
Just a quick question. So this is a really, really exciting project. And so I'm, working and talking to a lot of family offices. I think this is so compelling. Is there an on-ramp for them with what you're doing, or how can they think about it, participating, if it's exciting but a little overwhelming to get started?
Thank you. That's a great question. Today, we're closing on our first 100 million for this project, doing it with a really interesting person who's long Bitcoin. I think I'm all about capital scaffolding. There is so much opportunity in Alaska from 5 or 10 megawatt projects all the way up to multi-gigawatt projects. I would love to talk to investors who want to jump in. It's like, I only want to work with investors, though, that understand that this is the last frontier. We are figuring it out. We have the best team in Alaska doing it, but it's not done yet. So a lot of questions, as long as we're transparent. I don't like being apologetic for things that are outside control. So it's like, I look for investors that are ready to build together, not looking for something that's set and packaged. I love builders. So if it's a capital source that wants to be a builder with me, man, I'll take all the help I can get. So thank you for that. Okay, thank you all so much.
Okay, well, thank you, everybody. We now have actually a short break, and we come back I'm going to say 10 minutes, because I know it's going to take 5 for me to ask you to all sit back down. So about a 10-minute break. Thank you.
Right, guys, we're gonna go chat with some people.
Because it really thins out, so you can really kind of enjoy everything, and you don't have to.
We talked to this guy yesterday, so
Yes.
we talked to Teresa. Let's see who we've not talked to yet. What's cracking, buddy? What's going on? Good to see you, man.
I think you know what you do. That I'm going to be. And even if you're the first one. Valuation based on development potential. They raise the capital and then they go fund projects. Okay, perfect.
Hey guys, hi Rob, good to see you. We're live streaming,
I know.
so this is being
Are we having fun?
live recorded.
How many? people
Yesterday,
were watching?
yesterday, probably because of the announcement.
Yeah.
We went like over 10,000 people concurrent.
Did they have a good time? Did you like poll the audience? Did they
Well, you gotta ask them. But you're gonna be speaking now, right?
All of you out there, do you know what's coming next? We're talking taxation of crypto. How crazy is that? It's a real thing. Looking forward to it.
Awesome. Rob
Yeah.
Massey with Deloitte. How have you enjoyed Gary's house? This is your first time here?
First time at the house is fantastic. What an incredible host, right?
Because you go to a lot of events. So, what's your? what?
No, I love Gary's perspective. He goes to all these events. He's like, why would I do that? Let's just invite all the people he wants to hear from to his house and then facilitate the conversation. It's brilliant.
That's right. Awesome.
What a setting.
We're looking forward to your panel. It's coming up. So enjoy the rest of the event.
Thank you for having me. It's awesome.
Awesome. Yeah. Thanks for being here. Thanks, Rob. Appreciate you. Oh, someone asked you a question, Rob. Hey, Rob. Tax issues in the UK is an issue with crypto. Deloitte is pioneering crypto industry services quite well. How would you comment on that?
We obviously have coverage throughout the world of people in tax and accounting and broader regulatory matters in digital assets. We've been doing this a long time. And so we do have partners and larger teams based in the UK to help with those questions. So feel free to reach out and I can connect you with the right people. Different rules coming into play all the time. There's an evolution in the regulatory environment happening globally, and it does change quite frequently. So it's good to check in with the right people to say, what circumstances are you in? What are the rules today? We'll help you navigate.
Awesome. And then someone asked, how do companies in the UK reach out to Rob?
I'm pretty easy to find. I'm the only one in Deloitte with laser eyes on LinkedIn. So reach out. You can find me on LinkedIn or rmassey@deloitte.com. And I will redirect. I direct a lot of traffic for any crypto questions in the firm.
Yeah, Rob's awesome. He goes to all of the events. He's everywhere. He's ubiquitous.
I do work too. I don't just go to events. I am still an accountant. I'm a CPA.
That's right. I approve that because I saw you backstage taking a call.
Working in Gary's
That's right. That's right. Yeah.
Nice.
So he does work. He does work. He doesn't just go to conferences.
Step out the phone. That's good.
Thank you very much, Rob. I appreciate you. Enjoy the rest of the day.
Take care.
Take care. All right, guys, we're gonna move over to Gary for now.
This event's been so cool that people are like, hey, this one is all these family offices. Nobody's doing shit.
It's in and the ones that are in it, they're in it. You,
Is this the first year?
first time, look, I'm at this thing is going to become a deal. The first summer, digital summer, the conversations. I know everybody like conversations. I mean, outstanding.
Looks like you've got, I mean, incredible roster.
Yeah, yeah. And it's only going to once you get enough. Like I've done this now 4 times. Everything's getting better. And now with all the white people, you guys is like process stuff. And what I was trying to do with let's call get their lawyers and their accountants on. Y'all can believe it. You guys are dealing this. Nobody in this space here. In this local area, it's terrible. My kids go to school across. I'm not doing best school in the area, man. No block.
We're changing that though, Gary. Like the thing, I remember when I visited in October, I told you that thing I do on the side with the blockchain education stuff.
Yeah.
Having great conversations with legislators, school board members right now. And there's a new.
But it's the teachers and the admin.
Oh yeah, but
they don't want to.
No, they will once they realize, because there's actually new strands in the K through 12 computer science for blockchain digital assets in Florida standards this year. So it's coming. I know, it's not here yet, but it's on the way. And to your point, like, I'm telling you, it was really incredible yesterday that the slightly people that he was able to put together. It was just the range was awesome. So, all this stuff. So, and there's another.
It's really good to have you guys.
Yeah, thanks for inviting me.
Yeah, for sure. And then y'all are rolling a little bit, right? Am I doing you
11:30.
I'm your.
I think it's 11:30. Yeah, 11:40. You are the moderator.
What do you guys do? You got all the names correct down here?
Yeah, it's Chris and I. Chris and I.
Yeah. Okay. So
I came to support him.
like where
You can log the softball question.
I can talk a bit about the sort of products that we do, because we have a lot of things from spot to like very good stage with Chris and Cal, so we can stay kind of.
So maybe let's just talk to the audience. This is who you guys are. You're quantity, maybe a guy like me, whatever.
Yeah.
And then some of the maybe what you're doing, like high pressure situation. I've never seen it. I'm professional enough to do it. Whatever that is. All I would ask everybody to do is keep the nomenclature so that everyone can understand.
Yeah.
Like we start talking about, bots and
staking or whatever they got.
well, they just like, oh, staking, what is it? You use this term and like, what does that mean? Or the yield.
Stable coins are like
what's
yeah. If we can
just not dumbed down, but just fully it's clarity.
Yeah.
Crystal clarity on crypto.
Yeah.
Crystal clarity.
Yeah, we were just released like
the 2024 case.
So we just released 2025 like yesterday.
I think that's some great stuff. Like, there's some great work. So, how many people are here?
In the office? 20? Like 20 in the office, right? In the office. Yeah.
So not everybody moved over?
No, people that were in New York and either stayed there. Yeah. So there's about like half of the company that is still remote. And yeah, so they acquired like.
I'm
the German, so and I started in March last year, so I actually moved from Europe down here. So, so I was in Berlin, in Germany. Yeah. I mean, the weather here is just like just amazing. Like
it's stupid.
And now that like, when I went back for Christmas and holidays, it's like I want the San Pete weather. Like what's the
and you probably don't want to say 17 pounds and gotta go out for power. Germany's broke.
And 43% taxes, like income is like
equal play.
Yeah. I mean, I had to move there because like
one of the companies I work for. They're agency there, so I moved there.
Guys,
But I'm Italian actually, so it's obviously, I don't have any family in Germany. But yeah, those things are really big, just like taxes, the weather. Yes.
All right, look, introduce yourself to everybody. We'll have a good run. Chris is showing up.
Yeah, he's here.
Oh, awesome. I haven't seen him. Okay, cool, man. Thank you, guys. If y'all need anything, we got drinks, whatever you need.
that's how Gary networks here. Hey, Ben, we're live. Maybe we're gonna introduce Subledger. You guys,
So yeah, Subledger is a accounting software designed for companies outgrowing QuickBooks and Xero or other bookkeeping platforms. And they're outgrowing those because they have multiple business entities and need to consolidate easily within the system. We work with a lot of companies that have digital assets, so that's a big reason why we're here for that piece specifically, getting those digital asset transactions into your general ledger, into your financial reports is particularly difficult. So the authority helps to standardize that upstream, turn it into useful information that then you can feed into your into create journal entries and build your financial statements. Which
awesome. How did you enjoy the panel?
it was great. Yeah, I thought it was. I didn't realize we were at an hour already. We're almost at an hour once the questions started. So that's always good.
Yeah, and are you enjoying the weather here in Florida?
It is tough to not enjoy it. Yeah, the weather's been great. This location is awesome. Again, I think when I got on the panel, Sam said he's never been on a panel with a better view, and I think that's going to be true for some time because usually you're in like a conference center staring at like like temporary divider wall or something, and here you're looking at it. So what a way. Great house. So yeah, this has been awesome.
That's right. It's incredible. Indeed.
Yeah, it really is.
Awesome. So, what's the link for Subledger?
It's you can find more about us at softledger.com. On LinkedIn, Twitter, and social media platforms.
Awesome. Great job, Ben.
Yeah, reach out if you're interested. Do you think we can help?
Awesome. Thanks very much, Ben. Enjoy the rest of the conference.
Appreciate it. Yeah, I'm about to head to the airport.
Take care.
Yeah, great seeing you.
Safe travels.
Can you give us some comments? Yeah. That could have been a very informative.
Non-technical. You'd be surprised.
Interesting. I shouldn't make assumptions.
So right now, our problem to this point has been sourcing point, whereas we need like senior bank credit facilities to do this at scale. And until we have the election, like seniors trying to everything was. Right now, we got $150 million revenue pipeline of carriers who want to
Yeah. Take a kind of.
Okay, we're gonna move over to Abra now. Hey, Norm, what's up? Hey, buddy.
Yo, man.
Do you have a second? We're live streaming.
Yeah, absolutely.
Let's chat. How's your experience of this conference here? We're live streaming now to, we have over 2,000 people.
Amazing. It's been fantastic so far.
Yeah, maybe you can introduce yourself and then what company you're with and what brings you here.
Definitely. I'm Declan Wolf. I'm the director of sales at Abra. We are a digital asset wealth management company. We have 4 core products. It's our yield on Bitcoin, Ethereum, Solana. Our lending product on Bitcoin and Ether. Our trading product is essentially all digital assets, and then our custody product as well. We primarily serve high net worth individuals, family offices, and institutions. This conference here has been fantastic. We are in beautiful St. Petersburg. Not quite as sunny today as it has been, but it's all right. I have to fly back to New York, so this is way better.
When are you flying back?
Tomorrow morning.
Okay, awesome. So last day.
Yeah, last day, trying to soak it all in. I'm not as well dressed as Mike over there. He's got his swim trunks on. I'm very jealous. He's really something for it. It's fantastic. Yeah, I mean, he's been a great host of panelists, a lot of experts, some super deep dives into crypto, which has been fantastic. So this was the first year, correct?
That's correct. That's the first this kind of conference for family offices, and we're getting tremendous feedback.
They're great. So that's typically what we do at Abra is when we're doing conferences, we're looking for family office conferences. We do a lot of these, and it's been really high quality.
Awesome. Are you guys gonna come back to the next one?
I think we probably will. We'll see.
Awesome. Awesome. So what's the link to Abra? How do people find you guys?
Abra.com. You can, if you're an individual, you can fully set up your own account via the website. If you're an institution, there's an inquiry.
You're asking about x.com, Twitter. There's a comment. How can we reach out to Abra on Twitter?
That's a great question. I'm not on Twitter. Go to the website, abra.com. There's an inquiry form. Fill it out. I'll reach out to you. Give you all my contact info there. But you can also just reach me at declan.wolf@abra.com. But the website's the easiest way.
It was a great presentation here by Bill.
Bill's fantastic. Every time I hear him talk, it fires me up. I mean, he's obviously been in the industry through every cycle, been through a lot, and he's a great guy. And I think we've really built a truly user-friendly product.
Last man standing,
Yeah, exactly.
so to speak.
Last man standing. That's his nickname for sure.
Awesome, buddy. What was your, other than Bill's, what was your favorite panel talk so far?
I'm forgetting his name, but he was the I don't even know what to call him. The guy that has the company that plugs into all the security cameras. That part was scary, but
Okay.
the talk, mainly his point about the bandwidth power of countries and how low America and the UK specifically are in the ranking, and how countries that you wouldn't expect, like Uruguay, Chile, are very high in bandwidth. And as stuff gets more digitized, how important that's really going to be, and figuring out specifically as an American, very proud American, how we can pump up our bandwidth and remain competitive.
That's right. Awesome, buddy. Thank you very much. Enjoy the rest of the conference and safe flight.
Thank you very much. Have a good one, guys.
Take care. All right, let's move to the sofa. Let's go here. Hello, how are you? Hi, my name is Marcin. We are live streaming. We have over 2,000 people right now watching. So I wanted to ask you to introduce yourself and maybe talk to us a little bit more. What brings you here?
Yes, so my name is Zelda Marie Smith. I work for Celestial Mining Management. I'm the financial and accounting head. So we do Bitcoin mining.
Wow, exciting.
Yes, so we have locations in Alabama, in Texas, and in North Dakota. So we started small scale and then we're growing. We're trying to get investors to invest more on this. And then on top of that, my husband is a software developer who is the founder of this mining company. And then we have an accounting software that built into how to account Bitcoin into the ledger. And at the same time, convert the Bitcoin, BTC into the US dollar. And then we produce financial statements to our investors and pay them on how to pay their distribution every month. But now we're scaling it to quarterly because it's a lot of work. And yeah, that's it.
Awesome. And so what brought you here?
So brought you, we were contacted by the Node 40 if we want to be in this program. So my husband said, okay, we'll do the membership.
Awesome.
To learn more accounting for Bitcoin, especially for IRS regulations.
Absolutely.
File the 1099 DA because this is new.
Is your husband watching us right now live? What do you think?
Here.
He's here? Oh, I didn't even know that.
Yeah.
So awesome.
He's here. Yeah.
So you should definitely introduce me. You
Yes.
should talk to them.
Yes, he's talking to Sparrow right now.
Okay. So we're not gonna interrupt them.
Yes, I think he sits here next to me. So
Okay, awesome. If you see me with the camera, just let me know.
okay.
And yeah, and let's chat for sure.
Yes.
Thank you very much for being with us and being a member. I appreciate you.
Thank you.
Enjoy the rest of the conference. Take care.
Oh my God.
Almost had to sell them.
The famous Note 40 team hanging out.
This guy ever done live streaming? Hi to all the folks out there.
And our best CTO.
The only
This guy,
CTO.
the only CTO.
I'll pick.
Still the best.
He's the second best.
Second?
Because Bitcoin is first.
Bitcoin's always first, baby.
A selfie live stream, Marcel? A selfie live stream?
No,
Turn it around?
Oh, yeah.
I can't.
How do you like it?
but I can.
There he is.
You guys can live stream me.
Oh, there he is. The man behind the camera, right there. See?
Yeah, now finally, I'm on camera for the first time.
For the first time ever. I don't think that's the first time
since this
ever.
event. Like I've been, behind the camera. So
Yeah.
awesome. Thank you for recording me. I enjoyed this event so much. I don't get to watch all of the panels, but I'll get the recording, so I'll definitely check it out. It was awesome. And then, by the way, Sean, awesome presentation. I know you guys are speaking later, right?
We are speaking next, I believe.
Yeah. Thank you for representing Note 40,
Love it being
the
here.
highest standard.
The
Appreciate
highest.
it.
Agreed.
All right, we're gonna maybe move over here. Hello, sir. Hey, Rick.
Hey, how you doing?
I'm doing good. We are live streaming, sir. I see you are watching us on X. I don't know if you're watching the live stream or not.
Unfortunately, I'm not. No.
Okay, my name is Martin. Good to meet you, Rick.
Nice meeting you.
So we're live streaming. We have over 2,000 people, and I just go around the room and ask people, "Hey, what brings you here? Who are you? Who are you representing? What are you trying to achieve here?"
Got it. Yeah, so I'm Rick. I represent myself and my family. It's not quite a family office yet, but when we get to 200, it probably will. So, but
And where are you flying from?
from Nashville.
Oh my God, I love Nashville.
Yeah, so I'm just out. Been following Gary for about a year.
Where did you find him?
Randomly on Twitter.
Randomly on Twitter. Guys, check this out. Check out the power of the virtual connection.
Oh, absolutely. And I'm probably attend almost all of his spaces. Very informational. There is so much noise out there and so little signal. And I can probably count the guys on one or two hands that I'll sit and listen to a 4-hour space out on Twitter. And Gary's toward the top of that list. He is absolutely amazing. Taught me a ton in the last year. So I came here to support Gary, learn a lot more about the space, and that's it.
Any takeaways from the event so far?
A lot of great speakers. The networking has just been absolutely incredible. The connections and the network that Gary has. I always knew he had a very large network, but seeing it here in person is absolutely amazing.
It's just a fraction.
Yeah, and I'm sure there's thousands and thousands more that we don't see here, but yeah, really good.
Awesome.
Excellent 3 days. Looking
Awesome.
forward to the next one.
Awesome. Thank you very much.
You bet.
By the way, do you invest in digital assets on your own?
Yeah, I do. Yeah.
What's your favorite fig?
Bitcoin, and there's nothing else.
Amen.
Nothing
Awesome. Thank you very much, Rick.
You bet.
Appreciate you. Enjoy the rest of the conference.
Thank you.
Take care. I don't know if we lose signal, guys. Just let me know.
I'm gonna send it to me. I would love to see it. No. Can I show it to Megan?
Yeah. Technology has worked.
Okay, we're gonna be moving over slowly.
Yeah, so maybe make some time.
I can say too. Yeah, I get lost in technology. Say too.
Oh, I'm excited. That was a great presentation. In fact, there's only 15. I like the fact that you make experience too.
And that it's a challenging group here today. Okay, so thank you very, very much, everyone. Again, Jennifer Catrulia, it's been great to spend the last couple days with you, and it is absolutely a privilege to kick off this panel. I will tell you that similar to what you just experienced with the accounting crowd, you may not think that a tax panel would be a tough group, but I have my work cut out for me for the next little while. So I appreciate your excitement about it and your thank you. A lot of questions. So Rob was just asking, about the questions that we might ask up here, and don't hold anything back. They are ready, so they can take it. What I'd love to do is a quick round of intros, and you each have very diverse backgrounds in terms of what we have up here today. So a little bit about yourself, your practices, and then we'll kind of jump into some questions. So Rob, maybe we'll kick off with you.
Sure. Everybody, my name is Rob Massey. I'm a tax partner at Deloitte. And 13 years ago, I was the first person in the firm to start serving clients on digital assets. So pretty wild back in 2012. And a lot of us now serving in this space, spanning all the competencies. I specialize in tax. We also do accounting and audit work, risk and control frameworks, and serving every aspect of the ecosystem, which is super fun. Very engaged in the space, not only for crypto native clients, but also the traditional clients getting in, which is honestly why we're there. But love it. I don't touch fiat. I just do crypto. So there it is.
Lorenzo Batello, CPA, early adopting the crypto space, gotten early, grew my practice around crypto clients. I'd say more boots on the ground type of framework, worked with Node 40 for the last few years and just putting that software to work with the clients. And so I've had the experience of seeing the growth and, really proud of the guys for what they've done so far. And, fast forward to today, grow with the clients, solve a lot of complex problems, probably some of the same problems that you guys are having in the room today. And really at this point, we've come to almost like a fractionalized family office type of service where the clients come and they all have different needs. So we were just talking outside earlier. So it's not really like a captive type of opportunity. It's more, we put the pieces in place for our clients because everyone's diverse. We're more retail. We deal with the people, not so much like the big companies with for their accounting solutions.
And Norm.
Yeah, hi everyone. Norm Hanawa. I'm with the Node 40 team in charge of tax and accounting solutions. I've been in tax for about over 20 years. Spent around 10 years at another big four doing international tax planning.
Great. Well, so as we jump into this conversation, we've been talking a lot over the last few days, but also for months, about the finalized Treasury regulations. So as you see it, what are the most significant changes that asset investors that you're meeting with are asking you about? Where's the confusion and how are you setting things straight with everyone? And so I guess without being too creative, we'll get more about this as we go, but Rob, we'll kick off with you.
For sure. When you think about the regs that just happened, think about them in two buckets, right? Because the reg packages were vast. They talked about the broker reporting, which we talked about the 1099 DA in the last session, but there's also a lot around basis tracking and how to report basis. And we've been having this really interesting question for now, some of you in the room, probably 15 years. What do I do? And you referenced yesterday my super low basis Bitcoin, my high basis Bitcoin. There have been a lot of theories using legacy tax principles on how to deal with this. We now have rules. And so a lot of focus on, and there was a safe harbor election you could engage with to say, here's what I did in the past. As of Jan 1, you can reallocate your basis one time. This is what the safe harbor allowed, to take all the stuff you did in the past, prove out your units, your basis, and let's have a clean start, Jan 1, right? Earlier last month. So think about basis tracking, but then also the broker reporting rules. And while they are vast, and there was some new rules that dropped in December about how to deal with some of the unhosted wallets and DeFi protocols, not all of it is going to land on a 1099 DA. And so there's a lot of transactions. In fact, probably the most of them won't land on a 1099 DA. And then I think to Sean's question earlier, what do you do with that? And that comes all the way back to your books and records. The taxpayer controls. You are the one. So make sure that you're buttoned up with your Subledger solutions, Node 40 being a great place to go to make sure that you can reconcile everything back.
Yeah, it's a really good point. I think on the 1099, I kind of use the term like accounting Sudoku. A lot of times people have, I mean, it is like we were just talking about it, like people with Mexi, and they have all these different exchanges that are on, and it's difficult to extract that data. And, so you always have like this missing loophole, like this X that you have to solve for. And what's going to end up happening, I mean, you could foresee it, is you're going to get a 1099, it's going to show a number. The IRS is going to say, you have this number, prove me wrong. And it's going to be difficult to find that. So it goes back to the data. The data drives decisions. And if you can connect all your wallets into the platform, you're going to have support, and you make an issue and an opinion on how you've reported all your data. And it's going to be like the end all be all. That's the truth. So, one of the big problems that we've had is, again, the missing data. Because if you don't have all that, it's incorrect. For the basis, again, it goes back to the data again. That's why it's so important of what you guys are doing, because it's like the Bible, right? You got to go, you base it off of that. So that's really what I foresee on this 1099 issue, is you're going to have to defend this and be ready for it. That's, I think the time of crypto where you can kind of hide things and such is sort of over.
Yeah, I think that's a real good point going. So I focused, obviously, being a Node 40 on the basis rules, and I use the word Wild West a little bit. Before these rules came out, I think a lot of people could really do what they wanted to do. I mean, a quick example is you could own an asset on Kraken and sell it on Kraken. You own the same asset on Coinbase. You can say, well, I'm going to treat it as being sold off Coinbase, even though I sold it off Kraken. A lot of these rules are being restricted. There may be some of that being allowed, but they have now provided a framework for how you track your basis on your various digital assets. Some of the Wild West is maybe ending. They're getting it a little bit closer to more standard procedures for how you do this. And that to me is really interesting going forward.
To come back to what Lorenzo said, and when we talk about data, let's talk about how that translates to tax returns, because you think reconciling everything is critical. So you now have your data, and the IRS has full visibility. That they don't have to ask you for your book of records. They have your addresses. Once you provide those, they can query the blockchain themselves. Here's all your input and output transactions. Reconcile that back to your trial balance, and now reconcile that to your tax return. That's normal course. That's a little different than the history vault most of us have grown up with, right? Asking for your bank records so you can see all of everything in out of bank accounts. Now it's taking that other third rail. Now we're talking about what is on-chain data, most of which is public information if you have the right addresses. That reconciliation back to the data is key. So to the extent that you have that all buttoned up on a contemporaneous basis, you've got it reconciled. You have the narrative controlled. Here's my transactions. Here's what they represent. Here's how it was reported. The anxiety level just went way down. So you're ready to go. A lot of work on the front end, but that's the right approach.
Yeah, I mean, I don't know if there's any other questions or we want to keep.
Oh, I got plenty. So, but I didn't want to interrupt the flow here. So, with all the changes and just the general confusion, people are throwing everything at the wall. And so there are questions too about particular entity structures, whether it's trusts, LLCs, partnerships that work best for optimizing tax efficiency when holding digital assets. So everybody's kind of looking at how this change the field for them. What should people do to optimize their position and really take best advantage of the opportunities?
Yeah, I mean, we do a ton of planning work. I think if you have capital gains or you have ordinary income, obviously you have different types of income. And in terms of structuring, I always found that partnerships obviously are the most unique, the most, when you say complex, there's a lot of just variations that you could play on partnerships and such. So you can get creative in terms of deferrals and such. With trust, obviously you have that asset protection, which is a different component. You can get it out of your estate. So I don't know how, depending on the size, obviously it's a family office event. So you deal with larger numbers, you all probably have estate tax issues. Then, obviously there's the charitable component. If people are charitable, it's definitely an avenue to look into. So when you're talking about planning and structuring, it's not so much as a one size best fits all. It's really, what are the priorities? Like if someone wants to keep more cash in pocket, they want to be, that's their priority, then obviously locking it up in a charitable structure probably isn't the best option. But Gary made all this money and he wants to give back to the world, and maybe that's something for him to do and to optimize. You can, and some of the charitable rules actually I really like because they're very clean cut and dry. They're very defensible, like NIMCRUTs and such. Like every big law firm you could talk to probably has an ability or an opinion that they can issue on some sort of a charitable structure. So I like those, but again, it's not the best option if someone wants to keep the most cash. Like obviously deferral strategies and such are the best in those moments. So it really is a question of like, what does the client want to do and what's their priority? And then we work backwards.
Yeah, we find it's a lot of the same drivers to your point, that which would motivate you to use a trust structure or deferral or giving, those same motivators coming into digital assets now, if that's your asset class, or those are all relevant. And there are some subtle differences, right? Most of the vehicles we've grown up with, be they, partnerships or trusts, other offshore vehicles, there are specific rules and you have to say, well, what kind of a digital asset is it? Does it fit into the definition of security for that particular vehicle, if there's a relevant rule there? And then how do you navigate it? So there are some differences there. We do see a lot of planning in this category. Sometimes there's more planning you can do because it's property of some kind. So it's always good to start with the motivation for the transaction and say, what kind of property do I have? What are the nuances? What we see is a lot of operational complexities. So when I say that, transferring something to a trust, like digital assets, what does that mean? Do you set up a separate account? Do you put it on a hardware device and put a safety deposit box? There's who has access to the safety deposit box? Really interesting questions around custody and when is an effective transfer. Sure. So there's some things to think through all the way down the path beyond the legal docs.
Sure.
So this is one of those times where you need to get counsel, the technologists, the business people, and how are you safekeeping your digital assets in the first place to make sure you got it right.
And sometimes it's so simple. It's like just start a new wallet and call it the trust wallet. Like it's like you don't need to spend all this money and time and effort. Like sometimes it's so simple. It's common sense. Like even the wallet-based cost tracking. We started doing that actually like last year before any of these regulations happened because I'm like, it just makes more sense. Like they offered it in a lot of the softwares to switch on wallet-based cost tracking. I'm like, it just is more accurate. Like if I'm going to sell in one wallet.
We did that because if you think about wallet or digital asset address-based cost tracking allows you to have an audit trail, allows you to show where something came from, right? I mean, even the example I gave earlier where you bought something on Kraken, you own the same asset on Coinbase, you sold it on Coinbase, but you're going to say you sold it on Kraken. Well, you got to think about the time now, the effort you have to take to prove that out if you get audited. Okay, well, where did that come from? You sold it on Kraken. Well, I treat it as selling my asset on Coinbase. Same thing with wallets, right? Yeah. If you can point to the address where that asset came from, it definitely makes it a lot easier to track and show exactly what occurred on chain rather than saying, hey, I'm going to treat it as being sold from somewhere else. Not to say you can't do that, but you just have to think about if I'm going to take a much more aggressive position that requires a lot more complication, what is that going to mean for me on the back end where I have to prove this out if I'm audited, which, in the crypto space, there could be a good amount of audits if you've got, high net worth and you've got a lot of complexity.
We've been through a handful.
Yeah, been through a
Been through
handful.
a handful. Like it's honestly, they weren't as bad as I thought. But one in particular I found was the most like the most back and forth was, again, the missing data. Because when there's missing data, they subpoena all the US based exchanges. So they get all that data, right? So they have that, they know all that. All the offshore stuff is difficult to get to. They can't subpoena anyone. It's a question mark. So it's, where did it go? And I'd encourage everyone here, if you really want to know this, like Chain Analysis is another software that goes and reads on-chain data. You know, when someone died, we had a client that died, we use this to track where everything went. And it doesn't show capital gains, so it's much different than, you know, what Node 40 does. So, but you can see where money goes. And that was what we used to say, hey, like, this didn't go anywhere else. Like, whatever the number was went out to this exchange. We can't, you know, rely on this data, but this is what we know went out, and we know nothing came back in, or this is what we know came back in. And again, that goes back to the accounting Sudoku. It's like, that's the best that you could do sometimes. And unfortunately, the IRS wants definitive terms, and they want to bang this guy over the head. And I'm just going to fight it, because I know how much money he has, and what they're asking for is ridiculous. But that's the only one I've had an issue with. Other than that, it's been pretty reasonable. I don't know. Have you dealt with the audits?
Yeah, the exam activity is real. And we find there's sort of a fork in the road from that first meeting that says where you get the opportunity to set the narrative.
Sure.
How buttoned up is your books and records?
Yeah.
And if in that opening conference, you can say, okay, here's the overview of our client. This is the types of activities they have. Here's the contemporaneous documentation, reconciliations of data, memos, whatever it is, positions, and give them the narrative. You get the chance to set tone. If you come in and you just say, hey, give me your questions, I'll answer them, you're going to go down a very different path. And while you may feel confident that you've actually done the right thing, how much effort do you want to spend to get there is really the question, because this is hard. No matter how you slice it, this is hard. So to save yourself time and energy, audits are hard. They're very burdensome. They're also expensive to hire people like us to help. And so to the extent that you can spend a little bit of that energy contemporaneously at the time of your filing your tax returns or building your financial statements, that's going to go a long way. We always say, let's file this return assuming it's going to come under exam.
Yeah.
Like, how much effort do you want to spend?
And Rob, you were talking, I thought you had an interesting point the other day. I mean, if let's say IRS audit, where could it go? I mean, I used to work at the tax court back in the day, where it could go to court, right? And so we were talking about this the other day. Okay, let's say you present the numbers, right? The judge would say, okay, well, where'd you get those numbers from? How do I know that system actually is correct? You've got the blockchain on top of it. Now you have to show the blockchain.
Yeah.
You have to show, I mean, all the different layers to prove out exactly where you came up with your gains, losses, income, et cetera.
Yeah.
Especially for a new industry like this, fairly new. It's not as simple as just saying, here are my numbers on my report.
Yeah.
Okay, how do I know those are correct? By the way, the IRS says, hey, there's a blockchain that shows that. Are they showing the numbers that actually are proven out on the blockchain? And then what about the blockchain data? Is that correct?
Yeah. And what we're talking about is beyond the data, there's the positions, because we don't have a lot of rules.
Yeah.
We have very few rules, given the very sophisticated transaction types we're talking about here. There's not a lot of authoritative guidance on how to treat those transactions. Sure. And so now we're dealing with tax principles or analogies, very few of which are perfect. And so then take the data and then also contemporaneously say, look, there wasn't a lot of guidance out there, but here we are, taxpayer. We looked at the options available to us. We studied the cases. We thought this was the right answer because, and this is what we did on the return. Under exam, drop that on the table, right? It's a pretty good anchor to drop on the table and said, look, we did our best. We were very thoughtful. We're a responsible taxpayer to try and make the best decision we could, and then let them respond.
Right. I had a really good experience when we first met with them. We did something called a wallet workflow. So we made a diagram, made it visual, made it easy. Pictures, yeah. Like, okay, you got you're onboarding into Coinbase, or you onboard also into Kraken. So first layer, how do you onboard, right? Then you go into all like the really complicated stuff that you do, like the DeFi protocols. Maybe you had like a Celsius bankruptcy. Maybe you did something. So I like almost like make a section of like the X factors or the stuff that maybe is not perfect. And I put little descriptions why. So that visual diagram, I think, is super helpful of making it simple and setting the stage, right? Setting the tone. Hey, we came prepared. We know where our holes are. We know it's 100%. And like, okay, where do you want to go from here?
Yep. Pictures are huge. Yeah,
It's so
the
simple.
opening conference is money. It's
Sure.
big deal.
So when we think about, oh, and I'm going to pause for this room and for the streaming group, just to say, again, reminder, informational purposes only. Please see your own professional. Your legal department's going to be very happy.
Very
Everybody
fact
else is going to
specific.
be very
All
happy.
of it's very
Yeah.
fact specific.
Need to be sure that I put that out there before we go into, because when we talk about what you see maybe coming down the pike in the next 12, 24 months, what do you see that people should be aware of and be kind of factoring into their planning so that they're not surprised and really are in the best position to both optimize and to mitigate against risk?
Go ahead.
I would say look at the authoritative guidance that has come out and make sure that you've incorporated that into your hygiene. So basis tracking is really important. Even if you didn't reallocate your basis on your digital asset tranches as of year end, did you do something that references the safe harbor and references your inventory as of year end? That's a great thing to do, right? Because like you're acknowledging this happened, you're applying it to yourself. Here's my facts, here's the books and records, here's how I fit into the safe harbor, here's my methods, and you're off to the races. So just keep in mind, as we have new rules that come in play, absorb them, think about yourself, write it down, and that way you're keeping yourself honest.
Yeah, that's a great point. I'd say like putting it in some, so with some examples, the regs that came out indicated to exchanges, as an example, Coinbase, right? Exactly what type of data they can get from taxpayers to put onto the 1099. And those companies like Coinbase are building all that out, right? This is not instantaneous. And so there may be positions, but based off of data that they haven't built out yet. So you may say, hey, I want to use a certain type of specific ID to say I sold this asset on Coinbase, even though the default may be FIFO. Coinbase may be able to support some of that, but not all of it in the next year. So keeping track of the data, because to support your own positions is going to be key in the next 12 to 24 months, in my opinion. It may be different 48 months from now, et cetera, as more of these systems are built out, but in the next 2 years at least, I think you're going to have to have really strong data support, especially if you're taking positions outside of the ordinary.
And to not make it so heavy, technology is your friend. The tech is your friend. It make your life easier. I do not touch a job that's manual. I will not. I won't even sign up for it. Like if someone wants to try to get off of my process because it's too much work. I don't blame anyone for feeling overwhelmed over it. So just put everything into the software, be complete, and then you're going to grow and adapt as these rules change. I think for personal people, the rules are pretty clear. I think for businesses, it's going to get a little bit more complicated. Like all this money transmitter licenses and like how to report it on the balance sheet, marking it up, marking it down. Like there's good, you're doing it for a publicly traded company. Obviously, that's its own set of rules. But for people, I think doing the data is the hard part, but the rules are pretty simple. I think and what to expect. I mean, you introduced me to Roger. He's working with the IRS and stuff. He's training 1,500 auditors on how to audit the stuff. So I would assume more audits are going to come if 1,500 people are being trained up how to use softwares to, and using chain analysis, which is like an on-chain data tracking. I'm going to assume that more audits are coming. So to get ready, just the tech is your friend. Just put everything, be complete, and the rules and how to use the tech, whether it's basis tracking and whatnot, it's going to make it easier for you to do all this stuff, to put it simple.
I love the tech. The data is your friend for sure. Yeah. And then making sure that you document your intentions. Sure. So like Norm, you mentioned Spec ID, which is fantastic. And by the way, the reg package was great because it acknowledged self-custody. That was a big deal for them to put so much ink on the concept of self-custody. Mm-hmm. This doesn't really exist in the traditional securities world, many years ago, but not today. And so the fact that we got that's good. And they were very specific about how to execute on specific ID. And so you need to match contemporaneous documentation, intentions. I'm selling from that tranche, identifiable by some unique identifier, maybe the date acquired, where it's held, for sure, wallet by wallet. And I'm choosing that one, but you have to identify that prior to the transaction, whether or not it's with a broker, by the way. And so now taking the data, your friend, making sure you've got something internal. Could be an email to yourself, as silly as that sounds. Yeah. This is what people are doing. Or embedded in your software solutions. Is there some memo field you can document it? Sure. I am choosing this Bitcoin acquired at, March 3rd, 2012. That's the one I'm selling, and that's the address. You got to have that. Otherwise, you are subject to a recast scenario. So
because you could do it before, you could do it afterwards. You could say, hey, I sold something in 2022. I'm going to wait till I file my return in 2023.
Yeah.
Now,
that's right. And that's a distinct change.
Yeah.
So the way that the rules were crafted, again, in securities world, you have until the time of settlement to identify that asset. The way that the rules were crafted is saying, no, we Treasury realize that this stuff settles near real time. You do not have the benefit of hindsight. You must identify it prior to the transaction. That was in the preamble and the regs. So pretty interesting nuances. Again, absorb this stuff, build it into your operational flows. To your point, it's a little different if you're an individual versus a business based on the volume you're dealing with, but it's good hygiene.
Sure.
And so with all the changes and the confusion and the wealth transfer, certainly generational wealth transfer that we're dealing with, which will also change your players in the game as they now have the autonomy and the means to decision-making range to come into the space, maybe where the families have been hesitant before or just not been interested. How do you see that also transitioning the role that tax professionals and advisory firms play in education versus simply where maybe we've been on a compliance side or a little bit too compliance focused? How is that evolving? How are you all addressing it? And what are you seeing work? And I'll couple that with saying, obviously you are sitting up here you're among, I'd say, the smaller number that are really focused on this and where firms have really backed this so heavily that you get to do it without being shared across multiple parts of practices. So how do you also recommend that others who are, I guess, vetting their own practices ask to be educated, and what should they expect?
I mean, man, again, we're more boots on the ground, right? We're talking to people about this. And when clients come to us and we're dealing with the tax situation, we really are an advisor. It's not tax. And one thing that I'm seeing as this is shifting a bit, security is so important. And it's a conversation that we have with every one of these clients, especially people who are getting new into the space. I got, not all my clients are crypto clients. I got doctors and I have, real estate guys or again, you said like it's passing down, the money's passing down and the father wants to be involved now and these big numbers here. So one guy's like, I want to take my whole wealth portfolio and put it into crypto. Like, hold off for a second. Like, this is not just. So security is super important. People are putting a lot of money on these exchanges or in wallets, and it's literally on their phone. And if someone comes and hacks into their phone, can take every single one of those dollars. Just having a UB key for $50 to touch it is already one level of security above what people aren't doing. So before someone comes to us and we have these conversations with them, we put them through a security onboarding. So it's something that, Pete, who's here, Pete runs the crypto department at the firm. He, was in law enforcement. He has that detective mindset. He sees the path ahead, and security is something that he's taken on as an initiative to really teach these clients because it's so important. That's definitely something that outside of accounting we get into for sure.
Agree with all of that. I mean, when you think about going big into this space, you should not be in the center of all of your advisors. You need your advisors collaborating.
Absolutely.
Because you've got sophisticated transactions on their own. You've got sophisticated tech. You've got security. You've got tax. You've got accounting. You've got legal. Get them all on the same page and let them be your advisory team working on your behalf collectively, because it's new for everybody. And little nuances make a big difference. To your point on security, I mean, one of my colleagues in the room, Geraldine, this is a big deal. Building a risk and control framework for your digital assets, just like you would in a big company, right? With very unique considerations. How do you deal with that, particularly on the multi-generational front? When you need to deal with events and how much do you trust different members of the family, all these unique dynamics, take that into consideration. And then you've probably got some advisors with access. Like this is a big deal, heavy touch. And each of those things may have tax and accounting implications, believe it or not. So how you design this stuff actually plays out. Get everybody on the same page.
Yeah, I think you're going to have, I ran into a lot of people here. I mean, they've got traditional businesses withholding now crypto on their balance sheet. So I think you've got crypto people, but you also have, and Gary knows this, a lot of people believe a lot of traditional companies are going to start to hold some form of crypto, digital assets, stablecoins, whatever it is, on their balance sheet, and getting that education level to the you're right. The synergies between your traditional accountants, your traditional tax people, your other traditional advisors, and the crypto people, and getting that education going forward to be able to cover this new asset class is going to be really interesting to me and see how that happens over the next 10, 15 years.
So we take this global. For tax obligations that, of course, differ in the U.S. versus other parts of the world where people are transacting, how should your clients be approaching this? What do you recommend everybody keep in mind in terms of reporting, in terms of what you need from your clients to represent them well and accurately, and how does that change the landscape for people? I know we've got a couple of international focused people on.
You want to start, Rob, with you?
So, I mean, first thing to recognize is
I can say what I want today.
Nobody wants to touch it. Yeah.
The rules are new for everybody and they're evolving real time. And the first thing to say is you shouldn't assume that a rule here is the same as abroad. We tend to think we're talking a lot about direct tax or like income tax. Don't forget about the indirect tax side. So things like VAT, GST, HST, that's a real thing. And if you've grown up in the world of traditional financial products, securities transactions, where a lot of that is exempt from indirect, when you have property of some kind, it may not be exempt. So you may have this added level. Where are you going to see that? If you're designing a product as a business, or if you're engaging with an exchange, it may be subject to VAT as we transit to sales tax. That's a big gotcha out there. And there's a continuum out there. The more your digital assets, like a stable, is more money-like, the more chance you have it's still exempt. I'm going to way overgeneralize. But the more you move away from that continuum, it has functionality, it has utility, there's NFTs out there, the more likelihood it's subject to VAT. That's a really big surprise for a lot of people. The other is that there are no tax treaties today, I think, that address crypto. So now when you're dealing with cross-border transactions, you go to general rules, which means you may see more withholding taxes applied. You can't assume that just because it's called interest, it still is interest because it's not money, as is defined probably. So what does that do to the withholding taxes? What does that do to sourcing? So it's almost, I view this as when you're dealing with cross-border, you build your list of considerations, tax considerations, and it's a bunch of toggle switches. What do the traditional rules say? Is it on or off?
I'm not advising in this area. Rob has to deal with it more, but I will say, like, this stuff can get extremely complex. I was talking to Rob, Lorenzo, Jameson was mentioning something to me earlier. I mean, look, if you go cross-border, I worry about just the people. For some of these crypto native companies that have people throughout the world, well, you could have you could actually be taxed in those countries throughout the world, or vice versa. You could be taxed in the United States. You haven't set up an entity in the United States. Now all of a sudden you're subject to a massive tax. It's not just 21% tax rate. It could be much higher if you don't really have the protocols together to deal with these things appropriately. And there's, massive list of issues. If you're a small startup, you're not making much money yet, you may be okay, and the numbers may not be large, but you've got to get the systems in place to deal with it if you assume to grow larger.
I mean, Daniel was saying this yesterday when he was talking about the tech. I mean, talent around the world is being utilized. It's not just domestic, especially in the accounting industry. The accounting industry as a whole has been, I would say spread super thin in terms of cost and labor. The labor's gotten very expensive, so people go offshore. They have offshore departments. So even internally, like you see, if let's say you have someone in Romania or in Colombia or in India, there's India teams that service accounting outsourced all over the place. Like sending crypto to India is a big problem. Like India has very strict rules on crypto. And I'll rip the Band-Aid off on this one. I think honestly, the only way to control this at this point is a CBDC. Like if you're going to send a controlled amount of money over, I mean, listen, how do you control it? Listen, how do you control it? I'm not an advocate for it, but I'm saying, how do you really truly control it? Because I can go on an offshore wallet, like if it's just fresh wallet, it hasn't been touched, whatever, and I send it to someone's wallet over in India, like I don't even know if they're in India. Like it's very hard to control. And that's obviously the elephant in the room with crypto. It's always been an issue, but it's getting better. And I'm really curious to see how they handle for international cross-border payments, because that's a hard one. It's definitely a hard one.
So I won't put you all in the hot seat anymore on that one. But in terms of complexities of reporting, when engaging in those DeFi platforms, staking, yield farming, so I guess we'll venture into, are there specific risks that individuals and businesses should look to mitigate there? And what are best practices as people are kind of mixing it up?
This is a really big topic because they're securing a return on their digital assets in ways that are very unique. And there's very little guidance on point. And the way that the transactions and products are structured is also unique. So you can actually get to very different tax and accounting answers based on the way it's constructed. Are you operating your own staking node? Are you leasing your assets to someone else who's doing it? Is that other person's an agent? What is that relationship? And so it's important to understand the legs of that. And this is just staking. And by the way, staking, DeFi, huge terms, frequently overused. What it says on a website or on a legal document may not exactly represent the tech first. So the first thing is unpack what is the transaction. This is a lot of work, by the way. That's a great question. First, reconcile what's happening technologically with what's happening in the legal docs. Do those things match? Great. Now we can start. If they don't match, start again, right? Maybe choose somebody else, but really make sure you got that down. And then you have to say, staking is one thing, DeFi, DEX is an entirely different animal, right? And there are different ways to approach the tax considerations of entering a DeFi protocol, right? If you leg in and you grab an LP token, is that transaction one? Or do you deem yourself to have continued ownership of the assets as they're being churned inside the protocol? Two very different things, yep. Right? And we don't have any clarification on this yet, but we see people taking positions based upon how it's constructed, what is your relationship, how much control, how much liquidity is there. There's all these really unique aspects to the situation that you need to unpack, then get to your position and say, what do you like about it? But they're all very unique, very fact specific, and cool, by the way. But there's this unique return that's being earned on these assets. And you really got to start slowly and unpack what it is responsibly.
And, we're obviously here at a Node 40 conference, and I'm not, I don't want to, I'll say, you guys been doing a great job at this, of the building that we spoke about yesterday, because and I think we spoke about this yesterday with providing liquidity. So every different chain provides liquidity a little bit differently. So they, as a software, need to write the code and engineer every chain and how they provide liquidity differently. So you doing it on Uniswap v3 or doing it on AVAX looks completely different and has to be built separately. So like you said, if you're doing into a different token or two different tokens, all these are different variables that can change how it's taxed. So if, let's say, you stay in native ETH and you're always in ETH, is that considered like a like kind and just you're only paying gains on the potential gain or loss from providing the liquidity? Or am I swapping a token? Let's say I have ETH that I was up, I don't know, I bought it at $100 and now it's at $3,000. And if I swap it for that LP, I'm going to create a taxable event. And I now, my new basis is $3,000, and I'm going to get a real massive capital gain event to do this transaction. So, and it's crazy because all of them are different. And now, to make it even more complicated, if you do it 5 times is one thing, but if you do it thousands of times, now you have a manual transaction that needs to be handled 1,000 times. And it gets really, really intense sometimes. So we've spent hours on some of these clients, like hundreds sometimes. So it's becoming, again, that's why tech is your friend, and working with a company like Node 40 that's able to build this to save that time, because maybe they have to spend, 200 hours on their time to go and put that chain and correct it. But now the 200 hours that me as a CPA, which is going to be, it's going to be in masses at that point, my 200-hour job turned to 2-hour job.
Well, and we try to, and we're going to Rob's point and Lorenzo's point, we try to incorporate, we're agnostic and try to incorporate flexibility into this. So for example, on the staking, the data is there, the potential income data is there, but now it's up to the accountant, the CPA, to kind of say, hey, look, what kind of rules do I want to apply with Node 40 to apply the rules at our firm, the rules based on the position our firm is taking, right?
Sure.
Whether it's taxable, non-taxable, or you want to take some other type of treatment.
The flexibility built into the tool is admirable, by the way. And it's not just the different positions. There could be different rules somewhere else in the world, right? You may have statutory accounting do somewhere else. You may be taxed somewhere else. What are the rules there? So having the flexibility is critical and evolving.
Yes.
And so we talk about losses. What are some of the tax efficient strategies you're talking about in terms of handling digital asset losses, especially with some of the rules not applying to crypto that people would otherwise take advantage of? And do you expect that we'll see some more regulatory changes under the new administration, et cetera? How are you addressing it now, and how are you kind of planning for it for the future?
I mean, tax loss harvesting, it's the cheapest tax planning you could do. It's a few clicks of a button and harvest your losses. Is it going to change? It's going to be hard because it's not like a traditional brokerage firm where you're working in Merrill and everything's kind of just consolidated at Merrill, and for you to leave that platform, you have to wire money out and start a new relationship at another place. So like it's hard to transfer over these bases and such. So especially when you have multiple different wallets, I don't know how they're going to change that. I don't think that could change, but I'm curious to see if that does. But that's the easiest tax planning that someone could do at the end of the year. That's why I think you see a lot of volatility at the end of the year in crypto.
It's a really common question. And so I think explicitly the wash sale rules today do not apply to crypto. But it's important to remember that even though they don't apply, you're still subject to the same principles. So if you've not really exited the position, you may not be able to take the loss is I think the point, and people forget that. And what does it really mean to exit a position or to be economically exposed? Depends on the facts and circumstances. And there's analogies made to the traditional world, and you may think analogous to the wash sale rules if they were subject to it. But
or like wrapped ETH to ETH, like because that was I had to deal with that one. So one guy wanted to just tax loss harvest, and he just did a wrapped ETH to ETH, and you have to really take a position on that if that's a real taxable event. Some people actually go the opposite way because they do it and it creates a taxable event in the software, but they didn't want a taxable event. So it's almost the reverse at that point. So that's why you got to work with someone, or you got to know enough about this, because it's easy to create big problems, and it's also easy to create big problems by manipulating the software incorrectly. So it goes both ways.
Yeah, I mean, for us, you have to have the data. So I think Perry showed one of those unrealized gains reports the other day. But if let's say you're legging in, legging into some asset every single week, buying every week, and now you've got like 50 tranches of that particular token. Which one are you harvesting for a loss? And let's say you think about that, and you're doing that now, let's say for a couple of years, right? You've got assets that you've held for a couple of years, and what are you harvesting for that loss, and how are you tracking that? That to me is like, obviously for us, that's what the clients ask us about. What I want the report when my closing positions right before I engage in that transaction and know exactly where my basis is on which tranche.
And also to simplify it, one thing we've done to make it easy, because we're all busy people, all businesses to run, who has time to spend hours and hours and hours on this stuff. To simplify it, to create like a query sheet, and you have like the reports also that do it too, where you make a query sheet and you have so many transactions that that you had to, where you have to take a position on. And that's your audit report. So you do that query sheet, put little notes on the side. It doesn't have to be like this whole complicated thing. And you store it in your audit record. We do that obviously for all our clients, but for anyone doing it at home or for themselves and such, or for clients, have a query sheet, have a report, and just write your positions. I mean, it doesn't have to be like this super, super complicated. It could be all encompassing for a specific asset or for a subset of data. So, that's why I always try to preach, is to make it simple. Like, use the common sense. If you had to sit in front of, I always use like the term, sit in front of an auditor. If they had to sit in that chair over there and you have to defend this or report this, like, what's your best position? How are you going to do it? And if you can, like you said, present it the right way, I think it was a great point. I think you're in a good position, because this is an industry-wide problem. It's not a you problem. So they're going to have that same issue with the next audit and the next audit and the next.
This is a really powerful point. And when we talk about contemporaneous documentation, that doesn't mean everything needs a memo. A note that is timestampable goes a long way under exam. What were your intentions? What were you trying to get out of this? What's the words behind the transaction that you're executing? Create the narrative on a contemporaneous basis. It all takes time and we're all busy, but you're going to really reflect on that and say, wow, I'm glad I paused to write that down.
And you have a note, or you can even you can set up a standing order for that if you want to do the same thing over and over again.
Standing instructions are in play. It is,
and we have
written.
notes here.
It is in the regs. We have standing instructions. Yep.
All right, so as we wrap this up, and I know, and thank you so much. We're going to open up for questions in a second, but bottom line is, as each person leaves and thinks about the rest of their year and path forward, what are the best ways that you recommend people approach their reporting, their record retention? I mean, really just best practices here so that when information is provided to you, it's your best day.
No 40. Amen.
Yeah, it's a powerful point, Gary. Yes, we agree, and I wholeheartedly agree.
I waited until you came back in, Gary.
No, Node 40 is a fantastic place to start. Like Lorenzo, we have a hard time taking on a client if they don't engage thoughtfully with a subledger system. It's not right. Remember, I'm a CPA. I do sign tax returns. Completeness is a big deal. How do you know that you've captured the data? If I know that you're thoughtfully engaging with a subledger system, we're off to a great start. And you need to be thoughtful about making sure that you're complete and that you have a thought about what is there, how am I treating those transactions, and is it reported, why or why not? Some of these things, to your point, there may be things that you just move the assets. That may be an on-chain transaction, but it's not reportable. But you need to see that in the data, say it's on the tax return, and why. So this concept of really excellent hygiene in your books and records, that is, it's a good time to reflect on it, right? With your advisors. Did I get everything there? What else can I do? Sure. Is there a summary that we should just write down so that you have that narrative real time? Super powerful.
Sure. Yeah. Piggyback off of that. If you're going to use Node 40, you're getting it at a point where it's already been built up and battle tested and done and went through a lot of the issues, or not even issues, but more like as the industry is developed, it's developed with the industry. So you're coming at a good point, but on wallet hygiene is also really important. If you've got 1 million wallets out there, you're already a disaster, right? So just clean it up. Wallet hygiene is a great point. And another thing is be very intentional with your wallets. Like if you're going to go and start doing like liquidity pools or you're going to start doing a DeFi protocol that may have like maybe, arguable tax positions, or it's going to be just different from either just doing spot trading or, very like clean cut. Be intentional with the wallets. Create, let's call it like a blocker wallet in a sense, to go and do something only with that one investment. So now it's segmented into a little corner, right? So you know what to expect and you know where to put that. So it's not commingled with everything else. It's just like in business. If you're going to start a new business, don't be putting your personal taxes or your personal expenses on a business credit card. Or if you started a new business line, don't put it on the other business that's existing in legacy. It's common sense. Like take common sense measures to make things simpler in a complicated environment.
Great advice.
Yeah, I mean, for us, going to those points, you guys both mentioned you have to have complete data. You have to have complete data. And if you're going to add complexities like multiple wallets going on the XYZ exchange makes an extra small amount, you take into account how those additional complexities cause you incomplete data issues if they do arise, because you got to really ask yourself whether going into those, adding the complexity of multiple platforms, multiple wallets, et cetera, whether it's worth it to take it into account, having to organize all this stuff and get it together.
Excellent. Thank you very much. And I think we have time for one question before we start to turn it over. All right. And if we can, I will grab the mic. Oh, thank you. Man, covering everything today. Thank you very much. All right, we'll do two.
Hey guys, thank you so much. That was great. I'm in the RWA space, and part of that is we have a title and escrow company that individuals can actually use their crypto to purchase real property. Every day we get the question, what is the benefit of actually using crypto tax-wise than actually selling off crypto and just using USD? Would there be a benefit?
With the right structure, you can, on occasion, take in investments of crypto without the contributing party realizing gain.
Oh, yeah.
So that there is the concept of in-kind contributions. They operate differently with general property than they do with securities, commodities, foreign currencies, et cetera. So there are ways to structure into in-kind contributions, but very fact specific. So not for the weak at heart, but if you are looking at taking in funds in crypto as being an important topic, then good to think about.
Yep. Thank you.
All right, so thank you guys very much.
the situation.
Okay, I know we're streaming, I'm about to fail. Okay, so thank you thank you. So thank you very, very much, everyone, for sharing your expertise and your time and for the travel as with everyone else. Really, really a privilege, a pleasure. And we're now going to, any other questions, I'm sure you're all here and available to take those. And with that, we're gonna open up to our next fireside chat. We'll bring Gary up and we have our friends from ARC who will join us as well. So thank you. Thank you very much. Thank you so much. Thank you.
Sit here and let these.
That was great.
I wanted to go and make a joke about your
Thank you guys very much. That was awesome.
Well, a new one? Might as well. Looks fresh.
Okay. Hey, you guys sick and tired of talking about yo. Come on, guys. This is probably going to be my favorite conversation. Gentlemen, ladies, now who wants to talk about making money instead of spending money with a bunch of admin people? Who wants to talk about making money? That's what this one's going to be about. We covered it up. I just want to say one thing on this last presentation. I have literally zero concern about being audited. I'm so buttoned down because of the software I'm using. I mean, honestly, I've used this in a battle situation. Had 11 lawyers against me. Took a 9-hour deposition to 1 hour. I mean, if I wasn't doing this on Spaces, I'd tell you a story. It's an unbelievable story of how I got into Node 40. I used it, and it really, really helped me out. So all the complexity you just heard, I got it. But I don't think anybody with $30 million has got 30 wallets, okay? Like that doesn't make any sense. When I hear people having 100 wallets, I'm like, dude, I don't even want that fucking client, okay? They don't know what they're doing. And the reason I'm saying I don't want the client, he's gonna go bust. He's trading against some of the most edgy players on the planet who have so much more information than crypto, bro, sitting in Dubai, trading a meme stock. So for me, this is one of the greatest investment opportunities for families, institutions, individuals that I have ever seen in my entire life. And these guys, this is ARC Innovation, ARC Invest or ARC Invest. So I got to keep all the little buckets. So ARC Invest, they're local. They work with Kathy Woods, who's been a pioneer in the space, AI, crypto, the whole space. These guys are local. I really like them a lot. Chris, I met about a year ago. He's doing some really cool things. So with that, let's open this up. Chris, why don't you tell them what you do, and then we'll get to Lorenzo, and we'll talk about ARC and what you guys are doing with your unique products.
No, I appreciate it, Gary. It's funny. I think you said every time we've actually spent time together, Bitcoin's hit an all-time high. I don't know if it's going to happen today. It's a little bit of a dip right now, but hey.
This guy and I meet for lunch. The next day we have an all-time high.
There we go.
We didn't have lunch.
We didn't have lunch. Well, lunch comes next, and then we'll figure it out. But great to be here. I've been down in Tampa now over 13 years, grad school here. I was a tech founder, family office, did all the early stage investments, and Went to go work for Vinic after that and built out what's now the Southeast largest early stage tech hub at Embark Collective. From there, went to some private equity stuff, and then my partner Kyle and I figured out that it would be a great time to launch a digital asset infrastructure fund here in Tampa Bay, the first one. After a couple years, we met the guys at ARC, fantastic team when Kathy and the team moved down right after COVID. And we said, you guys are doing something really special here. We think we're doing something really special in the early stage side of things, early stage investments. We formed a partnership. So right now what we're doing is we just launched actually the ARC Digital Asset Innovation Fund. It's targeting $50 million focused on pre-seed, seed stage investments. We can get into the details in a little bit later, but it's really about three things here. And Gary's mentioned a few times about this being an exciting market. We think we've hit a tremendous inflection point on the technology side. It's getting much easier to use, better off the shelf, better builders coming in. And on the regulatory side, which could even be a bigger driver of this thing. We're seeing a lot more with the new administration coming in, the recent executive orders, which we'll dig into, but to attract builders back to America instead of fleeing offshore because of fears of going to jail for trying to do the right things. So clear guidelines. We believe over time, we think we can attract and retain great builders here in Tampa Bay. Most of the money we're raising actually is local too, because over time, this is how it all works, right? You have an ecosystem, you make people money that are local, they reinvest, the founders stay here, they reinvest, they support entrepreneurs, and you just have this vibrant ecosystem, this really lush watering hole. Because right now, the best talent that we've seen in the state of Florida is moving to San Francisco and then moving to New York. Why? Because capital is abundant, talent's abundant there too because of the resources. So our goal is to change all of that. And we're really excited to bring this to market. We think it's the best time to be building in the space in history. So
thank you. Lorenzo.
Hi, my name is Lorenzo and very interesting talks. So happy to be here. So I'm the director of digital assets at ARC. I've been in the space now for 8-9 years, had my own company. I worked at one hedge fund. I then went on the builder side, so was heading business development for 2 different crypto startups, and started at ARC March of last year. So ARC Invest, we focus on disruptive innovation and really focus on deep research. We have about $32 billion of AUM now, I think. Don't quote me on this. Throughout several actively managed ETFs. And we cover different, we call innovation platforms. So AI, autonomous, energy storage, public blockchains. And so very focused on research. We have an interval venture fund as well, where we invest, privately, obviously earlier in the trajectory of these companies. I would say growth stage, where we invest also throughout the 5 innovation platforms that we cover. And then we have the digital asset vertical that I lead, and there, as well, we try to cover basically the whole ecosystem. So from the spot ETFs and really institutional grade assets like Bitcoin and ETH, to we have other futures based ETFs with mixed with equities, and then we have 2 hedge fund types of funds where we invest, I would say, like a bit further down the risk curve with 2 different strategies that happy to get happy to give more information of what we do there. And then with Chris and Cal, we really wanted to go even earlier in seed and pre-seed. And again, I think like in terms of the technology, and we'll talk about it, we think it's the perfect time. The teams, the infrastructure, the technology, regulation, and just the maturity of the asset class. And so we needed people with experience in seed and pre-seed, which is really a different beast, really. And we're focused on deep research, but obviously, equities were, it's a different part of the traditional financial system. And so, we bring, deep research. Chris and Cal, they've had, a Druid Fund, And yeah, like so far it's been amazing.
What you guys have each year you do an outlook, right? You did one for 2024. You just released one yesterday. You want to give us can you give us the high level?
Yeah. So
what's the world look like for Mark?
So we release what we call Big Ideas, which is our flagship end of the year research report, where again we cover all the innovation platforms. I'll talk about digital assets specifically because that's what I do. But yeah, that's and I think what people are interested in. We had like 3 big topics this year. And I think 2024 was really an very interesting year in a lot of aspects. But we basically covered Bitcoin. We released our updated model of Bitcoin. We released, the first one I think was in a few years ago. So we've updated that model. We always do 5-year models. So this is for 2030. We go over, the halving, the supply, a lot of core metrics of Bitcoin that are really improving, and also a lot of the innovation that we've seen on top of Bitcoin, the base layer. A lot of people are now very interested in building on top of Bitcoin, and we're seeing a lot of teams and a lot of capital coming to there. So that is really the first section. And then we talked about...
When you say you see a lot of capital, you're seeing capital move really quickly since the election? Or it's still on the sidelines?
I think for Bitcoin in particular, and these projects that we're seeing, it was really about the technology and how mature the technology is, and really founders. I think they're very interested in deploying applications on top of Bitcoin. And that really has been possible in the last, I would say, 12 to 18 months. So that is the main reason. And then we did like on stablecoins and infrastructure. And so I think stablecoins have been, I don't know if you have talked about it before, but it's been really a surprise. So there are now, so stablecoins are basically tokenized dollars, right? The 2 biggest companies in the space are Tether and Circle. And so what they do basically, they hold as collateral T-bills, like short-term T-bills, repo agreements, and they issue a token that is pegged to the US dollar. Right now, I mean, we've seen the supply number of addresses just skyrocket in 2024. There's about like 200 billion now of supply of stablecoins on chain. So if you do like rough math with like M2 supply, like the US M2 supply, which is like I think 22 trillion more or less, like it's 1%. So we're starting.
Yeah. To be clear, okay, for you guys that don't understand, Tether makes about 4 billion net profit a quarter. Circle made how much last year?
With 200 employees.
So yeah,
this is staggering. It's more net income than BlackRock.
Yeah, so that's a great segue. I mean, one of the slides, Gary, is Tether. And so they've made in H1, so the first 6 months of 2024, $5.6 billion in net income. And I think they just released their statement for the end of the year. And so for 2024, they made $13 billion of net income. And they have... I think they have 150 employees. And then we've talked to people that say that really... they need like 80 to do what they do. And so if you look, there's a chart which is, in log scale. And really, I hope you guys will download because it's really a great report. Basically, net income. And then on the y-axis on the right, it's log scale of net income per employee. And so like we're in the orders of magnitude of Berkshire Hathaway, like JP Morgan, which they have 300,000 employees and they have 150 basically. And so I think the whole world is just catching up to that and saying like, okay, like what is going on? Like, what is this? And so we're seeing, fintechs and neobanks in Europe, Revolut, they have about, I think more than 25 million users. They're going to launch their stablecoin. PayPal has launched their stablecoin. We're seeing a joint venture between Robinhood, Bullish, BitGo, another custodian centralized exchange to launch also a stablecoin. Yeah, growth has been just amazing, and I think what people don't really realize here, I think in the US sometimes is just like emerging markets. Like Tether has, they are present in these very populous countries where they really use stablecoins because the demand for dollar out there is just infinite. Like you go to Argentina, you go to Turkey, like they use USDT. You can buy a sandwich with USDT. And some of the markets, like it starts to impact the market structure, and like some of the markets are even, they're more efficient than like the spread on USDT in a lot of these countries. It's closer than the paper dollar, even the normal dollar, like that you buy on a bank. So
so we're going a little bit.
Yeah.
So, no. I actually like this conversation. So, and if you guys are bored, you can go grab a coffee, but I like it. Who's going to lose here? Revolut, like some of these fintechs in Europe are on the absolute edge of like either being great or falling over. Who is losing from all these stable coins? Is it Visa, MasterCard, SWIFT, and the Fed? It seems like there's an intermediary step getting you're just going to remove a massive block of vendors kind of looking like they're banks, but they're not banks at all. They're just vendors of banks, right?
Yeah. So a recent acquisition, Stripe acquired a company called Bridge for over $1 billion. And this is a stablecoin infrastructure. What we're seeing though, and I got a good friend at QED, about 4 billion AUM, mostly fintech. They're almost repositioning their fintech fund as a stablecoin fund. Huge investors in Nubank, right? Some of the largest, what we're talking about here, almost neobanks. They're all Berkshire, yeah. So they led that. Now it's publicly traded. They all have this active digital asset strategy with Bitcoin, or with stablecoins leading the way, because they know that they have to get this new payment system, this new payment rails underneath, because there's such a tremendous demand for a flight to quality to the US dollar. So it's going to be the ones that do not actively invest in the space or acquire some emerging technologies like a Bridge to be part of this.
So like, who do you think, like, who's weak? Who do you guys see in the industry that's like, whoa, you're going to have to make some moves? What do you think? Well, you want to whisper it so I can then say it? Visa,
we got a lot
MasterCard.
We got a lot of relationships.
Well, it's cool, but I mean, it's reality. Like when you have this kind of disruption, people are going to be disrupted. I just would like to know who the winners, who we think the likely winners are. I didn't see Tether coming. I didn't see Cantor Fitzgerald dropping 600 million large, dude, into Tether. I was like, wow, that's a move.
I mean, they're managing their T-bill exposure, so.
Well, of course.
Yeah. I think it's a very interesting question. I think even like who's going to win on the stablecoin side, like that's one first.
There can't be 1,000 stablecoins.
Exactly.
Right.
Like it has a lot of liquidity moats.
Exactly.
And regulatory moats. And so we have about 200 stablecoins right now, but nobody uses 99% of them. So obviously, you're going to have like big winners there. I think traditional payment processors, they're very vulnerable here. Visa, MasterCard. I mean, just the gross margins that they make.
51% net gross operating margin for Visa, 50-year-old company. 46 for MasterCard, gross operating profit, 50-year-old company, and they own 72% of all the plastic in the United States and Europe. Like, talk about a monopoly position.
Yeah, and I think also.
Do you know? Have you guys ever seen any 50-year-old companies making 46 and 51% gross operating margin?
No, it doesn't.
Unless it's the mafia.
Yeah. I
get to say these kind of things, and y'all can laugh and go, "Yes, he's not wrong about it."
I also think, like, in terms of like, if you see the new generation, really, like people are under 30, like payments and like these platforms like Robinhood, Revolut, like the neobanks, it's just much more mixed with social, like, it's really between Instagram and your bank account. Like they really use money differently. And so you've seen like what Elon Musk is doing with X, he's going to integrate, payments on the platform. And I think that's really.
What's he going to use?
So I think we don't have I think you're going to be able to basically connect your either your bank account and within X being able to move money. I don't have the specifics, but I definitely think that's the way we're going. Kind of super app, where mix of social, mix of finance, and other aspects. So yeah, I definitely think there's a lot of players that are vulnerable.
I think you were thinking, is he going to use Doge? Is that what it was getting at? I don't know.
Well, he's going to use something. I don't see why he would use Bitcoin. Right? He's going to use something.
Yeah. No, we agree. Part of our one of the focal areas for this private fund, this early stage one, is a lot of the institutional grade DeFi and CeFi infrastructure. This has to deal with a lot of these banks and institutions. They want access to exotic on-chain products. I've heard RWAs earlier, but still they don't have the accounting, the compliance, the security, the custody. And so, with ARC's relationships and deep bench library resources, we think that this is a tremendous place. There's abundance of capital flowing here. For instance, like Apollo just launched a tokenized private credit fund and bringing 1.1 billion.
Thank you.
Hello? Okay, that's better. So Apollo foraying into this, we're very close with Fidelity as well. And what you're hearing now, I think they advise clients to have between 1% to 3% exposure to digital assets. But this is a minor blip into what they're doing in-house through the family office, the F Prime side. They're running in-house nodes. They have all the infrastructure in place. They are really evolving the entire payment mechanism and payment rails and investing infrastructure to enable, this new environment. So, Gary, to your point, who's doing what? A lot of them are doing skunk works. You have Jamie Dimon talking about Bitcoin as bedrock, but then you also have their private blockchain side with Connexus and everything they're doing there. It's actually fascinating. Every bank now has a head of digital assets. Every single institution does. And so while we talk about who's going to be the biggest loser, they all are feeling that fire right now. And they're saying, we got to get with the times or we are going to be that name.
You bring up something because you're new to ARC, right? You came over, you're new. I've been saying for 2 or 3 years, I think we're going to see one of the largest exoduses from Wall Street, from traditional business moving into this space. And you're going to lose those people forever. They're 35 to 50 years old. They have tons of contacts. Their Rolodex is massive. I think you're going to see a flood, and you're going to have institutions left with a bunch of analog people that then have to catch up. This is a full-on game. It's not a spectator sport. You can't do it part-time, right?
Yeah, and I think what's very interesting is also convergence with AI. I mean, we haven't talked about it, but
let's go there.
They're like,
because my robot's not going to send your robot US dollars.
Yeah, exactly. So that's why I'm very, very excited, and what we're doing with Chris and Cal and the early stage venture fund, because I think there's really some very, very interesting and disruptive things happening. Like this year, I think the convergence of crypto and AI, like if you really look at it, like we're starting to have the first AI agents with some of these AI models and basically plugged into Twitter, Discord, so they're starting to have personalities. They're starting to have they're basically assistants, right? And if you think about it, like probably not going to transact somewhere where they need to KYC, they do AML, they need to they're not going to do that. They're probably going to do it on crypto rails, and we've already seen that this year, right? Like starting to have there is progress on basically these AI models that can own wallets, and so they basically have access to capital markets that they don't have, other way. And so really I think we're probably going to see a big moment in AI and crypto in the next year, as we had, with the first version of ChatGPT, where we all use it and we say, okay, like this is going to revolutionize things. And so, I think crypto, AI, the convergence, all these automation tools. I mean, now that's why I'm, really excited also. Like like if you look at like 4 or 5 years, I remember like when we went out my second job, like we invested in a couple of companies, and you needed like upwards of $10 million and like 25, 30 engineers to build like an app on Ethereum on like, it's just the infrastructure. Like you had to build everything from scratch. Now with AI, like you really need like 2 very strong developers and then like AI tools. And so we're seeing companies that build projects and that launch the product without even raising capital. So, bootstrap from the ground. So yeah.
Yeah, I'll pick it up right there, and I want to go back to what's interesting to me with the AI agents and the convergence. But there's a reason we're going pre-seed too. And even though ARC's, historically a public fund manager, most venture oriented, is because the capital efficiency that AI provides to these founders. And there's not going to be much time to get a pretty good ownership of a business unless it's upfront. And then later on, right, it's more of a signal. You're going to get more of the established, the Sequoias of the world, right, that really puts a stamp of approval on the product that can help out with pre-IPO, the roadshow, blah, blah, blah. But now is the time to get in early because these businesses can still launch tokens earlier, right? There's a whole bunch of AI stuff. There's community launch pads. We want to get communities involved from more of a distribution perspective. But anyways, so that's the capital efficiency piece is fascinating, and it's bringing costs down tremendously fast, even faster than a lot of us thought. To flip over, I know we're talking about payments and the guardrails and everything that crypto can provide. I think the more of the security side is very interesting, that blockchains can provide. Like autonomous vulnerability to testing in smart contracts, like acting as a basically a white hat trying to expose assets at any time continuously 24/7. They don't eat, they don't sleep, they don't drink, they don't do anything, they work, right? Some other sides of this, right? You think about the misinformation and disinformation coming out there right now with all the deep fakes and everything like that. Blockchain plays a significant role with provenance. Who created this, when they created it, what was altered, from the hashing sequence and et cetera. So I think, look, we just got through an election. There's been a lot of that. We're only going to get more. Did Gary say that crazy thing? 50-50 chance. But in all honesty, right? You think about less, physical warfare, although we have that, and much more cyber warfare. Thinking who said what, when, where, and really just disrupting the whole world. Shocking stuff. So I think that's really an integral part that blockchain plays too.
How are we doing on time? Yeah, good. So we're going to go a little bit longer because I have some really cool questions that I need answers to. So 2020, I mean, it's free. I'm getting some awesome consulting advice without getting advice, of course. We're just having a chat. That's my default, dude. I'm just sharing my life. We have 2030 forecasts. ARC saying what about Bitcoin price in the 2025 outlook? I mean, yeah,
not financial advice. So we always release models with bear, base, and bull case. So basically three different cases. And
I'm always happy with your bear case.
Yeah. So the 2030, which we do 5 years, but it's end of the year. So end of 2030. So it's really 6 years if you look at it, from now. So the bear is 300K, the base is 700K, and the bull is 1.5 million. So that is, the new model that we've released.
300K is $6 trillion marketplace.
Exactly.
$6 trillion industry. No $2 trillion industry has ever failed in history. No industry that's ever gotten to 2 trillion has ever failed, and we're at 2 trillion just for Bitcoin. What about Ethereum and maybe some of the other complexes?
So we haven't released an Ethereum model. Probably going to do this year. So we're working on it internally.
Yeah. Who's the big winner of the altcoins in y'all's opinion in 20 by that time period? Without picking losers or winners, but like who's at the top of the food chain that seems to have a good play here?
Well, It's hard to say how much changes in 5-6
Yep.
years, right? With technologies coming off the shelf, better builders coming in. What I will say though, when the president released his meme coin, double-edged sword here.
Yep.
Shows that the regulatory environment's much more lenient, can work with you. But it also says what's going to happen with this. What's the utility? Is this a self-enrichment? What's going to happen? And then what we noticed that, and Lorenzo did an exceptional job with the rest of our team, is really looking at Solana and how battle tested it became. With the inflows, the wallets created, the new wallets created, the first transactions, just the sheer volume battle tested, and it was fine. The only issues were Coinbase potentially didn't have enough Solana to provide for customers, unknown. But I think that's really fascinating because when you get battle tested like that, the resilience to come out of it, it starts showing institutions that maybe we should look at this deeper. Maybe it can handle the volume and the traffic that we would put there. So I think that they're in a very interesting spot. Ethereum, kind of as Lorenzo said, it's done a great job leading the market, but a lot of developers still think it's not like Solana. It's not as fast to develop, transactions per second, things like that. And also, not to mention like the price appreciation has been pretty flat. As Bitcoin's gone up, doubled, tripled, quadrupled, Ethereum's flat. So there is price, call it magnetism with builders too, because they want upside in it.
Yep.
And Solana's done a good job so far.
Yeah, I think for me, look, Ethereum and Solana definitely have like a good advantage here. I think for me, the biggest question is value going to accrue to the base layer or the application layer? Like if you look at internet, like if you invested in CCTIP, it's not worth anything. Like what's worth a lot is like Google and Amazon, like the businesses that were built on top of it. And so I think like the biggest question is like,
it's the hub of services around.
Exactly. Like it's the companies you built on top of the base layer. At least that was the case for the internet. So the big question, is it going to be the same for these smart contract ledgers? Like are ETH and Solana not going to be worth a lot and the applications are going to take most of the value, is going to be 50-50? Like how does that look like over time? So I think that's one of the biggest questions. I think if you really want to see like these smart contract layers grow a lot, right now I think Ethereum is about like 300 billion. Solana is about 120, like give or take, so it's really like still circular, like the economy. So you really have to bring like TradFi assets into these blockchains. I think that's the biggest opportunity. And I think like if you really want to do that, like you need to be able, not at the same level, but on terms of infrastructure, like latency, like if you want to have Citadel, like market making on chain, like you can't really just have like 500 milliseconds latency, right? Like you need to go to be much more performant. And I think we're getting there, like slowly, but in terms of market structure, like custodians, market makers, like HFT firms and everything, we're just not there yet still. I think we're going to get there, but that's a really important part of the puzzle, I think.
Chris, when your fund is 50 million?
Targeting 50.
Seed and pre-seed, what are you looking at? What type of, are you looking at technology? Do you look at the technology? Do you look at the teams? What do you value most? And what part of that food chain do you look for?
Yeah, so we definitely look at it all. It definitely is not going to have the product market fit, a lot of the traction that later stage companies do, right? In and of itself, the name of the stage of the investment. The people behind it are super important. And what we're noticing, to your point about these, perhaps they're a little bit older and they're moving over. They could have been at these banks. They see these big issues in there and they say, we want to go ahead and develop this new company. And these are the relationships that we have at ARC to go ahead and look at them. We're involved with most of the best schools in the world, especially in the country. We actually have a little road tour going on to talk more about the fund with Kathy and explain everything, but it's definitely who the people are behind it. What do they see differently? What do they believe in? Why does this make sense? Why do you want to commit your life to this? Because if it's just an incremental innovation, we don't want to deal with that. And you shouldn't be wanting to spend your life on that. So what's radical about this? Obviously, we have a lot of research internally about where we like to invest. And I mentioned a few of them before. Privacy is a huge piece in the world of open source. We've seen all this DeepSeek stuff, but it's really the tying in of these, AI models with blockchain, but privacy I think is huge. And so, yeah, we have to deal with it all. And we're not afraid to invest out there when there's not necessarily a market yet. Or maybe what is this? It's kind of fluid. It's dynamic. We can't put our thumb on it. But at the same time,
I might have a deal to show you.
Okay. See, this is what it's about. It's about relationships. But still, is it a market that may not be as big, but how fast is it growing? How's it compounding? Because it's fine to be a bigger player in a smaller market that is growing much faster than the incumbent established markets, when you already know what you're getting into is the 800-pound gorillas with enough cash to try to crush you legally. So again, we're out there, we're pushing it. I think another thing is the convergence of this tech. So Lorenzo mentioned the platforms. There's a lot going on with ARC from our deep research team. So if there's, we talked about RWAs before. If there's a business that's looking to, get involved with robotics from like a stablecoin payment perspective, well, we're going to bring in like Sam and Tasha from the team to help underwrite it, understanding who the current incumbents are, understanding the current flow of funds, the regulations, everything. Because what a lot of investors get into, especially in our space, is they say, oh, that's cool, it looks shiny, let's invest, without knowing on the other side who they're trying to disrupt. And this goes across the board. Energy is a big one too when it comes to tokenization. We've seen a lot with actually the latest one, uranium, which is interesting. But there's a huge convergence, and blockchain really is almost like the central nervous system, if you were to think about anatomy here. So long story short, everything matters when we're looking at it. The team is by far the most important thing, because there's a good chance they're going to pivot. Doesn't mean change entirely, right? You think about basketball, you leave one foot on the floor and can turn, do some cool things. But yeah, the team is most important to start.
Yeah, the team. I mean, they're the best at it. And I think the team, like when you invest like so early, you're gonna pivot like at some, and like
at some point. I've had private equity go, don't mention the pivot word. I'm like, it's to your point. Hey, 1 degree off. I missed the net. 1 degree. I just got 1 degree. All the money I've ever made in my life was on the pivot. Yeah. But you're in the game. You're in the game, and you go, oh, I keep running up against this wall. Just move. Just boop. Oh, let's raise prices. That magically works, right? Whatever you do. I'm always surprised in these very transformational, disruptive environments. People do so much study of the tech. I'm like, that tech needs to change tomorrow morning, man. Like, it's the team that matters. Like, are you building for the right philosophy? Do you have the right inroad and relative timing? Like, you're not going to get the timing in all my business has been, hey, I'm going to miss it probably by 12 to 18 months.
Yeah, it's what's your North Star and why.
Exactly.
And are we the right team, right? We like to assemble the best cap stack up front with the right complementary partners to say, because it takes a village to do this, right? What's your North Star? Why? Let's reverse engineer milestones, hold you accountable, help you get there, accelerate value, capture market share. And hey, if we find something, a brand new technology, a DeepSeek is released or something like that can quickly augment your business, and you may change a couple degrees and capture a bigger market, let's do it.
The reserve, the sovereign, the stockpile. I mean, we just got to ask the question, right? I think most people are going to be the Bitcoin bros are going to be very, very disappointed. I'm saying right now, you are going to be disappointed if you're waiting for that $130,000 moment on Bitcoin for Donald Trump to walk out. We're going to put $2 million on the reserve. It's not going to happen. And it would be foolish to happen. Okay, it is not in his demeanor to share everything he's going to do. What do you guys think?
Well, what's interesting on this point is the sovereign wealth fund here in the States. What does it mean? Are they going to go out and acquire Bitcoin? I don't think so. Are they going to perhaps withhold the Bitcoin that was kind of confiscated? I think so. And I think that they're going to formulate a plan around this. What do they want to do long term? But this year, I don't necessarily see that. I do think it's interesting with Cynthia Lummis, the proposal she has, and the various states also petitioning, or at least getting some legislature to get some strategic reserves for Bitcoin. So there is directional.
Do you
push.
think that happens this year? 14 states, all
I know.
energy long,
I know.
all royalty long energy.
I know.
I say it happens. Man.
I think that there's some
I think
issues.
the states are going to push the Fed to doing this. This is game theory, perfect game theory. Man.
I think this is the year where they look at external managers to essentially custody it on their behalf. I don't think that they're going to hold it themselves. And we've had some discussions here from some key leaders that are very interested in the digital asset space, that have way more digital assets than I ever thought, close to 9 figures, or almost 10. And so like there is activity, and I think that they're just getting really, really smart about how we want to do this. We think about, the tax conversations before we think about the custody. Will they hold it themselves? I don't think so this year, no. What do you think, Lorenzo?
I mean, coming back to the strategic reserve, I think they're the closest. I mean, you can basically any confiscated digital assets, from drug marketplaces or any illicit activity, they're definitely gonna keep that. So that's one thing. I think for me, the question is like, if you're
well, half the Bitcoin is going to have to go back to BitNex, right? Like,
right.
We don't own that. Like, you
right.
can't just go grab. So there's 100,000. There's 100,000 that goes back to the original.
Yeah, I think like for me, as you start to acquire, it's like how the execution of that. Like, how would that work? It's not like you can go to a dark pool like in traditional finance and like you're basically going to telegraph to the whole world that the United States is actively buying, doing like, so I think that is in terms of execution, I think there are some questions there. So that is my biggest, I definitely think they're gonna keep the confiscated, Bitcoins and other, from other illicit activities.
My thesis has never been that I need to price in the Federal Reserve or sovereign or stockpile. I don't need that. I just need the game theory. I actually disagree with you guys in tech. Like, we'll get 3 or 4 states. Like, I've spent some money with lobbyists. Like, I've been, the Dennis Porters or the World Satoshi Action Fund, trying to get, like, if we can get a couple of states to do this. Now, to me, the why is more important than now how do you do it. I could see you guys winning massively, Fidelity, the BNYs, because the states, the schools are not going to hold this. They're going to allocate it to a custodian, which is a big thing that we start, right? I mean, we can go on for an hour here. There's so many. Maybe the better way to look at it is what headwinds, friction, problems do you see for this space? Because I can't see any. I don't see any like, oh shit, I'm going to lose all my money. I can't come up with a scenario.
So it depends on where you're spending time in the space. Obviously, the big rage has been the casino, and that has historically been the bad part of our space. People coming in, investing in, all these Trump coins, WIFAC coins, whatever you want to call it, and getting rug pulled, right? They lose all their money. They think everything's a scam. So it really taints the reputation. Long term, though, if you're investing in the right fundamental assets like Bitcoin, like the ones that are battle tested, I think you're just fine. There's black swans events, they happen, but long term, you look at it year over year, the compounding of it, it's exceptional. But that does deter some great builders from building in the space too. It's changing. I was talking to people like San Francisco is the convergence now of AI and crypto. But the point being, to your thing, where do you get burned? You get burned doing dumb things, right? And our space accelerates that to the nth degree. But on the other side too, it's transformative. And so just seek quality. There's no need to have these 100 wallets doing a bunch of different things. If you are interested in getting exposure to the baskets of alternatives, Lorenzo leads a great team at ARC too. With is about 10 to 15 rotating assets at any time for different exposure, different complementary profiles. So I would just say talk to people that understand the space, ask the questions. Don't just blindly go in and connect your wallet and dump your retirement in there. Like, talk to people, because we're elevating, we're maturing, we're institutionalizing this, and so yeah.
When we open the audience questions, and you guys don't ask me a question, ask these 2 guys questions. And who wants to start? Here's another mic. You guys might want to just start passing it around. Whoever wants it. Raise your hand.
My question is about the strategic reserve. If you guys see that passing with us this year or next year, do you believe that would break the 4-year cycle for Bitcoin once game theory activates and you see more G20 countries all racing for the Bitcoin supply?
I think to Gary's point, I think the game theory is already in action. I think the 4-year cycle has been broken in terms of the huge sell-offs that we had, which were historically 80-70%. Right? I think it's going to be much more minuscule. I think, we could still see 30-40%. And I think over time, if that all happens, it's going to keep shrinking because, you've already seen some other nation states front running and acquiring loads of Bitcoin. And so I think, again, the actual dramatic drop in price is going to be much smaller. And then over time, it may just be pretty stable from a drop.
Agree. I think, it's already in place. I mean, we know, Russia most likely already holds Bitcoin, either, we know it or not exactly. Bhutan, they have a huge mining operation from BitDeer. They also hold Bitcoin. So El Salvador, I think there's many other countries that we just don't know yet. So I agree with Chris. I think the game theory is very much already in place. For the 4-year cycle, I mean, probably it will look different. I think Bitcoin is in a league of its own, really, if you think about it. I think for the rest of the digital assets, we're seeing a lot of consolidation from many of these tokens and projects into fewer, and just like with better fundamentals, better economics, and just better teams. So that is probably going to continue. But I think Bitcoin, like if you think about it, from 10K to 100K, you have like 10x. I think that 10x was much more risky than from 100K to a million, I think. That is in terms of risk, like, and so.
Can you explain that to the audience? Because there's probably 10,000 people listening right now. What is risk adjusted?
Chris, you want a sharp ratio?
I mean, in a kind of easy way. I built the case that $300, I would never have deployed 92% of my net worth. At 80,000, I get really, really comfortable. In a $2 trillion industry, I get very comfortable deploying massive volumes of money versus at 300,000. I would never have done that.
Yeah, I mean, for high net worth, family offices, institutions, they obviously, you can't even sell a product if it's lower than a certain AUM, and so there are like certain thresholds that are really, really important in terms of how big is the asset, but in terms of
They have a minimum, like I think it's $750 billion, right?
Exactly.
It's only Bitcoin.
Exactly. But if you've been in this space for like the past 10 years, you look at the asset and the technology, and it's been ready like for a long time. And that's why I think it's the first asset, I think, in the history where retail has actually front run like institutions. And
do you think the front run's still here? Because it just most certainly still looks like there's some front running.
yeah, I think for other assets like Ethereum, for example, if you look at the ETF flows this year, Ethereum is about 20% of market cap of Bitcoin. And so I think people were expecting 25% of the flow in NUM, and it was lower. It was 10%. And I think part of that is because they don't get it, and it will take time, just like it took a lot of time for Bitcoin. So there is still some of that front running taking place, I think.
It's funny, Gary. Like I think you and I talked before, and it comes to a certain point, I think, with total market cap and proliferation around the world and adopters, wallets, and everything. But if we were to essentially do a stock split of Bitcoin's price today, called 10 to 1, and it was $10,000, how many more people would buy it? It'd be remarkable. And what that would do, does that go from 10K to 100K again, and then it's the same thing as a million? I don't know, but 10,000 is a lot more welcoming than 100,000 to buy, especially with a lot of people that don't understand you can buy fractions. It's not the same thing. Yeah.
Unit bias.
Yeah. So it's unit bias. Yeah. 100%.
I have a question respectfully. First of all, amazing talk. You are very bullish on Tether and stablecoins, but I'm also confused. Why are big asset managing firms and centralized exchanges like Coinbase talking about banning it in Europe in the event of this stablecoin bill? I just see that as a contradiction, because if it's got so much growth potential, why is there talk about banning it?
Yeah, I think in Europe, we've had the MiCA regulation that puts, so I'm not an expert on MiCA, but I think certain rules around custody, reserves, minting and redeeming. And so I think for Tether, it just wasn't worth it, to be honest, to stay in Europe. Like if you look at their biggest market by far is the emerging markets by far, and so South America, Asia, Southeast Asia, and so I think it wasn't really worth it. I think for Circle, Euro C, which is their stablecoin pegged to the euro, hasn't really hasn't done very well. Also, like even in Europe, like most of the exchanges, most of the liquidity is in USDC. So you trade Bitcoin, Ethereum, and with dollar-based stablecoins. So yeah, I think for Tether, it was just, you either comply. I think Circle acquired a license in France, so they're really the only ones, and they're very much in Europe. Although I think they're gonna do their IPO this year or next year, so they're coming back to the US, which I think is very good. But yeah, I think it's mainly because of MiCA, the MiCA regulation.
Yeah, I actually think, and there was a recent bill, I got to go read it, about kind of like opening up the playing field to stablecoins with clear guidelines. I think that more banks are actually going to issue their own with what they have right now. Well, yeah, on the private blockchains, but also just that it's pegged to the dollar. So maybe, I don't know if it's JPM, I don't know if it'd be C because that's JP Morgan Chase, but like something similar there where they have complete, I think somebody was talking about before, like CBDCs. So you have complete control. I don't love it, but I understand where it's coming from. Circle, it's all on chain. It's all very, very transparent what's going on there. But I wouldn't be surprised. You start seeing these big ones that have the blockchain infrastructure, like JP Morgan Connexus, to start issuing these JP Morgan coins to disintermediate the tethers, like the huge market share there. Now, what does it do? What's their scrape going to be? I don't know. Because that cannibalizes business to some extent. But if they don't cannibalize their business to a certain extent, they could go extinct. That's right.
How far do you guys go down the list of, say, the top 10 minus the stable coins, the meme coins, in terms of the technology? Something I know you mentioned Solana. Is there anything else that you guys are looking at in the alts, like say Avalanche for say, and the tech that's kind of provided by a lot of the other chains?
You just did this for big ideas. Do you want to take it?
I mean, we'll look at everything, to be honest.
It's everything, yeah.
Yeah, everything. I mean, in terms of it really depends on the product. It depends on the product, the profile, and but for the funds, if it's less than 300 million of market cap, like it's hard to get your hand, like to get some of that token. There's a lot of slippage. There's some operational considerations, and so that's usually something that we look at, but we can't really. But in terms of the tech, yeah, everything. I mean, Avalanche, Near, say, Sui, Aptos, like we have to look at everything. Yeah.
Are you asking from a price perspective or developer, where developers are building? Yeah. Yeah.
Okay, that is so in terms of the developer, so Electric Capital, which is one of the biggest VCs in crypto, they release a developer report at the end of each year, and it's the most comprehensive one, like by far. I think it's 150 pages. This year, in terms of developer mindshare and people building, Solana has onboarded the most net new developers in 2024. Ethereum still the biggest, I would say, chain in terms of active developers. And again, it's quite hard to quantify because you have to look at the GitHub repos and everything. So there is a lot of errors, but Solana was definitely the biggest surprise in terms of mindshare. And for layer twos, I mean, so Coinbase deployed their own blockchain called Base. And we've seen a lot of developers really interested by that, and they've had a lot of success because, besides from the chain itself, Coinbase is a huge institutions, and they're building a lot of very cool products on top of it that developers can use. So they have their own. They have CBBTC, which is their own wrap Bitcoin on Base. They're working on smart wallets, which they're more simplified type of wallets with seed phrases and other functionalities. They're obviously with Coinbase Venture, they're investing like in a lot of the teams that then go build there. And I think we'll see that like during the bear market, where a lot of Coinbase is a big institution, so they'll have the money and they'll have the resources to keep the developer mindshare and just number of protocols and activities. So I think it's going to be interesting to see. But yeah, so I would say like you have to look at it in terms of technology. Ethereum is the EVM, so it's really think of it as an operating system like iOS or Android, and it's definitely the EVM and the SVM right now. So Solana and Ethereum, it's definitely the biggest two operating systems I would say the developers are building on. Yeah.
Sorry, and I'm so sorry. We're getting the wave so that we can break for lunch. But what an incredible panel, Gary. Any last things before we?
Just lending. Is lending going to happen? It looks like it's happening, and rates are coming down.
You're talking about like in the crypto space lending? Oh yeah, that's happening. It's huge.
So we have that in our Bitcoin model, both on-chain and off-chain. So it's lending with Bitcoin collateralized. So you could do that. You could do that both on Ethereum and on Bitcoin, or you could do that with Genesis and all the players that went bankrupt. But there's going to be new players, and we have that in the model. So yeah, we definitely think it's going to.
Yeah, that's what I'm seeing too, personally. That's what I agree on. But like, for instance, Druid has a portfolio company that does that, the Bitcoin lending. And they're doing incredibly well, and it's just the time right now. And they do it without any it's more like you have a collar up top and below for forced liquidations. But in any case, yes, like the people with a lot of Bitcoin, the institutions, you don't want to sell an asset that you believe will continue to appreciate in price when you can just borrow against it. And we think that's a huge paradigm shift into what's next for digital assets.
Thank you guys, really appreciate it.
Thanks everybody.
All right, thanks very much, everyone. And I guess you're way ahead of me. We are headed to lunch, so thank you.
All right, guys, we're gonna go for lunch. Can you guys comment if you can hear me or not? Hey guys, drop a comment.
So when you're defining like in the office type problems, hey, let's train an agent
Guys,
that
drop a comment if you can hear or not.
you use like a chat. I just so you have this model to train your agents.
We are AI model agnostic. So we built a software layer that sits on top of those all the different models. Okay. So you essentially swap them out depending on what storage they use. So some of them use, open source models, right? Others.
Awesome, thank you, buddy.
What?
You guys go ahead. You're being streamed live. So.
Okay, very good.
We're talking about AI models. So like our business is looking at using AI technology, and John is CEO of Internal
Technologies.
And so he just walking me through the process on how his AI stat is trained. So I was listening to something the other day. How we built that is so smart because the large language models, they're just going to be swapped in all the time.
Yeah. Well, we're seeing that now, right? It's every 3 months there's a new model that's coming out, right? DeepSeek made the news recently, and we're now seeing new models being released from Meta as well, and they're going to, of course, be more and more. And it's happening faster and faster. So, giving the enterprise the ability to swap these out, but keep that common layer for the end users to be constant.
So your base training data is changing, but my user interface with your team, what I'm doing on the back office stays the same.
That's right.
That way we're not retraining or.
For all the viewers, if you want to hear more about AI and Bitcoin, I'm on Gary's Spaces a lot too. So join there.
Awesome. What's your handle?
John Byron Hanby.
So that's the real guy.
It's the real guy.
Is there a real photo or is that
Yeah,
another?
no, it's me. It's actually me. So.
Okay, awesome. So go follow John and Joseph.
I have my name at the
J and J.
Yep, it's Joseph T. Metcalf. So
Awesome. So do you guys want to introduce your businesses, or what do you guys do? What brings you here? We can, yeah. Let's start with Joseph.
I'm here because we're Node 40 investors. It's basically it's the underlying technology that helps pull the raw data for CPAs and other organizations to be making their taxes right and digital assets. So we got invited here because of that. We just run service businesses back in Nebraska, launching a new business called Painting in the Box. And
what's the link for it?
Painting in a Box. So what we're basically doing is, we paint high-end homes, high-end this, high-end that, but clients, there's a lot of customers that say, hey, I'm a DIY person. I want to do it myself. So basically just on Amazon, one-click wonder, we provide the training, all the tools, it just shows up to your door. So we just work on stuff like that. But what I get really excited about is just all the digital transformation. Like for us, we're still learning. I think everybody's learning at this point. AI is very new to us. Our team's starting to use AI. Hey, how can we incorporate it into the business? How does that relate to digital assets? So we've got an investment arm to the family business, and that's why I'm here. And I'm just here to learn, and it's just exciting meeting people like John who are like super deep into it already.
Awesome. Thank you for the intro, Joe.
Hey, everybody. John Hanby, founder and CEO of Eternal Technologies. Started the business about 7 years ago, before AI was cool. We provide out-of-the-box enterprise AI solutions that span literally every department of an organization. So whether you're in sales, marketing, customer engagement, IT operations, legal, procurement, finance, you name it, chances are we have an out-of-the-box solution. We support primarily the Fortune 1000, but we do work some in the small and medium business side as well. And really the idea is the AI space is changing so fast. And there is so much money being spent on developing these tools in-house. The issue is You don't necessarily know how long it's going to take to build it, whether or not your project is going to be successful or not. And you're looking at like 12 to 18 months to deploy one of these enterprise solutions at production scale. So what we've done is we've built these end user business applications. You can think of it like SaaS, but it's designed for the enterprise, where they can deploy one of these AI technologies literally in a couple of weeks and at full production scale, integrate it into their business processes.
Wow.
So, for example, we have a RFP response platform that allows you to respond to an RFP in like a couple of minutes versus spending weeks or months in a team of 20 people to have to respond to one of these proposal requests. We have another technology that's designed for things like document analysis. So think about back office work, whether you're in a legal role, a procurement role, or an IT or call center role. Right, being able to analyze information, whether that's documents, transcripts, audio recordings, and extract key insights, that's a huge challenge. And so we're able to do that. Like right now, we're working with one of the top 3 pharmaceutical companies in the US. They have 1.8 million contracts that they have to analyze for things like rebates. And they're adding about 150,000 new contracts every single year. And it's so hard to find the diamonds in the rough, right? The contracts that, if you are able to get that rebate, because a lot of them are eligible, but they slip through the cracks, we're talking about like tens of millions of dollars. And so what we're able to do is we have a solution called auto reports that allows you to take those 1.8 million documents. A lawyer with, natural language can type in a query like, are these contracts within the expiration term requirements? Are they specific to a product? What are the contractual rebate terms? And they can type all of this in, press a button, and it will analyze all 1.8 million of the contracts. It will give them a report back with like a bullet list of, hey, here are the 500 contracts that we've identified that fit the criteria that you're looking for. Here's a half-page summary on each of them so that they can take that really finite data set now and give it to real humans. So those humans can then evaluate those 500 contracts, and maybe of those 500, there are like 5 or 7 that meet those rebate terms, and they just made like $70 million that they would have never been able to get otherwise. So we do a lot of different things like that. Those are just 2 examples.
Where are you guys based?
Austin, Texas.
Austin. Love Austin.
Yeah.
What you're saying is, for an analogy, I can picture it as a series of filters. I got a big filter, and then I get smaller, smaller, smaller. And, some filters are a triangle, some are a circle, some are a square, and all the different tasks. And then a human at the bottom of the funnel goes, oh my goodness, I don't have to look through all of this data at once. I can just pick and choose now.
Yep, that's a great example. And in addition to doing things like that, we also have like call center use cases. So imagine, we have one of the largest call centers in the US. They do millions of calls a year. And it's really hard to determine things like the call center agent performance, right? Did they do a good job on the call? Did they do a bad job? Did they say the right things? Did they follow the scripts, right? At scale, most of the call centers are only able to analyze about 2 to 3% of the calls that are coming in, because right now, you actually have to have a human on the other end of the line listening to that recording. But now through something like this, every single call, 100% of the calls can now be analyzed, and you can extract key data. Because the last thing that you want is you could have the best call center agent in the world, but maybe they have a bad day. They have one call that's like an issue, right? And then they get scored on that one call, right? That could be a big challenge. So a lot of cool things.
All right.
Thank you, gentlemen.
Hey.
I appreciate you. Thank you, John.
Yeah, you bet.
Thank you, Joseph.
Thank you. Take care.
You guys enjoy the rest of your event.
All right, will do.
And I think that's important.
Yeah, because that's.
How are you guys doing? We're live streaming, so we're going around the room and just introducing people.
We're just meeting each other. Yeah, how you doing? We're talking about where Web3 meets AI. How about that?
That's awesome. That would be awesome. Maybe you can give us a snippet of the conversation here.
She was just talking about it, but we use Web3 for tokenization, taking real estate and converting it into securities.
But Web3, meaning AI, we actually use AI to interview our investors. So that all that what you call customer suitability is done by AI agent.
Yes.
And that becomes that customer's personal assistant for being able to select real estate assets in the future because they knows everything they want
Yeah.
and it updates on a regular basis. So an AI agent is just more efficient to do that way.
Yeah. And the major things that saves is time, and time is money. So.
How did you guys meet? Here at the event or?
Just now.
Just now, you got us live on that.
Awesome, perfect. So how have you been enjoying so far?
It's been great. I thought I knew a lot about Web3, but I learned so much more just listening to a lot of the comments here. And I think there's a very strong connection between real estate and Bitcoin as well. So we're trying to figure out how to connect that. They talk about borrowing on with Bitcoin, and that's great. But I think they can borrow more efficiently if the whoever is lending on Bitcoin combines the real estate asset with part of the collateral. Now it's a much safer collateralized asset. So that's what we get putting together. So I learned a lot about that here.
Yeah, and for me, the fun most part is conversations like these, like human to human conversations, deep, right, in a very close setting. No one's pushing anything agenda wise, right, and having a deeper, more meaningful conversation. So I
That's
think
right.
that's money for me. Yeah.
Awesome, awesome. And where are you guys flying in from?
California, Bay Area.
California
And Houston, Texas.
and Texas.
Yeah.
Awesome, guys. So we have two more panels. We have lunch here, and you guys are out tonight or tomorrow?
I'm leaving tomorrow.
Okay, awesome. And
I'm here. I'm speaking on the second panel, and I'm out tonight.
awesome. So we're gonna have Edward speaking very soon
Yes.
on the panel. And then what are the links to your guys' businesses or profiles?
Neopolis.ai. Really helpful, especially
What's the link or?
Neopolis.ai.
Oh, just that, just like that. Okay.
Neopolis.ai. You'll know what I'm talking about.
And your name is?
Akansha Upadhyay. You can know me as Akansha. I have a can in my name. That means I have a can-do attitude.
I love that.
Like that.
At least that's remember me now.
And I'm Ed Nwakati. I'm the founder and CEO of Red Swan CRE. You can find us at redswan.io. We have a full marketplace of commercial real estate that's been put on chain. So now has decentralized the ownership of investment real estate. So if you want to buy, apartment buildings or hotels or industrial real estate, check our website out. You can buy it in fractional shares.
Awesome. Thank you, guys. Enjoy your lunch then.
Thank you.
I'll see you around. Take care.
I know what I was talking about because I want to see the interface. I don't keep anything at all, put in a small little NFT just try it out. But I can't imagine a large amount of money.
It's about all it is. It's a 2 millimeter shift in the way of thinking. Once you educate them, I think that's the biggest opportunity. It's just getting them at a point where they're open to hearing. Because so often I feel like, especially in this space, people have contempt prior to investigation.
Oh, for sure.
It's just like, oh no.
Yeah. Well, if you don't understand something, you're going to immediately go, hey, I don't understand, so I'm not going to listen to it.
Yeah.
Or, plug in something to make it make sense. Like stablecoins. People, I think it's a horrible word. I think people should say it's not stable. It's a linked.
Yeah. It's
not
pegged.
stable.
It's a pegged asset.
Yeah, exactly. All right, good to have you. Very good to have you. Eric, thank you.
No, we'll talk.
Yeah.
We'll talk. I am. I mean, but what's it within America? It's really hard.
AI set up that stuff for negates too. Appreciate you guys for being on top of it, because it was for you guys, a lot less people to be educated.
All credit due elsewhere.
I hitched my way.
No, but it's you pioneers in this area. It's a great
So were you? Yeah, surround yourself with it takes a lot to have that conviction in everybody's sometimes. Yeah. And I think now it's hitting that inflection. Yeah. Yeah. Then we'll see with like robots and what have you. Oh man, that's a whole other. That's the thing. So I'm a recruiter by trade. So we're actually doing all of that advice. Of course, I'm doing a lot of investing and stuff on the side. But I really like robot deployment. Forget about personalities of people. And I'm going to deploy robots. Then that's the late.
What type of robot? Physical robot?
Yeah, exactly. But to deploy these to, I even think about my industry, the medical businesses. Like they all have warehouses, they all have people working in these things, very inefficient. It's like, it's robot deployment for 6 months. I mean, I think that's where it's going to go. They build enough of it. It's going to be a whole marketplace. You're going to own a fleet, just like you do with the self-drive, with the Cybercat.
Why not? You don't need food. You don't need it.
No food, charge points, work 23 hours a week, no insurance.
Sure. Workers' comp.
Yeah, no. That stuff is implemented. I tell people this, and they're like scary deals. I'm like, it's coming, whether you like it or not. It's gonna be Ray Smith. Yeah.
Hi guys, if we lose connection, just comment. People are eating lunch now. Gary is a great host. But he's walking around the tables, talking to people.
Has that happened yet? I found him to answer. Past 50 years. They're big.
I think that
Hey, how's it going? We're streaming live right now.
Oh, nice.
What's your name? Do you want to introduce yourself and just tell us about the experience?
Yeah, I'm Gabe Higgins, co-founder of Block Spaces. We do Bitcoin infrastructure for institutions so they can launch Bitcoin products such as Bitcoin collateralized lending and other stuff. We have announcement coming out soon. Smart contracts on Bitcoin layer 2. Watch out for that.
Awesome. How did you find the event and Node 40 Alliance, Gary?
Yeah, so I've known Gary for a couple of years. We're friends. So he invites me to all of his shindigs here at his beautiful home. So happy to make an excuse to get over here.
Awesome. Thank you for being here. What was your favorite, talk?
Yeah,
So
well,
far?
I would have to say the last one. With my buddy Chris Pizzo here. Now at Ark Invest.
We are live, guys. We have over 3,000 people right now.
Nice. Appreciate you guys tuning in.
So yeah,
We'll
Chris,
see you
great,
later.
great panel. We're hearing
Great
that
panel
was the
discussion,
best
yeah.
panel so far.
Appreciate it.
All the investment coming into this space.
There's a lot of investment coming in this space. I mean, Tampa Bay has been a great place to build. I think, Kathy and the team coming down here really put a stamp of approval on it. So we expect to do a lot more. A lot of great builders. So calling builders, early stage builders looking to understand more about what we're up to at ARC and what we see as the future here in the Bay. Please reach out. Love to meet you.
Awesome. Chris, are you based here in St. Pete as well?
I'm in Tampa. I'm
You're in Tampa.
But I work in St. Pete every day.
Awesome, because I live St. Pete downtown, so I see Kathy.
Oh, perfect.
Pretty much all the time.
Yeah, I'm there 4 days a week, or 5 days at home. So yeah.
All right, awesome. We should connect then after.
Great.
Awesome.
Cool.
Yeah.
Awesome.
Great panel.
Thank you.
All right, thank you guys. Enjoy the rest of the event.
Appreciate it. You too.
Awesome. Thank you. Appreciate you. So we have people from ARK Invest. They're all local here in St. Pete, which is awesome, by the way. St. Pete, Florida. That's where I live. People just grabbing lunch. You can actually go from this side. There's more conversations here inside the room. We have Juju. Hi, Juju.
How are you?
And that's the lunch. Let's see what happens here. Gary is standing at the bar right now, talking to someone. So I'll try to sneak in there. And hopefully we're not gonna lose signal. Hey guys, comment below if you wanna ask any specific questions. You're seeing Gary's art. It's literally all over the house. So the art pieces are everywhere. You can check it out here. Beautiful. With Adrian, Heidi. And we have Gary here. Let's zoom in to Gary. Gary's just having a conversation. So that's how it looks like. That's the networking.
But they're just on a larger scale.
Exactly. And just slightly better. And I like it because they don't hate it. So I've used them personally. I don't work for them, but I'm a huge.
Right.
If I can.
You wanna go on?
Yeah, let's do it. The market's up and down.
Hey guys, we're streaming live, so we have over 3,000 people. You guys just want to say hi?
Guys, how are you? Hey guys.
Yeah, awesome. Awesome panel, by the way.
Yeah, it was very
Great job.
interesting. I mean, I got here earlier today, so unfortunately I wasn't here like on Tuesday and Monday, but it was super interesting. I mean, all the talks and first time, doing this with Gary, so it was like really, really interesting for me. And just the level of people here and the attendees is really top notch. So yeah.
Awesome.
Thanks so much.
Awesome. What's your name, by the way?
Ankit Mehta.
Sorry, what's your name?
Ankit.
Ankit. Nice to
Yes.
meet you, Ankit. Marcin.
Lorenzo.
Good to meet you. Lorenzo, good to meet you. Guys, enjoy your lunch and thanks for being here.
Yeah, then you're able to just move up and you go to the hot one.
You can if you want a lot. Like we've got millions of cubic feet. We could run a gigawatt of power off one site for 50 without having any interest plans. Like our equipment would die way before we have to. But for permitting, yeah, you can move if you need to. Like if you're permit for some reason you need to live 100 feet down like DNR's your corner of the shore. So they're like permits and stuff. In fact, the border was what do you have to do for mine? Both of those. And he's like, whatever it is, for mine. So it's a good playground.
Sure.
But why buy it 100 if you can make it 15?
And are you what the
I'm based in the Bay Area, Lost. And now I just bought a place because I'm there so often.
You're gonna be in the grid, off the grid.
I love it. I love being in Alaska. It's the wild, wild west.
No,
Like everything
sure.
in this
No,
state.
and you were right. The last frontier truly, and it's beautiful out there.
It's beautiful. We have everything. Ambient temperatures, land, energy, beautiful regulatory environment, cool people. It's like, what else? Why would you go south?
Right, I know.
Well, transportation logistics.
Right, yeah. Our roads don't disappear in the spring.
Yes, ice road truckers. We love it. How
No, I
cool is
loved it.
that? Come on.
I loved it when you actually brought that. I didn't watch a whole lot of it, but I watched a few, and I'm like, oh my god, I know exactly what you're talking about.
That's it. There's because it's one road. It's not like oh, I need to tell you about the one we use. It's like there is one road,
Right.
and it tracks the Alaska pipeline. It's called the whole road.
So are they still using? Were they Christmas trees? Or am I thinking? Maybe I'm thinking Michigan,
Oh yeah, no Christmas trees.
just to line the road.
We don't have no. It's just tundra. We got caribou crossing it all the time. It's beautiful.
That's just cool.
Adrian, what a pleasure to visit.
Yeah, I sent you a message there, so
Yeah.
you might want to pick your brain more about it. Now you're,
Get into
I'm
gear.
turning 50, right?
While you're thinking about it.
Yeah.
Why not earn money on your money while you're
No, and that's the main thing, right? Just making more sense. That's why we're all here,
That's why we're here.
bringing all these.
I love it. A bunch of
minds together.
revolutionaries.
No, absolutely.
Adrian,
I've seen.
good to meet you, my man.
Same here, man. What are you up to?
Man, just walking around asking people questions. So
Yeah.
let's talk to you then. What brings you here?
Oh, man. I mean, really, truly, it's the industry, right? Always seeking more knowledge and better connections. And I've done a lot of different little conventions and whatnot, but truly coming into, I love what Gary did here. Phenomenal people, phenomenal event. I mean, the spot here is amazing. But what makes it even better, dude, is that it's on a smaller scale. The relationships, right? The community. I think that's what we're kind of all here for is to kind of network and meet each other just in real life. But it's kind of doing this little bit of a collaboration and truly a learning experience with people here locally on a smaller level, not in some huge conference room. And it's just a little bit more personal.
With
right?
with an incredible view.
Beautiful view. But what's crazy is I'm not even taking it all in, right? I'm just like, man, this is it's just
Breathtaking,
meeting
yeah.
people, man. I mean, obviously I'm on X quite a bit.
What's your handle on X?
Realtor Adrian.
Realtor
fancy.
Adrian.
I know.
Go
I set it up way too long ago.
Go follow this guy.
Yeah, absolutely. But I mean, truly, it's a great. The food's been great. Everybody's been good. The evening events have been awesome. So, dude, I'm just loving it, man. This has been truly one of the better events. Getting away from like the 1,000 people events or multi-thousands. It's been pretty cool, man. I'm actually truly enjoying it.
That's
Been
awesome.
here the whole time.
Where did you fly in from?
Albuquerque. Good old
Awesome.
Albuquerque, yeah. So we flew out on the other side of Florida, drove back down here, spending what 4 days, 4 nights here, and heading back Thursday, dude. We'll probably be driving around.
And what's your business?
Real estate.
Do you have a company or anything? That
Yeah,
you'd like to
several. I mean,
mention?
the big one right now is BTC Capital. We're pivoting into the multifamily space, of course, trying to look out for avenues of converting some revenues into digital assets, preferably Bitcoin, or reversing that. Maybe we're buying more Bitcoin and getting the lending portfolio, and then actually maybe buying some family assets.
Awesome.
Stability, man. With a little bit of upside, bringing it all together, tying it together. I think that's anyway. I mean, that's part of it. Trying to figure it all out, man. It's like seriously, like and you start talking to more people and kicking around different ideas, and it's a collaboration for sure. And I think that's what one of the biggest parts is just being around phenomenal people, right?
That's right.
And Gary did it. Dude. Gary pulled it all together. It's been beautiful, dude. Really enjoying it, for sure.
That's awesome. Hey, thanks for being here. Have you had lunch already?
No, not yet.
Okay.
Line's down now. I'm gonna go get some great food.
All right, awesome. Go grab something before it's all
Yes.
gone.
Yes.
And thanks for being here, okay?
Absolutely, man. Appreciate you guys.
Take care.
Seminole Indians in the Everglades of Florida. They recorded a great white rain, like snow coming down. It looks like every 800 years they have an ice age. This guy's been calling me since like 2008. He was a coffee guy. I've been wanting to say, now you're pregnant. Now you're pregnant. If you got gloves, well, it's going to be sitting there. Then you're going to put right. Yeah. Once you see that first stage, you're like, you see the correlation between you. You're really smart. You're not done. At first, I was curious what you. The sparrow. Yeah, sparrow. And then I got it. I was like, this seems a little of an aberration in storyline here, but then it all came tied together. So yeah, I could see why you were everybody like to pay attention. Because at first, I was thinking probably saying highways, but it's just have to do. Yeah, well, I found the parents. You had lunch already? What did you get?
Cuban sandwich, grapes, pineapple, cookies.
Glad you didn't up there because I would just ask Gary.
I do have my lunch as well.
I think you should go. You want me to hold the phone for you? So you get some lunch?
And
yeah, you can talk to them as well.
Okay. So I am pronouncing it again?
Marching.
So I am Martin's assistant. He's going to have lunch and I'm taking over temporarily.
That's right, yeah.
If you have any questions. No, I'm going to stay right here.
I can definitely
You want to go around? Okay, great. Yeah, go eat, please. This is Gary, this is Perry, and we have another gentleman here having lunch. We'll walk around a little bit. It's more lunch being served. Look at this beautiful view here. And I am on Twitter, Migena NYC. Look at all these gentlemen talking Bitcoin, crypto, Ethereum, digital assets. It's Peter right here. Peter is a wealth of knowledge.
It was early internet.
And we've got some lunch here. Guys, like the tour, I can continue with the tour. I will tell Gary you said hello. Todd. Oh my God, I missed you, Todd. Why aren't you here? This is Migena. We met at Grants. So good to see you, my friend. Do you have a question for Gary? Unless we're a different Todd. John Gillen. Look at John Gillen rocking those glasses. John Gillen, tell us, how has it been?
How's it been? Delicious and informative and exciting.
I love it. Wow, you see, he's got the answers. We won't bother you. You have to enjoy the sandwiches and the cheeses and all the good stuff.
Okay.
Have fun. I'll let my drink at Gary's table. Let's see. Do you guys have any questions or any comments? I think I can just start with another top, but he will forgive me, of course. And there's more people in here having lunch. That's Chris, who was on the panel just now and crushed it. And this is the guy who usually is on camera.
To comment, who is better, Migena or Martin?
Oh, God.
But anyway, it's Eminem.
I have better accent than you, but we are Eminem. You're here for the free food. There we go. Guys, right? We have the guys taking pictures, and we are going to stalk Maurice. Maurice Ruman. You see, like I'm stalking you. This is him getting some food right now. He's been working very hard. And I'm right here. I think you can see me from the mirror. I'm like right here. See, we have to improvise. And there's the table who loves the sun. You guys should be here next time. This is incredible. The knowledge, but most importantly, the people's energies. And Chris here did a great job. We're on Twitter. Chris did a great job. We are on Twitter, live on Twitter. And I'm sharing with everyone how an amazing job you did today.
Appreciate it.
Speaking about the company. Which company are you again?
Ark Invest.
Ark Invest. They are based out of St. Pete.
Yep.
And they love how they get to start at home first, invest and make your locals a lot of money and then go outwards. So I love that. That was my biggest takeaway.
Yeah,
So
we're trying to
thoughtful.
bring it here instead of going to New York or.
I am from New York. You better come to New York too.
Well, we always got to go to New York too, because a lot of the talent's there. So our
Right.
thing, what we like to do is, hey, we make an investment, just come check it out. There's no mandate to move here, but just come on down for a couple of weeks in the winter when it's nice here, and just see if you like it.
And are you on Twitter?
Yeah.
Where do people find you on Twitter?
It's my last name. It's kind of a palindrome. It's at PIZZO ZZIP.
Okay, perfect. And then people can reach out to you. Are your messages active? Because some of the accounts don't have that option available. So if anyone wants to reach out to you, they can. They can. Wonderful. Okay, you got that. Chris is amazing, super approachable. And I learned so much today on the fireside chat with Lorenzo and Gary. And their partner, Kyle, is here. Super cool. I mean, it makes sense. Cool people hang out together. Thank you, Chris.
I appreciate it.
Yes, you got it. Who else do we want to interview? And I'm staying within the geography here because I do not wish to lose service. I was told I cannot lose service. But let's see. This is Gary and Perry. And we have Edward here. We have Akanksha. We have Jennifer, the CEO of 40. And we have a lady named Kelly.
Yeah, Kelly.
Kelly's rocking those glasses. You're on Twitter. And Jennifer hangs out with all the cool people here. See this? She knows. We're on Twitter. I am replacing Maurice. I'm like, you need to take a break, have lunch. I'll continue this, and I'm just. Yeah,
Nice of you.
he's not fired. No, I'm just a temporary solution.
Okay.
Yes, but enjoy. Say hi.
Hi, everyone.
And there's more people here. Oh my God, it's a beautiful location. Yes, yes, thank you. I mean, beautiful doesn't cover it. Beautiful doesn't cover it. It's incredible. I don't know who else I need to interview now, but this lovely lady here with a. Have you been interviewed yet?
No.
Okay, well, oh, perfect. So we are on Twitter, and everyone can see us. I actually was getting ready when you were speaking today. So even on my way to here, I did not miss a second of the presentations. And your name?
Sparrow Mahoney.
Sparrow Mahoney. You guys, when she starts speaking about Alaska, I was born and raised in Albania. I'm like, here's another lady who loves her country, who loves her state, who loves her city. And can you share with the Twitter community the amazing things that are going to happen in Alaska and how is that going to impact the world, but especially the United States being like the essence lately of energy, innovation, AI, crypto, Bitcoin, please.
Yeah, to power that, every engine needs fuel.
So if it's AI, data centers, Bitcoin, where's your fuel going to come from? If it's not going to come from areas that have massive population or no energy, it's going to come from places that have room to grow. Alaska's just waiting for us. So the ambient climate is very supportive of all the engineering logistical challenges. The people in Alaska are hungry to lift up together. It's unbelievable. It has more stranded energy than any market in the world.
And
So,
something else I loved
it's
about
American.
it's American, and something else I loved about many things I loved about what you had to share was when you had a call to action for investors who are partners, hands on, not the investor that's the LP, call me in 5 days, call me in 5 years when returns are there. No, from day one, roll up your sleeves, let's get involved, let's get this done together because we're building this together. And I love that investors now get more engaged and they learn and they feel it, which means they care about it a lot more than someone that's detached, right?
Our time as founders
Yes.
can be spent on something, right? I can only spend this minute one way. So if I spend it trying to convince you that what we're doing is meaningful, I can't actually build something meaningful. I just chose to spend it trying to convince you.
And the energy.
Yeah, you can't push a string, you know?
You can, no, that's right. Wasted energy for real.
If you get it, right? If you want to be a part of the revolution instead of reading about it, jump in, take risks.
That's right.
Not me personally, whatever, but
that's right.
Find founders who are being bold enough to matter.
But also transparent.
Yeah, and radically transparent. You know, you want to know what our weak spots are, what the problems are, you're going to hear about it because I'm not going to hide it anymore.
You don't want to find out. You want to be informed. You want to wake up in the morning with the answers so no one asks questions.
My favorite analogy is from the book or the movie The Boys in the Boat.
Oh, nice.
Rowing movie, right? And it's a beautiful, the coach says at one point, he's training an Olympic team. It's a really great story. But at one point he says, I don't understand. It's 8 guys in the boat. He said, there's out of the 10 fastest rowers I've ever seen in my whole career, I've got 8 of them in that boat. But we're posting the worst times. Why? They weren't in harmony. So if I bring the wrong capital to my projects, it's poison. It's going to stop.
Oh my God, I love it because when people ask me, how did you find the role? How did you find the opportunities to be of service to families, family offices, and founders, being that bridge? My answer is always the same. It found me. You don't go look out there, it finds you because you attract who you are, long run, long term. Now, are you on Twitter?
No.
You're not. So if
My name is Sparrow. I'm not on Twitter. That's pretty bad.
like seriously, you should be account number 1 after Elon Musk on Twitter.
I love it.
We'll change that. Where can people find you outside of? Are you LinkedIn?
I'm on.
What's your handle?
That's Sparrow Mahoney.
Sparrow Mahoney. Let's do this.
Yes.
This way for anybody that wants to. It's right here. There's only one Sparrow Mahoney that rocks the yellow. I'm the second, but I'm also brunette. So reach out to her. She's phenomenal. Enjoy. There's more people here. You were phenomenal on the panel. I was not here physically, but I'm applying my makeup and I have Twitter on and I did not miss anything from your shares. Have you shared today with the audience outside of the panel? We are on Twitter right now.
Yeah, no, I haven't. I'm actually worried about that. I
So,
should get better.
who are you? Where are you? Why are you? Tell.
So many questions. Yeah, absolutely. So, I'm your customers.
Why are you? That's my favorite question, by the way. Why are you? What?
100%. So, I've been in the space for 10 years.
Which space specifically? There's
The
many
crypto
space.
space.
So in the crypto space, 10 years.
10 years, yes.
Did it find you or did you find it?
I think we found each other.
Okay, I like that. That's a better relationship.
Yeah, absolutely. And it was love at first sight, you know.
Hey,
And,
nothing beats that.
And then, you know, just
You've married forever.
absolutely.
Divorce is not an option, I say. Once you're in crypto, divorce is not an option. Think hard.
Exactly.
Because there are no attorneys in that space. You cannot file for divorce. So where do you live?
I live in Florida.
Oh, nice choice.
Daytona Beach area.
I love it. So you are in the crypto space for 10 years.
Yes.
For anyone who is not involved with crypto, but wants to, especially with what's happening in the world
Yes.
past the elections, what is the first step? What does one do to begin?
Absolutely. Education.
Educate. Which book do we read? Which website do we go at? YouTube. Where do we start?
There is a lot of great information in YouTube.
Okay. Okay.
And
Podcasts.
you can just go to whatever exchanges, right? They have
Okay.
frequently asked questions. They have really useful videos.
Okay.
And sometimes they can just play with it. You know, they don't have to invest all their life savings. You know, the
And I
first
love
time
that.
around. They
That's
can just
right.
do $10. You know?
That's right.
So have them play with it, feel comfortable. You know, get used to the mechanics, and
Be a consumer.
I'm sorry?
Be a consumer. Start practicing with an amount that you will feel extremely comfortable and you won't lose sleep
Exactly.
the next day and you pretend as if you never had that. But what came out of that, even if it was a loss of that $50 or $100, is the knowledge of what not to do, which in my opinion is priceless.
You're bound to make mistakes.
I hope so.
And the mistakes are things like I remember when back in the day I sent a good amount of money to the wrong chain, and it got stopped.
Okay.
Well, guess what? After that, I never did it again.
Wow, I love it.
Because it's in my brain.
But it's
fear to
but
the end.
in addition, not only you, but you also went and told your friends about it. You actually you did preventative maintenance for many others because of your own due diligence and the hiccups.
Absolutely.
That's amazing.
I'm happy to tell people the mistakes that I made so they don't make it.
And that's why you're successful.
Ah.
So tell me your name again.
Javier Cáceres.
Javier, are you on Twitter?
Not very much, as I said.
But do you have an account?
I do have an account.
What is your handle?
It's very easy. Interim CFOs.
Interim?
Interim. INTERN CFOs.
Interim CFO. So when you follow, is your message active? Meaning, does your account have a message option if people want to send you direct message to connect with you?
Yes, you can send me direct messages via Twitter. I don't tweet a lot.
That's fine.
But yes, you can find me, or you can find me on LinkedIn.
What's your handle on LinkedIn?
It would be Intern CFOs.
Intern CFOs. Now,
And also in Telegram.
Telegram.
Intern CFO.
Intern CFO. What is the one thing that differentiates you from the rest of the professionals out there? Something that you solve for people. Like, what are you bringing to the table? What solutions are you known for?
Yeah, I think several things. For one, we have a lot of experience in the field.
Okay.
But we also care. You know, we're high touch. We dig deep, and we enjoy the difficult cases. You know, and the difficult cases are the most rewarding because if I'm able to solve it for you, I'm gonna be able to solve it for a lot of other people. And every time I do that, it just makes my practice and my employees even better. And I bring all that knowledge because I'm not just accounting, I'm a support system. Okay?
I love it.
I can help them with taxes, I can help the CFOs, bookkeeping, accounting, but HR or whatever else they may need, I'm happy to help them out. Okay? And make connections. That is almost just as important as just getting your accounting right.
It's phenomenal. So interim
CFO.
interim CFO, and this is Javier for us. I think he is very hungry. He has to go grab some food, but you know where to find him. So reach out to him. He's extremely approachable, just like you see him here. That's exactly how he is off camera, I promise you. And he had an incredible panel today. It was very alive, lively, and I truly enjoyed it. Thank you, Javier, so much.
Oh, you're very welcome.
Yes, enjoy. And you and I need to catch up.
Absolutely.
That's the beauty here. You are in these spaces for 3+ days, and you screen the room, and you're like, wait, there's another 85% of the room I haven't spoken with, because you think you're going to shake hands with someone, and 2 hours later you dive deep into life, passions, missions, visions, and you're like, oh my goodness, can we have like a 2-month retreat?
And that's the beauty of this space.
Right?
Well, anytime you go to a conference around crypto, that passion, everybody's super happy to share their projects.
And I'm passionate, and this is my first crypto event ever.
Oh, really?
I'm like a crypto for dummies kind of situation here.
Okay.
And I'm telling you, this is day 3. God, half the world thinks I'm the expert already. And you know what? You know what the secret is? Surround yourself with the people who know what they're doing and are not stopping there, because power of association is where it's at. It's not reading 10 books. No, it's actually having direct access to Javier's of the world on a speed dial before you hit that button and make that investment. Double check, triple check, quadruple check, and it's going to pay off. And that's why you come to these spaces, because nothing beats in person.
Absolutely. Have a teachable spirit.
Yeah, so I'm excited that I'm learning more and more. And again, grateful for your beautiful brain. Thanks for sharing. Talk soon. Okay, who else are we going to interview? What else do you guys want to know about? Serious conversations here still. We've got Mr. Steven here.
Hello.
Hi, Steven.
Hi.
How are you?
I'm doing pretty
Just stay here because we get Gary on the background.
Who am I talking to?
This is Twitter Spaces.
Okay.
Elon Musk. I think he's also watching.
I see.
So tell us who you are, where you're from, and what brings you here.
Stephen Malinak. I'm currently in New Hampshire. And I'm here to talk to you about digital assets and what we're going to do with them.
Oh, wow. What problem do you solve for people?
What problem do I solve for
Yes.
people?
What do you offer? What solutions do you offer? I mean, I think it's the same question.
I mean, I'm an independent consultant, so I can offer solutions to lots of different things.
I love it. So are your clients national and international?
Yeah, I've worked all over the world.
Wonderful. Where do they find you, Stephen?
Where do I find?
Where does someone find you? If someone wants to hire you as a consultant?
Normally people that I've worked with before.
So it's word of mouth. But for the people who are here on Twitter right now, if they want to get a hold of you, do you have a LinkedIn account?
I have LinkedIn. Well, Chipstack NH is my Twitter.
Chipstack?
CHIPSTAKNH.
That's your Twitter.
Yeah, that's.
And your message option is open if someone wants to directly message you. I always ask that question because people, but we have no way of direct messaging them because that feature is off.
All kinds of randomness shows up there.
I love it. Well, how do you like the conference?
It's been fantastic.
Isn't it amazing dressing up, enjoying and talking to people, getting to know people? Have you made good connections in this space? Yes? I know I'm one of them, of course.
Absolutely.
Yes, but just wanted to say that out loud.
All right.
Yes, a message for anyone who is still skeptical to get into the digital world.
Buy Bitcoin.
But that's going to be Steven's new shirt coming up, t-shirts and hats.
Yeah, every time someone catches me with a camera on a live stream, it's been what I've said. It seems to be working pretty well.
Buy Bitcoin. What a powerful message. What a powerful message. Simple, easily to digest. Buy Bitcoin.
Yep.
And if you don't know how, figure it out.
Yep. Plenty of people can explain how that works.
Thank you so much, Stephen. Enjoy your time.
Thanks a lot.
You're welcome. Let's find the owner of this phone. And let's see where this gentleman is. I think he's hiding. He's like, oh, I see him. He's at the bar. You get, look, can you see inside the house? No, right? I don't think you can see inside the house. Maybe you can see a little bit. No, you can't. You can't see inside the house. But if you look at this is the background, but it looks nicer from the windows. And then look at this now. Oh my goodness. Incredible. Incredible. And we've got gentlemen here.
Just right there.
Michael Desmond, George Richardson. Oh, wow. And Rob Massey. So, Rob, people had the pleasure of meeting you earlier today.
Yes.
Because you were on a panel.
Yes.
With Javier and some other people, I believe.
Yeah, crypto tax.
Oh, my God. I mean, who wants to learn crypto tax?
Let's do crypto tax.
We do?
Yeah.
Mike here.
There's quite a vibe in there. I've seen that kind of a vibe in the tax world.
I wonder because, yeah, that's not a sensitive topic at all. There's just like zero passion there. Yeah.
People do talk about it. They care. They care about that taxation of crypto for sure.
I love it. Well, one message for the Twitter viewers here. First and foremost, are you on Twitter?
Absolutely.
What is your handle?
MassERL.
MASS?
EY.
EYRL. Are your DMs open? Meaning, is the message feature available? So that's where people find you.
For sure.
Are your clients international, national?
100%.
Fantastic.
Yeah, we're a large professional services firm. Our clients around the world, and we serve crypto projects
And we're going
globally.
to Zoom right here.
Yes,
We
of
need
course.
that. For the Albanians who don't know how to spell. I'm just thinking for my people. Mr. George Richardson, let's
Yes.
go here. Are you on Twitter, sir?
No, I'm not on Twitter, but available on LinkedIn.
Jesus,
The
we've
name-
got an accent. Keep
Yeah.
going.
From Chicago. Yeah.
I was going to say either Chicago or
That's a
Detroit.
double word if people want me to say it.
Where are you from, George?
London, South London.
Did you travel for this?
No, I live in Chicago and have been for the last 3 or 4 years.
Michael wasn't lying. You see, tax people don't lie. You guys, seriously.
Crap.
He's a very
Compliance.
For God's sake, stop with that conspiracy theory. Honest people. So where do people find you?
LinkedIn.
It-
Yeah, name as it says on the tin. Yeah.
George Richardson. And you accept people and you interact with them if they want to ask you tax questions.
Yeah.
And I love that you bring that international, I guess, vibe into the table for all of us Americans, but really like non-Americans because we were born outside. So it has to be global. Yeah, culture matters too. And Michael, are you on Twitter?
I am not on Twitter.
What's wrong with you? Elon Musk.
Same
is
thing
not
that's wrong
like
with
that.
George. Yes.
He-
Yes. So
I mean, he's European. I'm not giving him a hard time because we're
I
kind of
grew up doing
cousins.
tax litigation, and so I've got the litigator skepticism.
Ouch.
My social media is on Strava, so you can.
I'm very afraid of Michael. I'm very afraid of Michael.
Yeah.
And watch the swim.
And watch the swim.
Right?
Right.
The
Yeah.
open water swim.
Michael, where do we find you?
You can find me on LinkedIn as well.
At
So
Michael Desmond.
Michael Desmond, yes, Gibson Dunn.
I love
and,
it.
And on Strava. So if you're on social media and you follow us,
Strava. I've never heard of that before.
connect later. Yeah.
Wow. Hey, I know
For athletes, just so you know.
I'm not an athlete, so oh well. Gentlemen, one message for the viewers. If they should consider being here next time, the number one reason why.
Very diverse audience.
Yeah.
Lots
Yeah.
of different threads.
Yeah, I think meeting and connecting with different people who are part of the industry is more in a small, intimate setting. I think it's the great way to start.
I love it. Thank you, George.
You've got solid content, really good participation, small setting, beautiful setting. So it's got all the right stuff.
I love it. Thank you so much. And
Thank you.
apologies for interrupting the
To the
flow.
Albanians.
To the Albanians, that's right. Let me go find the owner of the phone. Thank you, love. Now I want to be seen on camera. That's me.
Okay, hold on. By the way, I just tagged Migena. So go follow Migena.
Migena NYC. MIGENA.
Yeah. Show us the new outfit today.
Today we are not wearing a dress. Today we are wearing theory, lavender blazer.
The best dressed person.
Shorts and jeans. I am not a paid endorser for any of these brands, but you can still buy them.
He's a volunteer.
I'm volunteering because that's what Mother Teresa did, and she was Albanian. So it runs in the family. I'm not wearing a dress today. I think let me wear jeans. Let me be a little bit more casual because it's the last day. We get to network. And I love interviewing many of our friends, and I learned a lot more about them through the experience of the Q&A. And it's been phenomenal. And thank you for trusting me with your audience. My Polish friend, aka Romanian. I'm just kidding. Anyways.
Is it because of Roman?
No, because I'm like Roman. I'm like, you sound so like Romanian, but you're not. But yeah, it's really incredible. And he did phenomenal, Lorenzo.
Lorenzo, yeah.
Thanks, man.
Thank you so much.
Yeah.
I give you a hard time. I'm like, I assign you one task and you don't follow through. I'm like, where is Anthony? You're like, ah. And he's
Hey
like,
guys, we gotta switch to panels, but yeah,
to the panel.
I appreciate you both. Great job.
genius.
Thank you so much.
Follow him. I am following him. Thank you.
Thank you guys. Appreciate you, Migena. Thanks, Lorenzo. Take care. So we're going back to the main room. We'll switch the camera.
Experience. I worked for 4 billion in offices here in the United States and abroad. So I worked on numbers of transactions and After my second.
To move, you need objective help. So that's what Alexander and I do today. So we can be on an investment committee or an advisor or help with investments. We also are angel investors. So I was really happy with some of the comments yesterday about investing in women. And that's also, I was really excited when Jennifer told me about this new position, because we really like to support female leaders in our investments. And you can see that on our website, or like I'm in PitchBook. So we also syndicate deals, and then I also manage some money for the state of Maryland. But really, we're not here about me. We're here to talk to these two. We want to dig in more about blockchain and their businesses. So first, I'd like to pass it off to Todd, and he's got some slides and a video to show us.
Yeah, I'll just introduce myself briefly, and I also want to thank Gary and the Node 40 team for putting on this amazing event this week. It's really been a privilege to participate and be a part of it. I'm an attorney by education. I am not a crypto bro by trade, but I've worked the last 10 years of my career in transportation and in transportation trade finance. The single largest problem in the U.S. supply chain is cost of capital. Nobody talks about it. Nobody realizes that, or a lot of people don't realize anyway, that the transportation industry in North America is worth about $3 trillion. That pay terms are 30 to 180 days on a lot of transportation transactions. The majority of companies can't wait 10 days to get paid. They certainly can't wait 30 or 180 days to get paid. So they have to sell their receivables. They have to sell their commercial paper assets to banks, intermediaries, what are commonly referred to as factoring companies. And this costs them a ton of money, and all to get paid in 10 days, right? So they don't have to wait to get paid directly by shippers or debtors. So, during COVID, I was in the process of moving on from a company that I was working with, and Walmart is a former customer of mine. I've been customer facing with a lot of Fortune companies. The majority of the freight on the road, just by percentage, right, is big food, big CPG. A lot of this corporate paper is, AAA, AA. I was constantly seeing all these companies struggling. And we're coming out of the worst freight recession on record. And there's a lot of reasons for that. But in the last 3 years, we've lost 50,000 trucking and logistics companies in America and in Canada. And the big reason for that is cost of capital. So during COVID, I went back to the Satoshi thesis. And unfortunately, I was not as early to Bitcoin as I would have liked to have been. I didn't get introduced to Bitcoin until 2017. But I remembered a couple years later that the point of the technology was disintermediating third parties, making cost of capital lower, increasing efficiency and mitigating costs for B2B settlement, peer-to-peer settlement. And I was like, that is exactly what we need in the supply chain, because we have all this wasted financial cost. And who ultimately is paying that? All of us, right? Anytime you force these transportation companies to absorb massive costs of capital, all of that rolls downhill. Right. And the number one political issue in the country for the last 10 years probably has been cost of goods. So not only have we been paying an inflationary tax on everything, we're also paying what I like to refer to as a silent factoring tax. And when I explain that to people, most of them, like their jaws drop, like they have no idea that we have this kind of like shadow economy or, secret silent tax on the supply chain. But that was what TCS was built to do. And we can talk a little bit more about that as we go, but I want to certainly let Mike introduce himself. That was pretty long-winded. I'm sorry.
That was great, Todd. It's wonderful to be here, Gary. Thank you very much. All the people I've met, this is an amazing conference. Much better than ETH Denver, all the other places I've been. So. My background is as a quant at Lehman Brothers. I got into origination trading. I was a convertible bond trader. I got then on the buy side, I ran a hedge fund, did some ARB, then went to the, just long only side. 2010 or 11, actually 2009 happened, and you can imagine my feelings about traditional banking, being an ex-Lehman guy. So I went down the rabbit hole very easily. I bought some Bitcoin 2011. It's not programmable money. My background was credit. Credit is what really runs business. And that's what Bulla is all about. It's about tokenizing credit. And that's how I'm working. My first vertical is with Todd.
Excellent. So we can jump into the slides a little bit.
Let's go ahead and do that.
Makes sense. That's great. So I shared that, massive TAM on this, and about 70% of all the transportation companies in the US and Canada right now are factoring their invoices. Okay. Because of this, time value of money quandary that's rampant in the supply chain. Let's see if I can. Okay, there we go. So the solution is pretty simple. Right now, carriers are typically paying, and this is not just trucking companies. This is freight brokerages, and of course, this scales to really every sector of the transportation industry. But they're typically paying, 1, 2, 3% gross on every transaction to get paid in 10 days with a factoring company. Now, that doesn't sound that bad, if you're just kind of thinking about it in a general context. But if I'm a 3-truck operator, and by the way, about 90% of the trucking companies in the United States are 3 to 5 trucks, right? A lot of people don't know that because we see the big companies when we're driving on the highways. But it's mostly small businesses, and these are the essential businesses, right, that we had to save during COVID when, the shelves were half empty. These are the companies that truly are the backbone of the American economy. But if I'm paying a 3% factoring fee on a $10,000 invoice, okay, and my net on that invoice is 10%, which would be pretty good, okay, 30% of my net revenue on that transaction is going out the door to a bank or a factoring company to get paid in 10 days. So at TCS, we have 10 users on the platform right now. We have 20 more onboarding this month. Our big hard launch is at the Mid-America Truck Show next month. It's the largest trucking show in the world in Louisville, Kentucky. They typically have like 100,000 people that show up for this event. So we're very excited about that. But we're doing this now. We're settling freight AR on chain. TCS was the first company in the world to do that. And we're able to do it in 1 to 2 business days, up to 90% cheaper than factoring. I get a lot of questions about adoption. Are trucking companies or logistics companies, are they going to adopt blockchain technology? If you're talking about saving companies, and these are entrepreneurs, right? A lot of them, these are small business owners. There's a lot of tech that's moved into the transportation industry over the course of the last decade. If you tell people you can save them 20, 30, 40, 50% of net on every transaction, and that takes 2 clicks on an app, the adoption is going to come pretty quickly. And it's also very interesting. Right now, TCS has $150 million organic pipeline of users waiting to onboard. Our issue has not been demand. It's never been demand. It never will be demand. Our issue has been access to liquidity because of, and I'll just throw out the caveat, I'm a libertarian, but Operation Choke Point 2.0 is real. TCS was debanked a couple of years ago, even though we're trying to solve this problem to the benefit of small businesses, households, and consumers, right? Access to liquidity has been the problem. But the good news is really, we're in a whole new world now. And I can tell you that I had senior banks reaching out to me following the election results. So that was a very, very compelling sign. But we're able to settle these folks in 1 to 2 days on chain, up to 90% cheaper. We can do that through our proprietary mobile app. A lot of freight AR, though, still moves through email. There's a lot of automation that's needed in the industry, but I believe that will come, and I believe that blockchain will be a big part of that. As I shared, TCS was the first mover in the space. This was an article that was published in February of 23. It was picked up by Yahoo Finance about how this is a real world solution created by digital assets and blockchain, right? I don't mean this as a controversial statement, but creating Bitcoin ETFs is not a Main Street use case, right? That doesn't help legacy industry. That doesn't help Main Street. That doesn't help owner operators who are driving 550 miles a day trying to deliver the goods that all of us consume. But this is a real product market fit and value proposition for those folks. Also, you don't have to take my word that the entire world is about to change. Goldman Sachs is in the process of building out a B2B platform for not specifically transportation trade finance, but for trade finance writ large between businesses. So we certainly don't expect that we're going to be alone in this space for long. But the good news is we've got a very nice head start, and we're building some nice moats with respect to how we're offering this product and the way that we're differentiating from the incumbents. I'll share too, the largest incumbent in the space right now is a freight factoring company out of Texas. Their AUM is 60 billion. And I can share with you as a former customer of theirs that they have no tech stack. Okay. Their service is expensive, it's slow, and their customers hate them. All right. So that is the niche that we are disintermediating. And it's a niche that's ripe for disintermediation. And then, of course, you can't have slides without, a good graph at the end. But, as I shared earlier, this factoring problem is not unique to full truckload. Okay. This is a problem in rail, air, LTL, maritime. And we've already had folks from other industries approaching us about settling their AR on chain. I've had folks from construction. I've had folks from medical device. I've had folks from, I actually just got an email last week from a gentleman who runs a recruiting firm, and their receivables are typically 60 to 90 days, right? So it's a different paradigm because, you always have to look at the underlying assets. You have to look at who the debtors are. We're starting in full truckload because factoring is a rampant and systemic problem. It's a very fragmented marketplace with a lot of players, but the main reason is this is great commercial paper. Okay. The aggregate default rate on full truckload commercial paper in the United States and Canada is about 1.5%. I'm happy to share that our default rate right now is 0%. And all of this is really going to get more exciting in the next 60 to 90 days. I just finalized the agreement this week with the INX exchange. For anybody that knows INX, TCS token will be listed on that exchange later this month. And just in case it was lost in translation, all of these flows move through TCS token. TCS token is a utility token because it facilitates faster and cheaper settlement for these carriers. These carriers take settlement in TCS token because that's the only way they can get settled in 1 to 2 business days, up to 90% cheaper. So we're building this really fantastic Main Street use case for legacy industry. Bull is a huge part of that. We're going to show a really quick video that kind of outlines the A to Z of settlement. And then Mike, I think, is going to go a little deeper into the reads on the value proposition to accredited investors and the pools that he's building out at Bola. Ready.
In this video, TCS gives you a sneak peek at how we create invoices, factor those invoices, and then send funds to our client, all while operating on blockchain, utilizing a digital currency. Additionally, TCS is proud to have achieved a 0% default rate to date. First, we navigate into Safe Wallet, then Bola Banker. We open our Safe app, and now we're ready to create some invoices. After uploading the invoice data from our customer, we conduct a dual approval verification process to confirm imported data accuracy, requiring validation and sign-off by 2 authorized officers of TCS. Upon completion, our invoices are created and ready to be advanced upon. The invoices we've just created now show up in the Receivables tab as awaiting payment. We then select the invoices and click Factor TCS Invoices. Then, another dual approval verification process requiring validation and sign off by 2 authorized officers of TCS takes place. Now the invoices show as factored, and we can now move to sending funds to our client. With a few more clicks, we've uploaded the data needed to prepare the sending of TCS tokens to our client. Then, one final dual approval verification process requiring validation and sign-off by 2 authorized officers of TCS takes place. And with that, funds in the form of TCS tokens have now been sent to our client's digital wallet, and our funding process is complete.
All right, thanks, Katie. And now we can go to Mike's slides, the bullet slides.
Great, Todd. That was excellent. I wanted to say, Sparrow mentioned earlier latent energy. To me, the latent energy in blockchains is credit. It's just waiting to be monetized like this and to be financed. Bulla is on-chain private credit. I mentioned that already. What we're trying to do is we have a platform that brings business finance on-chain via tokenization, and then it finds people who want to invest in cash flows in those businesses. So next slide. Oh, sorry. Oh, whoops.
There you go.
Which one? Okay.
Right button.
The problem, traditional private credit is really expensive, as Todd mentioned, 2 to 3% per invoice. So it's killing the people factoring. The other problem is it's captured. It's a captured industry. And to get access, you got to go to a hedge fund. You got to put up lockups. You got to go through a lot of hoops and arrows to get there. And what this is doing is it's going to open it up to the blockchain. There's a huge differential. I talk about capital arbitrage. You can get, let's say, 4% staking, or you can get 15% in a reasonable factoring company. I think we can bring stuff on chain, and if I offer 10 or 11%, I'm going to get a lot of demand. So that's the idea. So we're fintech, we're just tokenizing private credit. This is a great picture. Also, along with that video, Bulla itself, you can get on and look at the fund itself. You can see every invoice that's in it. You can see whether it's pending, what the notional was, how much it was financed for, how much cost there was. And what happens is you deposit and you get back a token, and that token should appreciate dependent on what happens in the pool. So you can see this right off of our dashboard. Below you see deposits, redemptions. It's hard to read. There's more of a screen, but there you can see all the activity in the pool. And the process is, I've been telling people we mint IOUs. It's a dumb, kind of a silly idea, but business starts with credit and ends with payment. How do you, we've solved the payment part with Bitcoin, hard currency, but how do you manage credit? Well, let's mint an IOU, put it on chain. And that's what Bulla does. That's the core element of it. And then the lending pool understands those IOUs and says, well, you're in the underwriter. We know your address. Okay, we'll give you 90 cents. In your case, 80 cents. And at the end, the debtor, oh, I wanted to say too, when it gets switched, what's great about NFTs is there's a debtor and a creditor address in the NFT. If Todd finances, then the pool becomes the creditor address, whereas he started as the creditor address. That's what's great about NFTs is you can switch addresses and then switch ownership. Again, like I said, the latent energy is credit. Private credit is already booming. I think it's going to boom even more. Todd had a bigger slide, 10 trillion. Basically, this is a segue into a lot of other industries where working capital is a problem, where there's a kind of a David and Goliath relationship between people. And so we are now secure. We're a P2P accounting platform. We are going to improve cash flows for companies that use us. We're looking for more groups like TCS potentially to offer credit. And right now, we get real-time pricing is a big deal. When I ran my fund, it would take 3 months to get a statement. And then somebody would call me a month later and ask me about position X or Y. and it was almost irrelevant at that point. This is instantaneous audit. Basically, you can see all the numbers. Again, every industry has this problem. It's a giant problem.
Well, thank you for the slides and the visuals, but let's talk about both of your businesses and who are your customers, but also how are you funded and how can investors get involved in your businesses?
You want to take that first?
One of my customers is right here, TCS. The other customers I have are, I started way back in DeFi land, so I have a lot of degen people who use Bulla, a lot of DAOs and kind of mysterious people use Bulla. So I'm trying to get a little more mainstream. I would hope to get maybe a family office to use a wallet to deposit into one of our pools. I can offer a white glove kind of service to get you through that. If you're afraid getting a wallet or anything else, I can guide that way through. Once you do get it, though, I can assure you, you'll never go back, because using DeFi is night and day from any bank. And what was the other question? The other part?
Well, investors also. Like,
yeah, well,
how are you funded?
So investors, I'm funded, I'm bootstrapped, so I don't have any outside money. I am looking for money for Bulla, but primarily I'm looking for money in the pools to finance more AR.
Yeah, so customers for TCS right now primarily are full truckload carriers, freight brokerages in the U.S. and Canada. That's our initial focus. As I shared, those are the folks who are really bearing the brunt of these factoring costs. And we're really just focused on the hard launch in March right now. We're not actively focused on fundraising. We've got a very concise cap table. We're hoping to keep it that way, but we do have a Reg D 506C round that's open.
So I'm glad that we kind of moved to Main Street applications, because I think that there is a little intimidation factor about how to get into, I come from the investments world. So my view is always, how can I participate and get involved? Because it seems like it's not necessarily accessible to the average investor. So, but also I'd love to understand further, because it sounds like these are payment systems and that they can be applied to a lot of different businesses besides transportation. And these legacy businesses, like you said, marine on there and all these others, you're right. I mean, some of those industries are still working on pen and paper, it's incredible. So, could you talk a little bit about what are some of the applications? Obviously you started with one, but where do you see moving in the future?
Yeah, well, I mentioned previously that, the largest incumbent in the freight factoring space has a $60 billion AUM. If all we do is catch those guys in a year or two, that'd be wonderful. But, this can scale to a number of other sectors in transportation and other industries. And this is like 3 to 4 layers deep into the onion. But the kind of the blockchain magic that we have here is, and it's, because I often get the question, well, why don't you just settle in Bitcoin? Why don't you just settle in USDC? Why don't you settle in Tether? The answer is a little complex, but it's simple in the sense that in order to settle in Bitcoin or USDC, we would have to buy Bitcoin or USDC. And then if we're charging our carriers 1.1% on net 30 paper, that's the extent of our profitability. Right? Basically, we're a factoring company that has a blockchain front end. By settling in TCS token, when we originally minted our token out at the University of Wyoming Advanced Blockchain Lab, which was funded by Charles Hoskinson and Cardones, we minted it at a zero cost basis, right? It cost us nothing to mint those tokens. Now, when you mint a token, you have to make a market. You have to find product market fit. You have to find a value proposition. Unless you're a meme coin, right? If you're a utility token, you have to have real utility. Okay, so there's costs associated with building all of that. But when we settle in TCS token, and we kind of perfected this on Uniswap, as soon as we started moving these huge flows through TCS token on Uniswap, we immediately saw about 2% secondary market participation. on Uniswap because it signaled the bots, it signaled the secondary market, oh, wait a minute, all of a sudden there's all these flows moving through this token. Well, 2% makes a really big deal because if, you know, we're charging our user 1%, and I didn't discuss this earlier, our users want to immediately divest, right? They don't want to sit in TCS token. They don't want to sit in USDC. They don't want to sit in Bitcoin. It costs $1,400 to fill up a rig with diesel right now, okay? These folks need to get to liquidity. They need to get to fiat, and they need to do it now. But so once we fund them, we directly deposit tokens into their wallet. They can divest. We have a demo on our website. That entire process takes 30 to 45 seconds. Okay, so you know, there's always questions about volatility in crypto. There's not a lot of volatility here. If you want to divest immediately, you can. So they then sell to the secondary market. Now, when the secondary market picks up 2% of the new supply that's just hit the secondary market, that's a revenue delta for TCS, right? Because that means as the buyer of last resort, TCS only has to buy back 98% of those tokens on the trading day. So while we only made 1% settling our user, we made a 2% delta on the back end, which means we made 3% gross, which means we're now making more than the majority of the incumbent factoring companies. So that's the big reason that we settle in TCS token. What would be fantastic for us later this year is if we got to something like 3 or 4 or 5%. And this is where we get real magic, because if we can get to larger numbers in terms of secondary market participation, now, not only do we have, you know, people getting engaged saying, I want to mitigate supply chain costs, I want to support truckers, I want to be invested in this Main Street use case. But what that means is we can now reduce the settlement fees that we're charging users. At scale, we might even be able to reduce it to nothing. And if we get to 0% factoring costs for transportation companies in 1 to 2 business days, it's going to be very difficult for anybody to compete with that. So that's kind of the larger picture that we're working towards.
So then, I mean, it started in transportation, but really is the end game the token and the ability on that in the secondary market opening up?
Well, if we get to the point where all of the supply moves to the market and we're able to, let's just say, take 60 billion plus in market share away from freight factoring, and all of that volume is moving through TCS token, and all of those commercial paper assets in PDF form are moving through our proprietary mobile app, there's all of a sudden like a million other ways to monetize all of this, right? So there are some much bigger plays on the roadmap, but it kind of all starts with, you know, faster and cheaper settlement, which is facilitated by the token.
Yeah, there's a little more too. There's if you are an investor in the pool that finances all of these TCS tokens, you get a token as well. That's similar to a stable token, but it has a yield. And a lot of people are looking for that as well. So you can help facilitate this whole ecosystem by depositing some money into the TCS, pull a TCS settlement pool, and watch. It should stay at $1, but then accrue.
So there's more than one bite of the apple.
Yes.
In all of this, you're not just investing in the binary one thing.
Yeah. Okay. Well, because to get a TCS token, you have to have delivered freight to Walmart, and I don't think anybody here is delivering freight to Walmart, right? So there are 2 ways to get involved. You can buy the TCS token on Uniswap or off of INX, or you can help finance the whole ecosystem via BOA.
This is a good segue for me to make a shameless plug for Node 40 as well.
Please, right ahead.
Yeah, because the reason that I think the relationship developed between TCS and Node 40 is we believe later this year we've got a shared customer. Yes. Right. If you're a 3 to 5 truck operator, or maybe you run a $50 million a year freight brokerage, right? And you start taking all of your settlement on chain, or let's just say, you know, a good tranche of it. You start taking all of your settlement on chain with TCS token at Uniswap or some other exchange, right? You're used to taking your data at the end of every year to your CPA, and your CPA is going to have absolutely no idea how to manage any of that. So in our minds, a CSV from Node 40 is needed. This is also a great way to, you know, kind of support all 3 companies, because we believe that a lot of these trucking companies and transportation companies are going to need the infrastructure and resources that Node 40 provides.
So these are both relatively early stage companies. So it would be great also just for us to understand, what have been some of the pain points for you to launch these businesses, and kind of what have you learned in the process?
Can I start with that?
Yeah, go ahead.
Big pain point is the recognition that business is not on chain. It's all trading, it's all staking, it's all kind of lending and swapping. And I had expected business to come a lot earlier. Of course, I went down the rabbit hole pretty early and started paying people, paying consultants. I was involved in a few DAOs and things like that very early. I thought business was really going to take off. It really hasn't. And that's my biggest pain point or surprise. I think it will when people understand that they can finance their working capital, that there are other tools that are similar to what's in the trad world. But until then, business is still kind of off on the side, maybe experimenting a little. That was my biggest surprise. The other big pain point is almost every day, new chain, new layer 2. Can I get a grant to deploy on it? Because these take time. If I want to deploy on Solana, I think I was hitting up, what was it, Peter, I think his name was, the other day. Like, can I get a grant, please, to deploy? Deploying is expensive.
I was just going to say the Biden administration and the administrative state. That's been our biggest pain point, sadly. But thankfully,
you were debanked how many times?
Twice.
Me too.
Yeah.
Me too.
Thankfully, we're in a new world and a new environment. So.
Well, speaking of that, let's segue to my next question, which is actually, let's look at the outlook of blockchain without these barriers to entry or being debanked. What is your outlook for 2025?
I'm pretty bullish.
Euphoria.
I think we all are, right? It's a really exciting time. I feel like there's just, and it's already been talked about at the conference yesterday and today, right? We're not only repatriating industry, repatriating manufacturing, we're going to be repatriating developers and repatriating builders and blockchain and digital assets. And I think that's all very exciting.
I would have to ditto all of that. I had difficulty even getting people to develop here in the United States. They're all moving. First, they moved to Romania, then they moved to Lithuania for a while, and then there's some in Argentina. Now some of them are coming back.
So I think we just have a few minutes left, and but really what I wanted to ask you guys, without violating any securities laws, but how can the audience work with you? Do you have any asks of the audience? What is it you're looking for? Is it customers? Is it investors? What is it? We're all here for a reason, either to learn, to invest, because we're a part of the ecosystem. So, we're here to help each other. So what would be interesting to you guys, and what would you like to ask of the audience or anyone that's listening?
Go ahead, Mike.
Anybody who's interested in the pool, please contact me. We have to do some basic KYC and put in 25,000. You can redeem in 30 days. That's the longest any invoice is, or 35 days if you don't like it. Otherwise, you can stay in. It will just accrue and see how it feels, understand how to use the dashboard, and then link up with Node 40 year end, at least, probably earlier, to make sure you're all safe audit-wise.
Yeah, and I would only add to that we need to build as much liquidity around this ecosystem as we can, not necessarily to support TCS and Bulla, but carriers who are more financially solvent, trucking companies, brokerages, that's good for America. That's good for the economy. I'm not aware of any other solution in the world that can help facilitate improvements in the transportation industry the way a blockchain tech stack and a unique settlement offering can. So that would be the best way I could answer that question.
Well, it's interesting because from the family office perspective and world, Alexander and I travel a lot. We go to a lot of conferences, and it is interesting how there is a real interest in investing in the backbone of America. Having 25 years in this industry, it's great to have all these sexy investments all over the world, and there still are great opportunities. However, I do feel that you're right, investing in the backbone of America, and this is the backbone of America. I think the average investor is intimidated by blockchain, right? Or coins, and they're not sure. But what's great is that you guys are assisting traditional industries that the average person is going to understand. They understand trucking, they understand real estate, they understand that, but you are developing a technology around it that enables even, your accredited but investor to get involved. And I think that's what's so interesting, is that it's these traditional industries that are just getting a new way through digitization. And then again, it's to help our country. So I think that's a new perspective. So, I know you said a lot of times as people are moving offshore, right? And they're going, but I think more and more they're going to come back to our country, and because this is where so many things start, right?
Yeah, and 70% of all goods in this country are on a truck at some point, right? So this is everything.
I mean, no one's going to stop ordering from Amazon.
Yeah, the only thing that stops the trucking industry is a zombie apocalypse, probably.
Right.
Yeah.
Or like the snow we escaped from up north. It was so wonderful to come down here. But yeah, that's what I think is the cool thing, is that I can explain this to my 85-year-old stepfather, because they're going to get it, and it's payments, but it's just a sexier payment system. But anyway, I'd love to see if there's any questions for the audience. Oh, we've got one right there. Oh.
So I guess similar to what I asked Sparrow this morning about what she's doing. So you're looking to family offices to build these pools. Is there a minimum to get involved? And it's white glove, but do they need to understand the blockchain? Like my experience is you have to keep it super simple. So what do they need to put in? And then what's the yield, and how white glove is it?
It's as white glove as you need, I would
Okay.
say. 25,000 is the minimum. It doesn't really make sense to do less. You'll make around 11.5% net in USDC right now. The pool is based at prime plus 400 roughly. So if prime drops, the pool yield, target yield will drop as well.
And if someone is interested in kind of supporting the backbone of America, like how can they think about it? Are they supporting 3 truckers or like how does that break down in their head?
25,000 do. It funds a truck for a year almost. Oh, okay.
Yes, exactly. We don't want to violate any securities laws here. And
Okay.
Recommending any
Scratch
investments.
everything I said.
Never mind.
Not investment.
But I was going to
Yes,
say
no investment
the amount. It's interesting talking to Todd. If a distributor comes, they come in clumps, right? So if you sign up, how many trucks? Like 10 trucks. That's roughly
2.5 million.
Yeah, 2.5
in
million.
annual AR.
Yeah. So divide by 12.
By industry average.
So that's 250, 300,000 in the pool that you need to keep it going. And then he can't accept another distributor halfway. So we need to get enough in the pool such that he can be more aggressive about all of the people in his list. And we're hoping to sign up a lot of people in March, right? And
yeah,
I think that should be.
So when you look at, when you're saying 11%, so just theoretically, so that liquidity is, you said within 30 days, or you have to, it's got to be in 30 days?
Well, they're all net 30 invoices.
So is that 11% annual?
Yes.
So compared to a bond, it's more liquid.
Yes, it's shorter term.
Shorter term,
paper,
okay,
yeah.
interesting.
There are some constraints with redemption, depending on how much is invested in the pool and how much is liquid. When we do a big factoring, there's always a redemption period. So you can get out. You might not get out 100% right away. So you might have to do net 60, but it's designed to have liquidity.
Interesting. Great.
Thank you.
All right. Well, thank you so much, everyone. Great. A lot of interest. And Appreciate it. Thank you both so much. And Catherine, thank you. I'm gonna look across. Did it? So our next panel up, very excited to bring up Kelly Freeze. And somewhere we have Edward.
Okay, guys, this is a short break and we're gonna go to the next speaker.
Like I can.
All right, everyone, we're gonna get started with this next session. So Rowdy Group. All right, this is our digital asset investing opportunities in real estate. We got Peter. I feel like I lost my panel now, but okay. Okay. Tell them. 5. Okay, here we go. Well, thank you all for resuming back for the fireside chat. We're here today to talk about blockchain as it relates to digitizing assets, specifically in the form of real estate. And just to give a little context of where we're coming from, my husband's second generation real estate attorney and developer. I'm first generation in that. I came fresh out of the movie business. And so finding different ways to actually perfect capital stacks and work on the investor returns the entire time with access to blockchain is revolutionizing like everything that's available to us. So this is a really important moment. And with that, I'd like to introduce Ed. And Ed, if you could please tell us a little bit about your background and your company.
Sure. Thank you. First of all, thanks to Jen and thanks Gary for inviting me here. It's been a pleasure to learn a lot from all of you guys who spoke before me. But I'm Ed Nwakati. I'm founder and CEO of Red Swan CRE. We are a blockchain real estate company. We actually convert real estate into digital securities to make it liquid. And I've been doing that for the past 7 years. We're now a later stage company, startup company, but it's doing very well. My previous experience was with Cushman & Wakefield. Before I had a couple of exits with the .com industry. I had a company, we raised $100 million with Wise, Beck & Greer and exited to ADP. But then after that, I moved to Texas and joined Cushman & Wakefield, where I was executive director for capital markets. So I know a lot about real estate. I realized that market was getting tight in terms of commissions, and I went to a blockchain conference. I learned a lot. I thought I was going to have a big advantage on capital markets, and I transitioned from being a top producer at Cushman & Wakefield to starting this company. So here we are.
Great. Thank you. Could we do a little show of hands and just for real estate familiarity, raise your hand if you have familiarity with Reg D, Reg S, the different types of raises that are collaborated on? Okay, great. So that's a good start. Okay. So Ed, if you could please explain how the tokenization actually works in relation to the real estate market, that'd be great.
I think the easiest way to describe it and make it real simple is that tokenization of real estate is just like IPOing a stock on your real estate. So, we are issuing securities, just like you have a company, you take it public to raise capital. We take your real estate, everything over $25 million of equity. We take it public. We sell the shares to both accredited investors in the United States, but even a larger market overseas for international investors, which we call your Reg S investors.
Great. So since we're specifically discussing the tokenization and the impact that has, you recently wrote a white paper on this. Could you talk about that disruption and what you're seeing in these key moments right now?
Yeah, thank you. We wrote a disruption report on tokenization because it's going to have, first of all, real estate is a very large market. The commercial real estate investment side is about $75 trillion. And so everyone who's touching this real estate either is going to lean in on tokenization or stay out of it. But I think just like you're looking at AI, how AI future-proofs your business, tokenization future-proofs your real estate. Because if you don't have real estate that's liquid and the other person does, they're going to outgrow you very fast. And think about it, if you're a seller or owner of real estate, and you have a portfolio of $300 million of real estate, there's going to be an equity component, there's going to be a debt component. If you're 50-50, that's $250 million of equity just trapped in your real estate. Is what you call a misuse of opportunity costs because it's not doing anything for you. If you pulled it out, you're still going to have the same bottom line. So we help owners to recapitalize their equity so they don't have to sell the property and they can use that capital either pay off their shareholders or buy other properties. And on the other side, if you're a buyer of real estate, I mean, think about it. How many people, especially family offices, because family offices have about $1.7 trillion of real estate, about 25 to 30% of their net worth is in real estate, and they're holding on to it for a long time. So you think about if you had to buy the next investment in an apartment building or office building, and you had a choice between buying one where you can take the shares and sell them tomorrow and get your liquidity, or one that you could never sell until the property owner decides to sell the property. That's the difference between tokenized real estate and non-tokenized real estate. So I think the first one is probably a better choice because liquidity is very necessary to continue the cycle. Look where we are today in the real estate with interest rates being high. Many investors have been illiquid for 2, 3, 4 years. And the reason for it is that because the interest rates have gone up and the price points have gone down, and what they wanted to sell it for when they bought it is no longer available to them now. And so they have a lot of investors who are upset because they've been told they're going to get out within 3 to 5 years. That time has passed. It's not a good time to liquidate. I actually think from all the clients I've serviced at Cushman & Wakefield, which is over 18 years, the ones who really did well were the ones who never sold. The ones who just kept recapitalizing their assets, growing their NOI from 100,000 or 100 million to $1 billion over the past 15 years because they didn't sell. And I think that's still a great concept now because real estate is a commodity that or an asset that never continues to grow up in value because you can't produce it. Right? You can't create real estate, just like Bitcoin. You can no longer create Bitcoin. So the longer you hold it and the longer the population increases, the more it's going to go up in value. So that's why we talk to our customers about recapitalizing their real estate. And that doesn't mean selling it and losing control. That means you're recapitalizing the equity, but you're still 100% the GP, and you're always in control of the asset. And basically, you just have to take care of your preferred investors before you pay yourself.
That's great. Thank you. And we had an interesting conversation actually en route to this conference where Ed was giving me a little bit of insight on actually succession planning and what this means for the next generation and kind of what they're being brought up in this new world. Could you talk a little bit about succession planning and the benefits for the family office?
Yeah, I was just at another family office conference in Breckenridge last week, and big concern was the first generation loses about 30% of the family wealth. Second generation loses about 70% of the family wealth. So they were like, how do we prevent our kids from wasting all the money? And
Why are we working so hard?
And I think that one thing you can do, because, you know, like my father passed away, 15, 20 years ago, and we all were just looking for the cash because we didn't know any better, right? But I fought to keep the assets because I figured that the real estate, especially real estate overseas, was worth a lot of money. But what I'm saying here in terms of succession planning is if you have a family that has a business or real estate, what I call the goose that lays the golden eggs, it wouldn't make sense for you to sell it off or have usually the family fights over selling it off so they can get the cash, right? But if you put them in a trust and you tokenize the assets of the trust and you allocate it to each family member, their proportion of that, if they decide they want liquidity, they can take their shares and they can go sell them to the open market and either part or all, and they have liquidity. But still, the goose is still pumping out the real estate. So if the other family members want to stay in, they can continue to make, you know, the profit from the family legacy. I think that's very important. And so this is what I'm trying to educate families to do, is to think about tokenizing their estates so they don't have to have, you know, a decision where, you know, one person or all of them force you to sell so they can liquidate.
And just to extrapolate on that a little bit more, what's really interesting in taking it to this level is that you can actually partner better with other family offices and you can strategize on different things that you want to do in either impact or sustainability. And you'll really see that resonate with investing in construction technologies, anything that we're looking at on the front side for sustainability in the family office space. We can actually mirror that, invest in the construction technology and bring that back to a JV with another family office. And then you're looking at true impact on the front side of the capital stack and the back. So that's really exciting for the future.
Yeah, and also with tokenization, you know, we focus on the equity side because equity was more expensive than debt. But you can also tokenize the debt side. We can tokenize bonds. We're licensed with the SEC, so we're fully compliant, which allows us to be able to create security tokens that meet your needs. So, you know, if it's basically trying to figure out a structure, a security structure that specifically meets your needs, it might be a bridge between a debt instrument and an equity instrument, you know, to take up 80% of your capital stack, or even 90% of your capital stack. This is a whole lot better than going to the bank and trying to get them to give you a loan, because as you know today, the LTVs or LTCs for banks right now are like, you know, 50 to 60% max. So if you wanted to pull 90% of your equity out of your property, you can't do that. Banks are not happy to let you cash out of properties. They want you to stay in the property. So tokenization is a way that you can do that. Also, I think there's a little stronger price elasticity when you start looking at overseas markets, because we're talking to Asia, who's been tokenizing real estate for the past 3 years. They've tokenized, in Japan, they've tokenized about $35 billion worth of real estate. And basically, we're selling it back to their customers for very, very low yield, because traditionally, they don't have much yield. They don't get 0% yield in Japan. But if they're able to now take their equity and come to the United States and invest it and get 7, 8, 9, 10% yield as a preferred investment, then they turn on, they wrap our token, I'm not going to get too technical, and then they sell it to the retail market in Japan. They're very excited because now they're getting 3-4% interest when they were typically getting 0 to 1%. And then the sponsor, our client, the investor, has that nice arbitrage. So this is what's going on in the world. And I just say that to point out that international markets sometimes have other reasons to be more aggressive to invest in your property at a higher price than someone in the United States. I'll give you another example. In Nigeria, the pension fund has about $36 billion in their pension fund for the national workers. Well, because of their devaluation of their currency, that pension fund value went down 40% over the past 2 years. When we met with them, they told us, hey, we'd love to buy your digital real estate because now we can lock in US dollars. So even if we're buying it and getting 4% yield, that's still better than losing 40% in performance. So there's a lot of reasons why people want to invest in the United States, and have it in a fractional digital share makes it easier for them to acquire. They do have to go through KYC, so we're not selling to anybody who's a criminal or money launderer, because they have to go through the traditional KYC process. But they're aggressive, and they like the United States. They know the cities, and so that's a very good place to raise capital.
Sounds good. Does anyone want to ask any questions? Yes.
Excuse me in advance. I am very worried. I'm very worried. I'm very worried. Oops. I'm very worried about real estate. I think it's a huge con. I think it's extremely dangerous asset class. There's not enough risk premium for the risks you do take, which are rarely encountered, but when they are encountered, they are catastrophic. So can you explain to me, please, how, let's take very famous real estate, 40 Wall Street. When Donald Trump bought the property, it was below 90% occupied. It is now below 80% occupied. Interest rates have tripled. How have we not seen a cram down in asset valuations in real estate if occupancies are down, if rents are down? How is this paper rolling over, and how am I not holding the bag if I'm buying your token?
Well, first of all, I have to say that real estate is one of the best investments in the world, and has been for the hundreds and hundreds of years, because, like I said, as civilization grows, the value of real estate grows as well. But there are situations that occur, like COVID or high interest rates, that have trapped a lot of people in the real estate. People bought over the past 4 years, and they've bought aggressively with cap rates that are sub 4%. Now, interest rates are now, 5.5% on the Treasury, and if you're going to be smart, you're going to buy above the 5.5%, so that's maybe a 6.5, 7 cap. Well, that's what happened to the prices. It erodes the prices when interest rates go up, cap rates go up. So, and then you have the issues where office has been affected because of COVID, people not going back to work. So there's very specific situations that cause that situation. But if you look at multifamily, you look at industrial right now, you look at self-storage. Money storage is also a great asset class. We put one of our profits, our mini storage portfolio on our platform. It's fully automated. I mean, so you have very few people there. It's just like an apartment building, but it's a robotic apartment building, as far as I'm concerned. So there's different real estate opportunities. There's real estate in industrial, where you have triple net with people like Amazon that's going to sign a 30-year lease and with bumps in it. These are kind of like notes, but they actually improve in asset value, but also improve in revenue. So I actually like to talk about real estate and Bitcoin. So you guys are all cryptocurrency holders, and the big thing about digital securities and crypto is kind of a bearer bond, right? Is based on what's in your wallet. If you lose that wallet, you lose your assets. Digital securities are registered like securities, so there's always, your name is always on a white list. So if you told me you lost your shares after we issued to them, we can burn the shares and reissue them to you. That's another clause by the SEC. So it's very safe in that regard. But I think that it's always good. Lesson 101 as being a wealth advisor, and I'm not giving any advice, is that you should have a balanced portfolio, right? You should diversify yourself. You shouldn't be all in one thing, because one thing something can happen that you didn't expect, and you can go from rich to poor overnight. But I think if you balance out your portfolio, especially with real estate, you can actually have a situation where you have your Bitcoin, you borrow against your Bitcoin, you buy, Bitcoin goes to $105,000 a coin, so you're now a millionaire. And you borrow off your Bitcoin, you buy real estate is paying you 8% interest, right? You can pay your note off that you're borrowing from your Bitcoin. Now you have, first of all, you locked in that 105 for what you bought it for forever. And now you're getting yield from the real estate, as well as you have your loan, your Bitcoin. So there are a lot of ways I think you can use both assets, digital assets, to combine your portfolio. And I'm just trying to educate everyone in the digital asset space on how to do that, because I think it makes a lot of sense.
And we've seen specifically a lot of uptick in office because we learned in Chicago, we did a historical landmark refurbishment of an office building of City College in Chicago. And for that lovely, good humanitarian task, we also got $34 million in historical landmark tax credits. So I actually see empty office buildings as a huge opportunity to get in there and do the next thing, looking at what's next on the horizon.
Thanks for the general explanation about real estate. So if I buy a coin or a token in 40 Wall Street, so if occupancy goes down and interest rates triple, should not the price of the value of real estate decrease? Yes. That it hasn't surprises me. So I'm wrong, right? Wrong. But let's just take, for example, the movie The Big Short, right? Where Michael Burry says, I think you're calling me back because now it's in your best interest to reprice the instrument. Please explain to me how commercial real estate paper is seemingly rolling, right? Or it's delay, pretend and extend or whatever. What's going on there? How do I not become the greater fool by buying that token, that piece of real estate? Well, what's going on?
Yeah,
I don't understand.
Appreciate that. There's a lot going on with, there's a lot of real estate that's not performing right now. That's obvious, right? They're 30% occupancy. They can't be performing well. But the banks don't want to take the properties back because they're going to perform even worse when the banks take them back, right? So for the past 2 years, even though a lot of property has been upside down, especially in hospitality and office, banks have let the owners continue to extend, or maybe put a rate cap, pay a little bit for a rate cap to keep going because they don't want to take the property back. If they take the property back, not only not getting their interest, they're going to be paying for the servicing of the building. But I think now you're going to start seeing this year more foreclosures because there's about $1.8 trillion worth of real estate coming from maturity, 80% of them in bad shape. And that's with multifamily as well as office. So you're going to start seeing some foreclosures. And that might be a great time to buy in. I mean, there are companies right now that I'm aware of buying office buildings at 40, 60% occupancy, but they're pricing it at a 10% cap rate. So they're making 10% return. And now they do a little bit of upgrade, a little lipstick on it, increase the occupancy because they can charge a whole lot less in the marketplace, and then they sell out. So that's happening. It's going to continue to happen. But I can't explain everything in the industry, but that's what's happening with the office on Manhattan that you're talking about.
Yes.
When you buy one of these tokens, what are you buying? Are you buying into a corporate entity, and is there registration in that? Does the token give you any ability to know how many are issued, and who is the counterparty exactly?
Good question. Yeah, you're buying a fractional ownership interest of the LLC of that entity. So the LLC controls the property. We verify that the LLC controls the property by looking at the property rolls. Yes. And we take the same LLC and fractionalize it into shares. So let's say we're trying to raise $50 million and the LLC is $50 million worth of value. We fractionalize $50 million worth of shares. And then you can now buy any fraction of those shares. But usually when we issue, we have the minimum allocation of maybe $25,000 to $50,000, depends on the asset. So you're actually buying a fractional pro rata interest in the equity of that property.
So are you becoming like a member bound in the LLC by the operating agreement? How does recapitalization?
You as an investor?
Yeah.
Yes, you are. So you are just like today. I mean, real estate, you have an LLC, you're a member, but you're now a partner in that LLC, and you have a fractional ownership, whatever your share is. Same thing. You have securities. Right. You buy 10% of the securities. You're a 10% LLC member.
So let's say it's an office building that has been fractionalized this way. And you decide. I mean, who's deciding? Let's say there's a manager and they're suggesting to make some improvements. Capital has to go in. Does it come from the people? Does it borrow? How are those decisions made? Is that all bound up in the operating agreement? And do you as a token holder have some, capital call responsibility?
Again, it's the same as every real estate deal you're doing today. Whereas if you're going to be an LLC member of this office building or family or this multifamily property, they usually capitalize any upgrades on the initial acquisition or initial offering, so they have enough reserve to take care of any updates or renewals. But if there is a shortage, if COVID hits or something happens and need money, they do have the right to do a capital call and say, hey, we need to raise $2 million to cover for whatever, and then they divide that amongst all the shareholders, and then you either have to put in or you get diluted by that amount from your shareholders. But that's the way it is for all real estate. Yeah.
It's the same. It's combining all the old best practices and really actually structuring your deal the way you want it, because you're going to write your business plan. That's going to be in your PPM, and whatever you offer is what you're going to have to stick to unless you want to do a material change. And then you'd have to notify all the investors.
And
one more question. Is that okay? You got it.
so we were talking earlier, Ed. I think this plays off of this question. So you're buying institutional grade properties that are managed usually by institutions, and a lot of them are $100 million plus, right? Because you've tokenized about $6 billion so far. So speak to the vetting process when you're looking at a new property or you're working with a new family or a new institution. These are professional management teams. Nothing's changing on how they manage it. And usually you require the GP to keep about 20%. That's correct?
At least 10%. Depends on the GP. But you're absolutely right. The same kind of properties that I sold when I was at Cushman Wakefield, which is mostly institutional properties. We're talking a large pension fund right now in Canada that has $460 billion of real estate, and they need liquidity. So they want to tokenize so they can actually raise capital from overseas because they never did that before. So yeah, it's always going to be, for us, I can't speak for any other tokenization company, but for us, we do a lot of due diligence. We hire companies like Deloitte or Cushman Wakefield to do the evaluation, so we know exactly what the property is worth. We use their brand and their stamp to say that's what it's worth, and then we go ahead and fractionalize from that point. But it's always going to be blue chip companies that if they make a commitment to pay you a dividend of 7% or 10%, they have a track record of doing it for a long time. We don't start with startup companies or startup owners or small property or mom and pop. We don't do that. I'd rather start at the top of the food chain and work down rather than the bottom of the food chain and work up. And right now, there's a lot of interest. I mean, we have companies in Japan, I'm going to be there next week, companies in Japan who wouldn't put $2 billion in our fund to invest in U.S. assets, right? But they want multifamily and hospitality. And hopefully when I go back, I'll find some people who want industrial and office and other types of products so that, we basically can sell it B2B, and then they'll sell it to their customers. But I'm hoping that the United States, and I think it will be after, President Trump has made these great initiatives, that more United States citizens will get familiar with tokenized assets, real world assets, and start taking advantage of it.
Fantastic. Thank you so much, Ed.
Thank you.
And thank you, Gary
you
and
so
Jennifer,
much.
for
Thank you,
having
Kelly
us.
and Edward, really appreciate. Thank you so much. We're going to do a brief transition here, and I'm actually going to have the pleasure of moderating this next session, our fireside chat. So we'll have just a couple minutes, and we'll get started. I'm going to welcome Ankit up, and we'll thank you. A stretching break here if you're in the front. Sorry. Thanks.
Hello?
Okay, try.
Yeah, I think it's on.
All right. So whether you're outside listening, and I see several of you are in here with us, all right, the crowd in the front here. I know, over to my right, one of you is in red glasses. Yeah, let me narrow it down a little bit more over here. No, I'm kidding. That's what you get for sitting in the front row. I know. So thank you. Okay, all right. So we're nearing the afternoon of content time. So we are almost there, but it is a pleasure to be seated up here. Ankit, wonderful to meet you. We had a previous conversation, and I am very interested in learning today. So Ankit's a co-founder and CEO at Receipts Depository Corporation, and I know a lot of you are cheating up there, but I'm sharing it anyway. And so we're going to do a fireside chat today, and Ishan is not actually with us today, so but I am excited to jump into this conversation, and so if we're ready to go.
Let's do it.
So if you don't mind, actually, Ankit, would you just share with everybody a little bit of your background and kind of how you got here?
Sure, happy to do that. And thank you, Jennifer, for hosting an amazing event the last 2 days. Really appreciate being here. So as Jennifer said, my name is Ankit Mehta. My background has been mostly in the international IPO market, where I focused on doing large offering transactions utilizing a very specific product called depository receipts at Citigroup. And so depository receipts, or DRs for short, you may be familiar with American depository receipts, or ADRs, which was an America First invention crafted about 100 years ago to allow foreign companies to access US capital markets. So it would take their shares and replicate that via a receipt and allow those receipts to trade, clear, and settle in the US and comply with US securities laws, with the robust standards here, and allow investors of the US to get comfort in accessing those foreign company shares. And so depository receipts have solved institutional access problems for a long time. They solve problems such as operational risk, compliance risk, execution risk, and legal risk, things like that. And so my team and I took this same concept, and while at Citi said, hey, we see institutional access risk for digital assets. Some of these are the same risks that were experienced 100 years ago using this product. Could this product help solve institutional access for institutional investors who are a bit more conservative and want some structure around accessing digital assets? So we tried to create digital asset depository receipts at Citigroup, and what I ended up learning was doing a product with the name Bitcoin, as well as doing it at a large regulated bank, is as close to impossible in 2017. And so we left in 2022 to create RDC, or Receipts Depository Corporation.
And so I know we talked about this a little bit, and I appreciate, but why in your view does it just make sense? And I know you started to just allude to that, but maybe you can elaborate a little bit more on just where that fits for everyone.
Yeah, so if you think about sort of the digital asset market today, it's about a $3.5 trillion market. By building this depository receipt bridge, it connects it into an $88 trillion securities market. And so what that does is that expands the pie for everyone, for all institutions to participate. And it gives investors a choice. Do I want to be on-chain and contribute to the on-chain economy? Or am I more comfortable converting my assets into a receipt, and it's an in-kind conversion, into the depository receipt, have it held in DTC at a traditional bank and broker-dealer, and be able to access digital assets in that format and include it in downstream funds and downstream institutional products, or leverage banking products like lending, margin, or other things like that. And so our goal is really to expand the pie to increase this asset class. In our experience, when we created ADR programs around the world in various countries, when regulators changed their laws to allow this bridge to be built, that actually increased their capital market size. And we think the same will apply with digital assets, because you've built these two-way bridges, if that makes sense.
Absolutely. And so when we talk about that, how do DRs compare with other access products like ETFs?
Sure. Great question. It's one I get a lot. In my view and in my experience, different products serve different investors in different ways. And so when you think about ETFs, and they've been unquestionably successful, not just digital asset ETFs, but also ETFs are sort of a general asset class. They really allow an investor to get passive exposure to an underlying asset, whether that's a single asset or a basket. Most ETFs track an index, and they track it on a net asset value basis. And so it has limited interaction with that investor. So if investors are comfortable with outsourcing ownership to an asset manager, are comfortable with a net asset exposure where you're being benchmarked against an index and not direct ownership or direct tracking of that asset, then the ETFs make perfect sense. And I think for certain investors, this is the right access vehicle for them. On the other hand, if you're an investor that wants direct ownership and control of your underlying asset, and you want the ability to mobilize or sort of redeem that underlying asset directly, not outsourced it through authorized participants who are the only ones in ETFs that can sort of create and redeem, but you want to be involved in that, and you want to do it in a low cost structure, the depository receipt makes a lot more sense. And so some of the use cases we're seeing with our digital asset DRs is institutions are saying, hey, I own digital assets today. I wouldn't mind converting it and holding it at my broker dealer to get margin. And I don't want to do that via an ETF because I want to do that in-kind conversion same day, and I want to hold it in a low-cost basis to now get financing, to now do all these other things that I couldn't do otherwise. And they have the balance sheet to sort of support it. So DRs allow for these type of unique structures that are more applicable in the traditional capital market space. And so I think that's sort of the superiority of a depository receipt over an ETF for investors that want control, ownership, and want to do this in a low-cost way.
And so, and again, you've shed a little bit of light on this, but what are some of the use cases you're seeing as far as institutions utilizing the DRs?
Yeah, so a couple of use cases. Specifically on the digital asset side, we've had foundations come to us who effectively have said, hey, we want to expand visibility. We want to expand institutional access of our token. We'd love for you to create a depository receipt for us to be able to go out and have institutions consider adding this to your portfolios. And so that's been one use case that's been prevalent. Today, we're live with a number of tokens. We will continue to be having discussions with foundations and others to increase the portfolio of depository receipts that we offer. So that's one use case. The other, as I sort of alluded to, is the financing element. Now, conversations are starting with a variety of digital asset firms. Think of miners today who hold Bitcoin on balance sheet, want to convert it into a security, and now go to their bankers and say, hey, can we figure out a financing structure for this so I can use that to maybe buy more Bitcoin or optimize my business and things like that. So now they've used it for asset-backed financing rather than just shareholder dilution for financing themselves. Just an alternative tool that can be used. So that's one. And another sort of interesting use case is diversified custody. So because of the economies of scale of depository receipts, some investors have come to us and converted Bitcoin and other digital assets and are holding them in DTC at their broker dealer because it was more cost effective to hold it in this format than actually become a client of a digital asset custodian, just because of the scale, because we do this on a variety of assets. So that's another sort of use case that we're seeing. I think in this administration, as we get more clarity on the underlying, as we get more clarity on who's regulating it, is it a security, is it not, you'll start to see other use cases evolve, especially if many of these assets are not considered securities and some investors want them to be, from an accounting standpoint, as we heard earlier this morning, or from from clarity of using it in other portfolios and things like that. So I think that determination is yet to be seen.
And so when we think about this in the context of family offices, how can DRs potentially help family offices? How do they get involved? What does that look like?
Sure. We actually had a use case where a family office came to us, and it was in the same realm of monetization, where they're holding a lot of a specific digital asset. And they said, hey, we'd love to create this into a depository receipt so we can get margin and we can buy treasuries, because we want to build a low, risk-free or a low yield strategy that's risk-free on our token. And we can't do that today. And so they went and they opened up a PB account. We created the depository receipt, and we're now sort of creating these DRs for them to hold in their PB, and they're in discussions to get margin and sort of doing this strategy. So I think as family offices sort of think about their digital asset strategy, there's sort of two mechanisms here. If you are already in digital assets, DRs are a nice tool that connect you back into your other investments, perhaps in the TradFi space. If you're not in digital assets, they're a tool that might be the first step to allow you to get exposure, because maybe you're more comfortable holding it at your prime broker. You're more comfortable having it custodied in DTC. You're comfortable with the broker insurance, and you want direct ownership of Bitcoin. You just don't want to deal with the digital asset sort of infrastructure of wallets. So we're sort of solving that to get more conservative family offices into this space to start allocating and making this sort of a first step. So that's how I see this going.
Well, and I mean, so a lot of information that might be new for some in the room. I'm going to pause for a second and ask if there are any questions or in terms of, again, context of family offices. Giovanni. Oh, wait, I don't want to fail the sorry, to streamers. I'm coming. Oh, okay. All right. Thank you.
Hello? Okay. So if I have my Bitcoin and I get an RDC from you, can I get a partial liquidation in the sense that, let's say Bitcoin's at $100,000, I do a loan and I get a margin, let's say the loan's at $60,000. There is a potential margin call if Bitcoin gets to 80 and I just want to top up. I don't want to completely liquidate. So is there a way for me to get a partial liquidation because I'm proving assets that are my Bitcoins? Can you explain that mechanism and how that might happen? Thanks.
Yeah, excellent question. So let's separate the curation of the depository receipt versus the financing economics, because they're sort of handled by two different firms. So RDC will support the curation and structuring of the depository receipt. What will happen is you have access to Bitcoin today. You also have access to the traditional securities market via your broker dealer. You would deposit Bitcoin with us at our custodian. Today we use Anchorage. We can use many custodians. And you would say, hey, deliver the corresponding depository receipts to my account at Goldman Sachs. We would credit your account at Goldman Sachs with those receipts. Goldman Sachs receives it. They're holding those receipts on your behalf. And you would have an arrangement with Goldman Sachs to say, hey, I want this for financing, or I want this for some margin efficiency that occurs. All of the liquidation and the risks of that transaction are between you and Goldman Sachs. Now, Goldman Sachs may say, hey, I'm comfortable with this receipt and using this as collateral because, one, I can sell the receipt in secondary market, or I have an agency relationship with another entity that can touch both sides and that can easily redeem that depository receipt using RDC structure, where we get the receipts back and we get instruction on to release the underlying Bitcoin and to sell that underlying Bitcoin for cash. And so you might see these type of structures with traditional banks start evolving, maybe in this new administration, to give them comfort and extend larger degrees of financing, maybe accept a little bit more risk in this. But I think I just want to separate sort of the mechanics of the receipt versus the economics of the financing, which is between you and your broker. Does that make sense? Awesome.
Anybody else? I know we have a little bit in here. Well, I thank you so much, Ankit, very much for being here today and for the traveling in, and thank everyone for hanging out with us this afternoon. We're going to take any other questions you have, please feel free to come up. We are going to take actually about a 10-minute break that you weren't expecting, so I know you'll be super excited about that, and then we will come in for our wrap up and onto our social time. So thank you. We'll see you back in a few minutes.
Okay, we'll have a short break here and we'll have more panel discussions, so stay tuned, guys. More to come. Wow, this event has been so amazing. If you're not with us, I mean, guys, just look at the conversations and the networking. It's been really awesome. Probably one of the best blockchain crypto events that I've ever attended, just because of the intimacy and connections. I've met a lot of people and made a lot of awesome connections so far. So, all right, more panels coming. So Gary will be dropping in, and the Note 40 team, they'll be doing a presentation on Note 40. So probably one of the best presentations that you guys should stick for. They'll start in 2 minutes. So Gary's gonna drop in, and the Note 40 team. And I've met so many investors here, guys. I'm invested in Note 40.
Hopefully what we can do is,
There's so
as
many
we
people
finish,
interested that would love to invest. We
is there
listened
still a
to
slide in here about
Jennifer,
the
our CEO. She's already
alliance? Or
starting
did you take
the
that out?
panel.
I think there is. So he's got an order he wants me to go through.
We have
16.
Gary, we have Sean,
Talk
and
about
Gary
Solana, and then
joining them in a moment.
yes.
So
You want to talk about N40 advisory?
Well, given that this,
yeah.
stick
I'm
around,
totally
guys.
with
This will be probably one of the most interesting panels here. We have over 6,000 people watching, and yesterday over 10,000.
Nope.
So we're gonna start in.
Hello. All right. Thanks, everyone. And if you're standing outside and are headed back in, we are going to start the wrap up here. We have one more presentation. Glad to share a bit more with you about kind of what we have going on and next steps forward. And then we will do some closing remarks. And then it's time to get to relax a little bit with all of you, do some networking, do our social media time. And I know some of you are ready to get your content done for the next little bit, so we can help you work on that as well. And I know that Gary took a quick run and he will be right back. I thought for a minute that was. So he was here, we took a break, and now we'll regroup with Gary. We'll be right back. I'm going to do one more round outside and we will be back.
No, you don't. You just scream at them. Somebody scream at these people. No. Hey, Robert, can you scream at those people? Get those punks in here. Thank you. He'll do it. Miller will do it. He's good. He's from the South. Yeah, there you go. Hey, guys, I wanted to fill in some spots that we kind of had a technical glitch on yesterday, because I went to bed last night thinking, hey, I don't think we really did any presentation on this company. I could have easily just been buying Bitcoin for the last 4 years, and none of us would be in this room. I would just be a big Bitcoin holder. I wouldn't really know anything about the industry. What the Node 40, I don't really share this very often. The Node 40 business actually has given me tremendous deep intel into the industry that allowed me to get massively confident. See, I was never going to do this in size until I knew I could stand up to any aggression, right? Like this made it so, one, I could meet with people and have a conversation with Nadig, Here's O'Gary. I don't know anybody. It's 2021. COO of NIDIC. I'm Gary Cardone. We love a meeting. 5 days later, I'm in his office. Everyone. I've literally not had any no's. I get a first meeting, then we get a second meeting, then we get a third meeting. And now, in the last 3 years, I think our timing has been absolutely perfect, right? And the reason for that is, well, their timing was a little early. And this, for founders, it's hard, man. You get dragged along for 7, 8 years. My timing, I think, has been very good in that there's been so many mistakes. And when Bankman-Fried got pumped out, and then all the criminals got anointed, hey, you're no longer allowed to play in this marketplace. For me, this became a really, really, really cool space to invest in. I think actually risk adjusted, the cheapest entry point in the entirety of Bitcoin's history has been in the last probably 12 months. And I think it's still there at this moment. Without tools like this, built correctly for a purpose. See, like when I look at software projects, I'm like, what was the original intent behind this? Oh, I wanted to make some money. Oh, awesome, dude, but I'm not interested. These guys had a problem to solve. Every software solution I have ever seen that's great was solving a problem somebody couldn't solve outside that own company, and they're like, hey, I have to fix this. Sean and Perry took that on. Had they lived in Florida, I don't think we would be doing this business. Because I'd been like, dude, I'm not worried about the tax man in Florida, but he was in New York. And they were, and they're ultra conservative, which is what we want as found. I want some ultra conservative guys. And I saw a team that had technology and expertise that I did not have. I never will have this type of expertise. Don't want to. What I do want is I want to make sure the founders, their egos are set correctly, their intelligence is set correctly, and they're not so married to the product they built, like many mothers, that they will never let this child just go out into the universe and grow up. So most founders, I remember meeting Perry, and I said, hey, what does a founder do? And then what does a CEO do? These are different functions, man. Very different functions. So what I want to do is step back a little bit, and I'm going to ask these guys some questions, and you're going to ask them some questions that come. But I want to show you what we're doing in the transformation. I put $8 million-ish into this company since 21. We've raised a total, if you could go to page 16, I think, we've raised a total of $8.5 million. Okay, nothing, dude. We have raised nothing. We raised $8 million, and Luca raised 200. Series E. This is 5 raises. Okay, there is how much money? $600 million. Okay, TaxBit raised $253 million, did a Series B at $1.7 billion. Their entire management team and founders were pushed out the door. Bye-bye, we don't like the records. They have a new management team, and their options are valued at $1.8 billion. I can hire every person in this industry right now because these valuations are ridiculous. They're absolutely stupid. TaxBit raised $253 million on $5 million of revenue. Okay, this is VCs going absolutely nuts. All these companies are also, except for Luca, full-on accounting people, which is cool. I'm not saying accounting people are bad, but they're not like me, right? I've been doing this my whole life. I am certain if I could beat up Goldman Sachs and Enron, I can beat up RSM. Now, we haven't tried to beat up RSM. We actually showed up to everybody, and there's guys in here that, dude, you need to buy the standard. You need to partner with me, have one standard. We released 3.5 years we've been talking about one standard, right? I guarantee you that the United States will have one standard by which all crypto is reported, or at least a candle by which all other reporting mechanisms are judged against. Because it's math. That's what Sean taught me. When I met these guys and said, this is math, it must be exact, I'm like, wow, that's the right answer. The other thing I liked about him, we had a client, and he said, hey, something about an NDA. And Sean looked at him and said, dude, NDA, no NDA, I can give you the blueprint. You can't build this. I love that response, right? It's the most aggressive thing I've ever heard from me. I like that from a founder, right? Good luck, good luck. The other thing I'd like to just talk about, this industry landscape, all of these people went for Joe Consumer. This is not a Joe Consumer business. We believe there are people out there that in the audience that has Lorenzo, other people have consumer businesses. But when a software company tells me they're going to sell to Goldman Sachs and Joe Consumer, both those businesses are going to fail. Both of them, okay? Because you can't do it. If you're going to go for the consumer, you have to do a lot of customer service, be willing to do payment processing, have chargebacks, disputes, talk to people, blue. We want to deal with Goldman Sachs, people that are like really trying to solve very large problems. This ecosphere is so large, you have to pick, hey, where am I going to choose to stick my wick, right? Well, we decided 3 years ago, and before I bought them, I said, hey, are you willing to get rid of all 2,000 Joe consumers? Because we don't sell anything for $100. So we changed all our pricing. We went from $100 to $2,500. Now, effective today, we sell $5,000 minimum packages. That's it. So the whole company just found out, oh, wow, we're not taking any customers under $5,000. We do precise auditing, and we want really high quality customers like me who are not worried about, oh, wow, I got to pay another $1,500. If you want a $200 software package to protect your $7 million worth of crypto, get after it. I will introduce you to all these people, okay? But I want to stand up against an audit. And what I learned from Rob Massey when I first met him was the first thing Rob looks at Deloitte, what is the intention of the company walking through my door, telling me he's doing crypto? What is intention, right? If that client walks in with good intention and crystal clear crypto clarity, you've already done 3 meetings with Rob, right? You're bringing in an awesome tool. It zeroes out and your intentions are correct. Like these are check the boxes, man. No, you're a customer, right? He doesn't want to get in trouble. No one wants to do another Enron. Like that was not fun for most people. I had a blast, but most people did not. So this is the landscape. Let me just go through a couple of these. And anyone that's listening to this, if I'm not criticizing your business, I don't think Luca has a CEO today. They were trying to do another raise. They don't want to do a down raise. Go back to that other page 16. TaxBit has no management team that's in the money. Bitwave's a player, right? They've made a lot of progress. We see them a lot. They do institutional guys or mostly Joe Consumer?
SMBs.
Crypto, I don't run across them, but is Crypto a big player?
Yeah, between crypto and between crypto and Bitwave, those are the two we hear the
Right.
most of.
And 2 years ago, we heard a lot about ZenLedger and CoinTracker, and we don't hear a lot anymore. Most certainly, only one of these companies could possibly walk into the U.S. Treasury Department and say, I can handle every crypto tax, Social Security or tax ID number, and generate $13 billion. We pitched that deal to the U.S. government. Literally, you can make $13 billion a year in perpetuity by serving the very customers that need to pay taxes, and you guys are terrified that your accounting's not right. And I'm like, why are we asking Joe American to guess on their taxes? Why doesn't the government just send them, buy this bloody software, smash out for $250 on scale? Hey, we think you owe $1,200, man. And if you want to argue with us, we're using Node 40. If you want to argue with us, hire Deloitte, hire Ernst & Young, hire PwC, come fight us. Everybody in here would be like, I like that trade, dude. I don't have to worry. They send me a bill first. This is tricky land, right? You have to then send them the numbers, and then they go, not sure if we like that number, right? So we're taking a lot of different avenues. We're talking to now Treasury Department, the IRS directly, responding to RFPs, writing the RFPs in some cases, and now we're talking to other, shall I say, countries who want to get rid of all the dirty money that's sloshing around planet Earth, and they want to be able to track the usage of the behavior of the citizens that are in their population, that they're not buying weapons and drugs. And I think that's a good thing, okay? We are most certainly moving into a world where we are going to track, trace, record, and report everything. It's a fact. Anybody that has a 2024 car, dude, like they should just automate the speeding tickets to you. We don't need any police anymore. They already know I'm speeding most of the time. Why you need a cop in the middle? So let's move to, I think, well, let's just fly through this thing. And then I'm going to start asking you guys this 188 data points, it's not a sexy thing, but like that's a sexy thing to Deloitte.
And to me.
Right? And to you. So this is what this company does, okay? It does full-on audit trails, closing position, realized gains, unrealized gains, profit and loss. There's no digital crypto and there's no Bitcoin. This is exactly what every finance guy needs to produce for his company. Is that fair? This is not new. The only difference is what we're tracking. And you can't do it with a print pencil and an Excel spreadsheet. It's just too much volume, as Lorenzo and some other people said. Where we want to go now? Let's just fly through this thing.
Yeah. You talked about this.
This is, you can't have this, okay? You cannot do a $250,000 Bitcoin portfolio and take 500 hours. Now, when I met these guys, they had 3 reasonable sized clients, people that I would talk to, that I really like. And now we have all these clients. 0 marketing, 0 sales. We have spent no money on marketing and sales. Is that fair? I mean, like how many, very few trade shows. We weren't ready. We weren't ready to walk in. Like I've been banging on Deloitte and EY and PwC for like 2.5 years. And look, we weren't ready to consume that kind of volume. These are whales, right? So I'm not going to blow my thing off, walking in the door and then non-perform. This list is so tiny relative to what is the addressable market. I can't even tell you what the addressable market is. I can say this though, all legacy taxes, 43,000 companies in the United States, 7 million people work in this field doing legacy. What do you think is going to happen when digital really pops? 43,000 firms, like it or don't like, 43,000 companies and 7 million people pushing paper around.
What's scary? Everybody who came up here needs this.
Oh,
right. It's we don't even know the markets that we can get into right now. It's like every time I hear somebody pitch digital assets, I'm like, oh, that's interesting.
Yeah, I mean, like the trucker deal.
Yeah.
Like TCS, he pitched that to me a year ago. I like, what's that deal? He pitched it again. I'm like, oh my God, man, that is a real use case. It's not tokenizing real estate on a, look, if we're going to tokenize stuff, it has to be fungible. It has to be fungible. You cannot, it's going to happen to crude oil and natural gas and crypto long before it's going to happen to, my house is not the same as that guy next door. It's very challenging. So this addressable market, actually, the biggest problem with it is humongous. It's like an ocean. And we're $2 trillion market cap. Like, we are going to digitize the entire planet, like for sure. We're going to rent everything, lease everything, use it, pay for it as we go, because that's efficient. I have 2 garages here taking care of cars that sit in the car 94% of the time. That's a horrible use case for energy. That's my view on, energy is going to just be, we're going to be swimming in energy because the efficiency is going to get stupid. This is what we thought the TAM was last year, right?
Well, so this is one of those examples of us kind of seeing a new vertical.
Correct. Why don't y'all walk through this? Because this probably takes, we didn't see this coming at all. And this is where our weakness is we don't know a lot of people in this space. We have not spent money on getting connected. We're just starting to do that now. We did not see this problem. But Solana's not even making any revenue. They could be making $100 million a year providing this reporting service, or we could be making it. Go ahead, guys, because we got really excited about that.
So, I mean, Solana is super complex. It's been around for a while. It had some problems, so we had always sort of pushed back on supporting it until you started to see people making actual, revenue off the chain. And where that ended up coming from was Validator. So we got approached by a couple of validators who said,
Perry, if you would, what's the difference between what is a validator and what is a delegator?
oh, so yeah, right. So you think about when the conversation I had with Hadley yesterday. So the validators, they're just validating the blocks. So they're the ones responsible for packing the blocks on the blockchain. And a delegator is any of us that have like Solana, and you could delegate that and get some yield on it. Regardless, the problem with Solana is it's 400 millisecond transaction. Why don't you talk about it? Because you, this is your baby.
Solana is a beast. So if you look at Bitcoin, it kind of weighs in around 400, 500 gigabytes. Solana is like 10 times that. It's just a monster. Hadley, I believe, said yesterday that the average person can't run these nodes in their basement. Absolutely correct. It's very highly specialized. So we kind of avoided it for quite a while because it's incredibly expensive. It's expensive to run. It's expensive. When I say expensive to run, I mean like you're talking like a $600,000 a year employee to operate this thing because it's that specialized. In addition to that, it's the storage costs. And it's just a beast. But we did eventually have a lot of customers asking us, do you have Solana support? You're like, how many transactions? I got 10. All right, no, we don't have Solana support. But then you start to get into a whole other world in Solana of validators, which are the backbone of any blockchain are the validators or the miners, but in the case of Solana validators. They are making so much money. I mean, it is astronomical how much money they make. And it's hard to know how much they make until you build software to really pull it apart. Now, they all know how much SOL they're getting, but they're getting revenue in forms of transaction fees, base fees, priority fees, JITO tips, the inflation rewards. It just keeps going. And they can be taxed maybe differently or treated differently. All of that, to extract that is insane. A single validator, you're talking nearly 1 billion transactions that contribute to that revenue per year. So
that's 2 million a day, more than 2 million a day.
It's so much. It's so much. And so when we saw the validator market as has this need, they're all making so much money. Eventually somebody's going to ask how you got it. And we wanted to also know how big of a market it was. So we started doing this revenue calculations for these validators. And Perry and I are looking at each other going, well, one, we should be a validator. But also, there's this slide, I think, says like 1,400 validators. There's actually more like 2,000 validators. And they're public. Like, you know who they are. You don't necessarily know who they are, but you know what they are. They all have public addresses. So you can look at them. Like, I know how much Coinbase makes because I could just look at it. But it takes a lot of effort to do it. So the market is huge with validators, and it wasn't until we saw specifically the validator market as an opportunity for us to support Solana. So yes, the costs to us are very high, but we make those up because the validators who are making, again, astronomical amounts of money, they have the funds to pay for it, and they gladly do because they want to be protected. When you support the validators, you support everyone else. So that guy with 10 transactions, yeah, he supports you now. yes, one of our customers. So I love and hate Solana.
Sean, if we were doing a consumer business or anyone doing a consumer business, what would they have to do to then pivot into this big old opportunity? Because this looks like a pretty cool opportunity for us that we were not even aware of.
Yeah, well, anyone with Solana should be delegating if you just have it sitting in your wallet. And when you start to do that, you start to introduce a more complicated portfolio, right? Now you got to deal with staking.
But stay on point on the question. So I'm TaxBit. I've built a SaaS model. Palo Alto convinced me, give it away free, grow. We'll do IPO.
Yeah.
Then they do a pivot and go, shit, this validator thing's really cool. I'm saying there's no way they pivot. Like, they're 4 years late.
Okay, I understand what you're asking now.
And they'll destroy their other business.
Yeah, it took me months to build this. This was not simple to build. And Jennifer's always telling me, don't be humble. And I hate it, but I got to tell you, it requires a high degree of expertise to build support to extract this information from the Solana blockchain. And it did take me a while. And I have 25 years of software development experience, so I'm not. I'm equipped to do this, and I struggled with it. But once I got it, I got it. And if you're going after the retail market and that's your main play, you are not supporting this. Or if you are, you are deciding you want to pivot into that, and it's going to cost you.
Right, and see the quote at the top from Asymmetric Research, which is one of our partners. They were looking for somebody that they could collaborate with. Is there somebody with the intellectual capacity within your firm to understand what our needs are? Because they're incredibly complex. And they had to find different ways to service those needs. And the way they were servicing those needs was to do financial reporting using fiat as a proxy. So what they really wanted to do was understand where their Solana position was. But since that was so difficult, they would cash out to US dollars and say, this is the best we can do, right? And it was pretty good. And they were very consistent. So they were doing what they needed to do in order to be a good business participant. But this gives them the optionality because they now know exactly what they're doing.
How many more opportunities will be like this? If we didn't know this 2 years ago, what else is going to, I mean, what else shows up?
I mean, just the validator market alone, you're seeing more and more blockchains. They're not doing proof of work, they're doing proof of stake. And so every blockchain is going to have this problem. Now, I don't necessarily know if they're all going to be as complicated as Solana, but they're all going to still have this issue. And they all want to compete for your business. So on Solana, you have lots of different revenue streams for the validators, fewer for the delegators, but they're still there. Other blockchains are going to have to do the same thing, right? They're going to have to pull value out of these transactions in some way to entice people. Hey, use our chain over here. I think Solana is going to end up being the fastest horse because they really do have a phenomenal team behind them. When I say team, I'm talking about like the ecosystem, the participants. I tell this to people when I'm talking Solana with them. Everyone's so nice in the Solana ecosystem. It's so weird. They're so energetic about wanting you to succeed.
You're
and
weird.
them to succeed.
Okay.
So,
They're not weird. You're weird, Dave.
So I do think Solana is a pretty good. I think it's in here.
Wouldn't Ethereum have this exact same problem? 4x.
They do. I mean, yeah. Now they're proof of stake, so you're going to have the same issues on Ethereum. I'm less familiar with the Ethereum validators because until we get somebody come to us like we had with Solana, like I don't want to spend my development resources pouring energy into a problem that, well, we don't necessarily have to solve yet. You bring a problem to me and then I'll solve it. Yeah, I'll charge you for it, but I'll solve it. And we've never not been able to solve a problem. This is just what we do as a developer, as a team of developers. We don't miss the mark. We just got to know which mark to hit.
Perry, you want to add anything to that?
Yeah, I might have just a slightly different answer. So Sean is thinking about it from the perspective of maybe what new chain am I going to have to support? I know he's also thinking about, well, what's going to happen? What's going to be new on these chains? And this is sort of the deep dive that technologists like to take. So if we talk about Solana again, we know it's coming. It's 1 million transactions per second. So if you know 1 million transactions per second are coming, what comes after that? So let your imagination run wild. Are we going to be trading on decentralized exchanges, like real actual trading at volume? It could happen. What else can you do at 1 million transactions per second? I'm not sure yet, but this is where we spend time intellectualizing and trying to understand what's going to happen so that you can prepare for it. Because Gary asked the question, can another one of these firms just pivot and then start to work on this problem? They can't if they haven't put the thought into what is the base problem? What is foundational about this technology that you have to solve for and then build on top of that? And that's why we have been, I would say, quiet and slow, steady and slow.
I'll speak up loudly, but Bitcoin miners, most people don't realize, we don't make Bitcoin. We make hash rate. And you know what? Smart investors don't want to get paid cash distributions after we turn hash rate into Bitcoin, sell it, market price, and then give them a cash distribution. You know why? They have to go buy Bitcoin with it. So what our smart money wants is us to pay them in hash rate. Guess what? Nobody can tell me how to do is how do I pay people in hash rate so they can just stack their bit the proper way and not have to have all these intermediary transactions so they can try to value what we just created. So I would love to figure out how to pay some people I like in hash rate.
Yeah, try to explain that to another software company. Right? These are the types of conversations we want to have.
Thank you, sir, for the question.
Anything else? Let's just move. Any questions? You guys bounce in here on the questions. We'll get a mic. What else do we want to show on this? Because I know we sporadically went through
Yeah,
it.
I mean, I know we want to spend some time on the advisory as well, because that is what has allowed us to really share our knowledge with this group. And then there's this back and forth about what do you need and what do we know and how does that all come together and how do we build together.
So I think that does lead us into, Gary, unless you have something else you want to insert, how we got here. and really it's knowing the tremendous amount of expertise that exists on the team. And the fact that certainly as I had the privilege of joining the company, and we were sitting down in one meeting after the next with people saying, we know what we know today, but we also know there's going to be this amazing amount of, as I mentioned at the start of the couple of days here, amazing amount of noise, confusion, great information, but in the midst of so much misinformation, or you just don't know how to tell the difference, that this is really the right time to bring several of you who are in the room, who are at the tops of your areas of this industry, and the space and the incredible amount of skill and talent that exists within Node 40, and say, okay, this is the time for truly a collaborative alliance. So even the slight pivot to the N40 alliance as far as a naming is to say, look, this is a pivot enough where we're saying this is collaborative. We are looking for the top minds in each part of this space to come together and form a board of advisors and to participate in this academy that's being launched with content that was provided to us by representatives from the tops of the professions saying, we know this is what's coming. We know this is what we need to be able to certify. We know that even our existing collaborations and partnerships are not going to be able to do this at the pace we need to educate, and we need to provide this support. And so in forming a membership community and saying, this is a collaborative. This is you coming in to say, I have some knowledge to contribute. I have my network, I have the reach to be able to say this is a safe space for those who want to continue to grow and evolve, and to be able to, check against the rest of what's happening out in the space and say, okay, this is what I'm hearing, this is what's happening, this is how. And when it comes to our conversations about family offices, at the end of the day, we're all in this to better our families and to better the future for the multi-generational families that we are part of. And so the technology and the business of what we're doing is meant to feed that success today and for the future of our families. And now bringing in the digital asset conversations to those of you who are already in the space, and those who are coming up to us here and who are streaming and who are elsewhere saying, I now want to move in this space, or hey, my children want to move in this space, which means that in order to be a good parent and a good shepherd helping to move this along, I now am in it, whether I ever wanted to be or not. But being able, again, to provide those best practice resources in an online form, in a community, and to couple that with, there was a mention earlier today, there definitely is a thought, especially through, thank you again to the corporate members that we have now, being able to set up regional city structure where if you are a corporate member, making the ask, hey, do you want to represent this in your region? And we provide the support, and we'll hold the regional events and expand that process. So when I say, again, collaborative, we certainly at a national level, we want to make sure we're pursuing this, but at a regional level as well, having our corporate members and participants really have that seat at the table and saying, if you're in New York or DC or Miami, or again, major cities, we'll skirt out. If you're in Kansas City, by the way, again, this coming weekend, we know there's something going on there. So that's a great weekend to be in Kansas City. But where you are located, we want to make sure there is some outreach to a great set of connections and resource and opportunity to come together and do this as a community. So that is where the alliance has come from. And so it's not meant for you to feel that you're seated in a chair with something to share that doesn't have an opportunity to be expressed, whether it's you've joined the WhatsApp group or the Telegram, or you reach out to me. This is a first step into bringing all of this forward and to finding the right ways to share it. So that's really the purpose of the alliance. And again, want to thank Gary so much for opening his home to be the first gathering of this, because that's so appropriate. And many of you asked to have it in an intimate setting like this and do that, joined again by several thousand people on streaming. But aside from that, it's such a pleasure, a privilege to work with all of you. And I'm going to change it from saying spend the couple days really to work with all of you and to make this the first step of moving forward. So Gary, thank you again.
Yeah, no, thank you. Anyway, I just wanted, I wanted to give you some soft like we couldn't do the advisory services if we didn't have this type of intelligence, right? And I just, the more clarity we can bring to this industry, we will see money flow into this space so rapidly. And we're there. I mean, I have been through this now 4 times in different industries. You see the cadence. You see the resistance, the fighting, then all the guys get thrown in jail that were stupid. They were stupid. Every one of them. The founders of Bitcoin, the pioneers, most of these people were stupid. They really did not listen to what they were pitching. We're the greatest money on earth. And then Roger Ver goes to jail for $50 million. This is a $100 trillion market in my lifetime. Unless, you know, somebody shoots me in the face tonight. Literally, it's $100 trillion market, because why would you invest in any of these other things? What family office doesn't have enough equities, bonds, real estate, Rolex watches, villas, land, farmland, agricultural land? Oh, I've got some energy. You're maxed out on all that stuff, man. And Bitcoin's $2 trillion. Nothing. It's a baby. No $2 trillion industry has ever failed. That's a big stat. No $2 trillion. It's critical mass now. You have Deloitte here, PwC, ARK Invest. You got some of the biggest, smartest players on the planet. That's the other thing. If you're in doubt, family office, look at the talent pool here. I do zero in legacy. I refuse to even listen to any real estate deals, energy deals. I don't do that. I do this, and this is going to take over planet Earth. This is 12%. I do not believe, Rob or whoever said that the U.S. is over 12 or 13% of crypto, which is staggering, right? Really staggering. And I think that's good, actually. I think it's really good. This is the only global market I have ever been in. I came from energy, man. You cannot easily move energy from Kansas to London. Like these are separate markets now. This is truly global. It has zero logistical issues. There's no pipes. There's no grids. It's vaporware, right? And it's real money. I mean, it's actual money without the friction. So I think we're in early years. We're raising some money for Node 40. We've had people come to us to be investors. I am the majority owner here. I want a really cool strategic investor. I don't need the money. But what I do need is somebody like, these are 3 verticals that we did not even know about 2 years ago. And I have 3 other deals that I don't even want to tell these guys, because I think they're going to vomit. They're monster deals. I think they will vomit, man. And I don't want them to do that. So I'm really excited, and I'm really excited about this. We may brand it a little bit differently, but I'm very, very excited about bringing intellectual capital to an industry. Like, everybody in here has the ability to have a career for the rest of their lives. Extremely well paying. Like, the experts are in the room right now. The experts are being built right now. It's not going to be in 5 years. You're going to have you are the experts, and nobody's going to be able to take that away from you. So really appreciate you guys being here. I thought it was a cool event. Perry, closing comments?
Yeah, I just wanted to share one more thing, and it's really related to the Node 40 advisory. This is going to sound kind of silly, but we have a bulletin board in our kitchen, and just about 2 months ago, my wife put up this sheet of paper. I've got 11 and 13-year-old daughters, and the sheet of paper said, "If you need help, ask." And I'm like, oh, that's really sweet. She's telling our kids to, I'm like, wait a minute. She means me. So I would like to turn that around. You are all part of the N40 advisory. If you need help, ask. And I would like to ask for help from you as well. So if you think of somebody that needs us, if you think of somebody that can be that strategic partner on the investment side, you know, we're here. We would love to field those introductions. And the same, we're open to those. We're open to those questions. So please, if you need help, ask.
Sean, why don't you go next, and then Jen. You got any closing comments?
What's on your bulletin board?
I have no bulletin board. I have a list of groceries I need to buy on my refrigerator. I have nothing interesting other than that to say.
Did you ever imagine 3 years ago when we met, we sat we sat at that table and those two windows were black, just mapped out. We did all, and that was while somebody else was trying to buy you guys.
I'll say, yeah. So Gary had mentioned about pivoting. When we did come down our very first time, I do remember we had a huge kind of a powwow trying to figure out what's the next step for Node 40. And Perry and I are founders. We started the company only a few years ago, and it's really daunting when you go from I have a good idea, I'm going to build it, to all right, now let's commercialize it. Let's get this thing real. And it's just like it's like a slap in the face if you've never done it before. And boy, it was gut wrenching to think about what was going to come next. Gary seemed to have it all under control, and I'm thinking this is pure chaos. What is going to happen right now? So I'm really glad I did, because Perry and I are very much of the same mind. Like if the idea is good and that's what we have to do, we're going to do it. We're not going to hold on to this and say, no, this was my idea. This is how it has to get done, because we recognize what we don't know, right? And so if we are able to be honest with ourselves about that, we're open to those ideas, opinions, and expertise from people that are not us.
This is very important to me, because I wanted to make sure that I did not do one thing, which is get involved with some IT guys whose egos were the size of homes, and you bring them an idea that you know is, no, we're not doing that. Like on the pricing, I'm like, we're not selling $150 clients. It's not what I do. I don't like it. And they were, no problem, man, let's roll. Like that is really good to have a management team that's like, okay, I'm going to go with the pivot. You can't have half the team going out, fighting it. Jen?
Well, I think, again, as everybody shared here at the table, the opportunity just is tremendous. We're seeing, one door after the next open up. And truly having so many of you here who they have legacy relationships with, who I value so much, the support system, is incredible. And again, I think it's from that you develop the deepening conversations and the ideas come forward. And so I do think that it's the complement there is really important and exciting as far as what we're able to accomplish and do together. So
any questions from you guys? Thank you for being here, but any questions, comments?
Delays for a second.
There we go. You guys are chaos wranglers, truly, right? I mean, we look at our transactions, and it's mind blowing on how we try to figure this out in terms of like how we're going to give this to our accountant. I know it's not a personal platform, but when you help me understand, I know you guys are doing some. It's set up on Solana. Is there? I saw in the paper there that you guys are looking to maybe adapt onto other chains as well. Is that did I read that correctly?
Yeah, I mean we're going to bring on support for chains and exchanges that our customers are using. In the case of Solana, I brought that up because it was such an onerous task, a very expensive task, and a very time-consuming task that really had to be a lot of our customers needed to ask for it, because we could not justify the cost. We would lose so much money by supporting just that one chain for a couple of people. It had to be a lot of people. So yes, we would bring on support for other validators, other chains, as that demand pours in. Now, in other cases, it's low cost for us to support. So if we have a customer with a low transaction volume, but it's also low cost to us, of course we're going to support that. We want to support everything. The real problem with supporting everything is that everything is too big. You have hundreds and hundreds of blockchains, and then you have L2s and L1s, L2s, L3s. You also have exchanges. There are hundreds of exchanges. I mean, it's insane. So the nice thing about this is that you take the top, 25, and suddenly you've covered 95% of your market. It's who has that other extra.
And then Trump showed up.
I'm so glad that we already supported Solana when that happened.
And I bring it up because I'm an Avalanche guy. I'm an ambassador for Avalanche. I'm not pitching any of that, of course, here, but it's definitely something like if you guys were looking at going on to another chain, especially within the Avalanche ecosystem, in terms of like validator support, I would be totally there to kind of help out, maybe make some connections with you guys, with them.
That's great.
I want to say Avalanche did onboard Deloitte. That may or may not, I'm pretty sure it happened. But either way, I would love to help out in that type of way of, even if it's just a connection base. You know, we're running they're doing the Avalanche Summit here in May. I'm going to be there, of course. We're doing the consensus thing in Toronto. We're going to all be there. The founders of Avalanche are going to be there. I'd love to be kind of helping the company and at least, you know, bring some connection to where if you are looking at getting support on another chain, I would love to help out with that.
Yeah, we always are. And in the case of Avalanche, we do support that on a consumer basis. So if you have a simple wallet with transactions, even lots of transactions, we support that.
Hi, my name is Akanksha, CEO and co-founder at Neopolis. I'm sure you guys get this question a lot in terms of like energy consumption, right? And that makes everything super expensive and like, you know, supporting customers as well. So I'm curious about your take in terms of like how it's evolving and like how it will play out in the long run.
About energy consumption?
Yeah, because as you know, as you're mining, right?
Especially so proof of work.
Yes, on proof of work, exactly.
So concerns about the energy?
No, what your take is, as the technology is improving, the framework is improving, the infrastructure is improving, like the obvious answer is going to go down, but like how long it will be and so forth.
Yeah, so the luxury of doing what Node 40 does is we kind of don't care. I mean, as a company, we don't care. I mean, I have personal opinions. So yeah, there are going to be blockchains that are going to be proof of work forever. Like Bitcoin, I don't see Bitcoin moving to a proof of stake. I may have just upset a whole bunch of people. I'm not sure, but there are certain chains that probably aren't going to go that way. But I do see more and more chains kind of starting off right from the beginning as proof of stake. I like proof of stake because it allows for more participation from people who are not actually running these nodes. But yeah, I mean, if you read the Bitcoin white paper, it was intentionally to burn energy, right? And I know a lot of people, it's a very touchy subject. I mean, don't really want to get too far down that rabbit hole, but that is the intent. So if people have a problem with that, then they will forever have a problem with that because that is the intent. It's not a byproduct. It is the product. But proof of stake is far more popular, and I think it's that middle ground that a lot of people love, right? So the energy conscious people love it. Participants in cryptocurrency love it because they can just delegate with a click of a button. To be a delegator, there's nothing involved. You click a button, you're delegating. To be an operator of a validator, that's a whole other ball of wax. There's a lot of expertise that goes involved. I can't even run a validator. It's just too complicated.
All right, thank you. Thank you.
Any other questions? Yes, sir. Sam Price.
My name is Sam Price. I'm a technical analyst, YouTuber. I've been working with I've been working with Decrypted.tax and Ernest, and he recently said, "Oh, I'm working with Node 40," right? And I didn't realize that, and it just came out last week, and then I saw them up there, and they're my sponsor. They're the only sponsor I have, so it's cool. It's like I'm sponsoring them, and that's how we're servicing retail. I got an email this morning before I came here from someone in my trading group, a woman. She said, "I've had a problem with my taxes for years. I can't find the right accountant, and I can't find the right crypto." He said, Decrypted.tax just changed my life. Thank you so much. Another one of the things that you've added to my life. So like, who would have thought? I started a YouTube channel 4 years ago. You were coding. You're benefiting my life now with your codes. You're helping people in my group. You're actually benefiting my business. Like, it's beautiful. Like, we're all connected in so many ways. And I just didn't even realize that till today. And I just want to say thank you for all the hard work you did. Because now when someone uses that service, I know my reputation isn't damaged. I look great. And I know if they do get audited or something ever happens, it's fine-tuned. You know what I mean? They never come back to me and say, "Hey, I went through this service and now." So I just want to say thank you so much. And thank you, Gary, for seeing the value in Perry and Node 40. So I've been hearing so much about it. So thank you.
Good to have you.
Thank you. Yeah, big shout out to Ernest.
And that's how if you guys don't want to do retail, we still do retail.
Well,
You know
look,
what I mean?
we do retail. We just don't do Billy Bob.
Yeah.
Okay. I don't want to deal with a bunch of degens. I don't. Degens don't keep their money. Okay. They don't keep their money. This is the greatest investment opportunity in the history of man. I am 67 years old in March. I've been hunting deals like opportunities like this, industries that are up from destruction, just complete reformation since I was 22 years old, because nobody at Chevron would hire me or Deloitte. I wasn't the right guy, but I was most certainly the right guy to mess things up. This is an unbelievable opportunity. And I think that when people look at me and go, I am only going to spend $400 because I'm such a tiny little crypto trader. What the hell are you doing being a crypto trader if you got $400? Go buy Bitcoin, go back to work. Right? You're going to try to trade against the two guys that were here, Chris and Lorenzo. Dude, they're going to rip your eyeballs out. Okay. So part of my job is to help people go, what are you doing? Okay. So I don't want the degens. We will do retail. I'm retail. I just care about all my money. And so I'm going to give it to somebody that I can withstand any audit or an aggressive attack. And I actually know what my position is anytime I want to look at it. So I'm just asking everybody to man up. I used to trade natural gas on a bloody whiteboard. Okay, 8 of us, bunch of ego freaks, 27 years old, and one Friday afternoon, we missed our volume by 1 billion cubic feet. Like Saturday and Sunday, we're like, shit, dude, we're short 1 billion cubic feet a day, and starts Monday morning. And nat gas, is volatile, especially when they see that you're completely naked. So this was in a 40 billion cubic feet a day market at the time. 1 billion cubic feet is a big miss. I never used the chalkboard again, dude. I went into Excel so fast, right? Because I was fighting Excel. Oh, Excel, I don't want to use Excel. Excel cannot handle this. So that the corollary is, hey, there's a time when a market evolves that you have to change gears. You have to use a different tool. And Bitcoin, I'll end with this. If you own any Bitcoin and you think it's worth $1 million, quit treating it like it's a fucking Volkswagen. When I own a Bentley, I don't take my car through the car wash. My expenses go up, man. Okay, I'm probably going to have a driver. So Bitcoin is this beautiful thing. We cannot keep treating it like it's a piece of junk. Otherwise, you wouldn't have 3 million coins lost. The reason you lose 3 million of anything is because you didn't value it properly. That's it. That's the only reason you lose anything. You didn't value it. If you would have valued it properly, it would still be with you. So I'll end with that. I'm really excited about this. Like, we are just starting. We got another 20 years of growth. So thank you guys.
Thank you very much, everyone.
Let's go, Bitcoin. Is there another section or another little indie piece?
Great. Can you hear me? Okay. So with that, I will say we are going to kick into networking and social and time outside. And for those of you who wanted your pictures and video and all those things, we're going to commence all of that and really just get to spend some time together. I think things look like they're set up outside. And so, again, look forward to just spending time with you this afternoon, very relaxed setting. And for those who you are traveling out, safe travels to you. Thank you again very much. And you'll be getting some messages from me over the next couple of days and WhatsApp and Telegram. So thank you again.
All right, guys, if you can comment, if you can hear us here, that's going to be awesome. So we're probably going to do one last lap here. Show you guys the networking part of it.
We also give our expertise in the ways that fail. And so AC has like a 1 in 20 record, we have a 10 in 10 record. Nice. Yeah. Yeah.
You guys are on the live stream. We're gonna be wrapping this up. There you go. That's how Note 40 is wrapping up.
That's
Thank you for being here, guys.
Thank you.
Any final words?
Just
How was the event?
it was great, and remember you own a Bentley, even if it's at 100,000.
Yeah.
Remember that famous words. Right?
That's right.
These aren't last words. It's barely beginning. That's
That's right.
all I had to say.
That's exactly right.
Yeah.
You guys have safe travels, and thank you for being here with us.
Thanks, dude.
Okay, so that's the content.
Yeah.
We have last 2-3 hours for content production. So as you can see, people are shooting content here. Create memories.
Stuff, and I'll send it to you. Back and forth. Yeah, I come back. I go in the West and it's too much I think like this is really good.
Hey guys, we're live streaming on Gary's X.
Oh, that's so awesome.
And LinkedIn.
We're here on X. We're here at Gary's house. Sam Price, Crypto Lifer. I'm here with my buddy Combat right here.
What brings you
to the charts actually right now? Ethereum's in a diamond. I wanted to see if it would stay in the diamond. So I interrupted you. So sorry.
Yeah. What's cracking? When did you guys get here?
I came here. I was here last night. I got here just about about 1 o'clock. You know what I mean? Because I have a show that I have to do every day from 10 to 12. But I mean, the end really hit hard, honestly. And I've been friends with Gary now. He's been talking about Perry, and I finally got to see Perry and like understand him. Like, I hear about him all the time.
Have you invested in Note 40 yet?
No, I'm
not yet.
No.
I've invested.
But like I was telling you, my sponsor
yeah.
Note 40 on the back end. So technically I have in a way because every day I push out content and I talk about basically indirectly Note 40's technology.
We love Ernest. Ernest is awesome.
Yeah. So man, yeah.
Absolutely, yeah.
Ernest is like
everybody knows Ernest.
He does my LLC. He does it. He's my tax attorney. He's the best, man.
That's right.
And talking to him about everything, he's the best, man.
Awesome.
I was texting him today, actually.
Awesome. So that's how it correlates. So basically, maybe you can tell us a little bit more about the market. What do you see right now?
We're in a very iffy place. Bitcoin's like hanging. We have a weekly support at 97.2. It's really important. We keep battling it. Whenever we lose it, you can see you're going to likely go down to like 95,000. You know what I mean? I don't think I can show you here, but if you want to see. But the idea is, we keep losing. I'll fling to like, so awesome. I'll repost that. I never thought I'd get to do some TA today on stream. So, let me get to the daily. That's the 1 hour. We have a shoulder, a head, and a right shoulder. Temporarily, that has a 70% chance of going up. There's a gap in this VRVP. when you get above that liquidity, you'll get dragged up there. There's a lot of shorts, people in fear, which means there's in temporary short term, it looks like we're going to head up into here, right? But we're waiting on unemployment tomorrow at 8:30. Unemployment comes in at 8:30 tomorrow. Right now, I think it's at 207, and it's estimated to be at, I think, 214. We want it to be higher. We want it to be 225. Why? No one likes a bad economy, but risk on assets have a inverse correlation, right? So what happens is if we have high unemployment, it's going to push pressure to put Jerome Powell to cut the interest rate, because then you're going to say, oh, the economy's not as strong as I thought. So, but if he shows a strong economy with low unemployment, he'll keep the interest rate flat. It'll make no one will rush into risk on assets. It'll probably, Bitcoin could slump from 92 if it loses key levels. See, the thing is, Bitcoin's up at key levels. Then you have what's happening in the macroeconomics. The news will hit it, then we'll lose the key level. That will hit liquidations. Then the TA comes into play. So you could just do the TA and you'll be spot on without knowing the news. But there is a correlation as it happens. You know what I mean? So right now we're looking at 8:30 tomorrow. Until then, it looks like Bitcoin's probably going to linger sideways because the big money's going to wait, and you're going to have a bunch of people shorting and a bunch of people longing, and you have a tight angle. So there's going to be longs down here, shorts up here, and I wouldn't be surprised tomorrow at 8:30 you're going to see massive volatility. That you're going to see a candle, maybe they usually pump and dump, but they're going to get as many people as they can. So I tell my traders too, like I'm not trading big amounts for small time frames right now because of unemployment. I hope I didn't go too much.
Awesome.
There.
Thank you very much, Sam.
Yeah.
Thank you for that's the content hour right now. We have like 2 hours. Are you doing a podcast with Gary tonight or something like that? Or?
No, I'm probably gonna go back home. I got kids and stuff, but yeah, and just anything I can contribute to you guys.
Where are you coming from?
Sarasota, just 40 minutes away.
That's
yeah.
awesome, man.
Yeah, I moved here 5 months ago. I love.
Where from?
From Boston, cold Boston.
Oh man, welcome then.
And this is a young, I met his parents. He's a young protege. I'm teaching him how to trade. He's learning. He's helping out in the studio. He's managing media. He's coming up with ideas. He's watching how the YouTube channel gets made. He's absorbing information. And I wanted to bring him in here, to see. I knew if I was 19, I'd probably never forget today.
Oh, you're 19?
He'll never forget today.
Go ahead, introduce yourself.
He'll never forget today.
That's right.
I think it'll leave a lasting impression on him. So
for sure.
I thought, it would be kind of to bring him on today and to show him kind of where you could be when you go after your dreams, you know what I mean? And you pursue things that you want to, with the right people. What I like about Gary, he talks about doing business with the right people. He's not just going to do business. Like he said, he could get the money. He's looking for strategic partners. Like usually if you have the mind, you have the money, right? So you're looking for someone that sees the core reason why the business is going to continue to thrive, right?
That's right. Awesome. Why don't you go and introduce yourself?
Sorry? Oh, I'm Conrad. What's up? Born in Sarasota, lived in Sarasota my whole life. And I met Sam over here and I just started learning about everything within the market.
So 19 years old.
19 years old.
And so from your perspective, you're at the family office conference, and it's totally different than all the Bitcoin conferences, DGen conferences.
Right. Oh, yeah, no, it's like completely different. Likewise, thank you. This was awesome. It's more upscale and just, it's a completely different look. You get to see the different side of the business and how people and all that, It's just a great experience for anyone.
Awesome.
I can't wait to come to more of these.
All right, guys. I'll probably meet you in Sarasota at some point. Take care. All the best. Thanks, Conrad. Thanks. I appreciate you.
What's your name?
Martin.
Archie, I think we met too.
We probably met at some of the conferences.
Great job here doing it. I mean,
did you guys see the stream? We had 10,000 people
Unbelievable.
live yesterday. It was the peak because of the news.
Amazing.
With the strategic Bitcoin reserve.
Oh yeah.
Today
So you guys got hit hard. Yeah.
Today it's been lower, like
but
over 2,000, 3,000, 4,000.
That's still amazing.
But yesterday, like 10,000 people bouncing. It was yesterday. This stuff was like high.
I love it, man.
Awesome. Thank you guys for being here.
Hey, anytime, man.
Appreciate you.
Gary, I wasn't sure I was going to come because I'm super busy. I have too much stuff at home. I'm always in the charts. But last night, Gary, literally, at the end of the night, he was just like, tomorrow, you got to show tomorrow. And I was like, all right, I'll come on tomorrow for you, Gary. Because God bless you, Gary. You're a good man.
Awesome. Thank you, guys. Appreciate you for being here.
Yeah. So we want taxpayers. Yeah. It's something like right. So what we do is we fund fixed LLC, buying interest in the LLC for flash. Yeah. So it's doing to the point where like it's strategic.
Yeah, very. I think that I had one.
Watch this. 79. Yeah. Hey, good to have you guys. Really appreciate you guys coming.
With the sun, I guess probably is here.
So it's funny. Yeah, yeah.
Jeff, you know mine?
How is content, photos?
In the frame, in the back. Yeah, you're getting one. I like that. That's great. All right, 1, 2, 3. 1, 2, 3. There we go. Awesome. Thank you. Good shit.
Hi, by the way, my name is Martin.
We met yesterday briefly.
We met yesterday,
You
yeah.
were mentioning that the you guys just
Were you on the live stream?
no.
You've not been on the live stream.
I was on
So
the,
now you're on the live stream.
I'm on the live stream. Hey, what's going
Yes,
on?
sir. We have over 2,000 people.
All right. Good to be here.
So
Look at this view. Look at this.
check this out. What's your name again?
I'm Jeff. Jeff
Jeff.
Edenhoff.
Jeff, what brings
Jeff.
you here?
Brings me here a business partner of mine, Dennis Porter. We formed a syndicate together, and we are investing in Chile. So we're doing a mining deal, Bitcoin mining deal in Chile. And so originally it was supposed to be here for the Halloween party, but it got postponed for the hurricane and whatnot. So
That's right.
back here now.
Awesome. Have you been here all 3 days or
No, just 2 days. Just drove in from Miami. So,
from Miami?
yeah.
Awesome.
There for Global Office for a week, which is great. I mean, really, I don't know if you've ever been before or if anyone's ever been, but yeah, Global Office is great. It's one of the biggest institutional investor hedge fund conferences in the entire country, and even internationally. A lot of people fly in, and it's just a great place to network and hear about interesting fund ideas and all sorts of different projects going on. So did that for about a week. We had a yacht parked in front of the Fontainebleau, so it was fun. It's an eventful week of just awesome networking.
Awesome. Well, I hope you enjoyed the conference here.
Yeah.
Any takeaways?
Takeaways is Node 40 is awesome.
Oh, thank you. Wow, that's awesome.
Node 40 is very cool. I mean, I see so much use for it. I mean, just talking about having an accounting standard for cryptocurrency for Bitcoin. I mean, that's right around the corner. That's obvious. And a lot of good points made with just the current size of the market and the possibility of failure with this size of market, as well as just the growth potential here. I mean, so Node 40 is definitely something I want to check out with my holdings and with other people. You know, I want to spread the word, good word about Node 40. And yeah, I mean, it's great to just see a community that's so bullish on everything we're going to see here in the next year, the next 4 years.
That's right.
There's so much movement going on, and it's exciting.
Awesome. Thank you very much, buddy. Appreciate you. Safe travels, buddy.
Yeah, thank you. Appreciate
Take
it.
care.
Hey, man. Sure. Let's get this done. We haven't had any interaction, you and I.
Yeah, let's do it. Let's do it. So, what's your name? What brings you here? And how have you enjoyed the event so far?
So I'm Carlo. I go by the DeFi Defender on X. I'm a crypto lawyer. I spend a lot of time creating content in the sector. My thing is that I like to do a very broad macro analysis of how legal and regulatory changes in the law are going to impact crypto and the broader digital asset sector. I got here because I was on a panel on a crypto Twitter space with Gary. And after that panel, Gary sent me a DM. I think he liked what I had to say, developed a friendship, got to understand and know a little bit about Node 40, spoke a lot with the team, have had a chance to look and do a beta test of the product. I'm very impressed. And as far as this conference, my takeaway is that this is probably one of the finest conferences I've ever been to in crypto, because it was a great combination of very, very unique thinkers from different thought sectors and different points of view. But we came together in what I describe as kind of almost a renaissance here, because we had a conglomeration of a lot of really intelligent people in a very, very wonderful setting. And Gary, being such a gracious host, created a real atmosphere. And it's just been a tremendous both networking and learning experience. And I couldn't imagine being more motivated about digital assets than I already was, but I am. So very excited for the future of this stuff, and very grateful to have been a part of this event, because it truly was a spectacular gathering.
Wow, what a beautiful testimony. And I hope, well, I thank you for this, appearance here on the live stream. And where do people find you on X? What's the...
So easy, the DeFi Defender.
DeFi Defender.
And I've got Substack newsletter, podcast that I put out. I try to put out daily content every day, breaking down what's going on from the legal and regulatory side of the space. So yeah, if you definitely want to know more about that and be educated, give a follow.
Go follow this guy, DeFi Defender on X. And yeah, we'll hope to see you on another Node N40 Alliance Summit.
For sure.
Thank you
I
for
really
being
enjoyed
here.
meeting you as well.
Thank you. Thank you very much, buddy. I appreciate you. Take care.
Yeah, man.
US passport. I mean, yeah, I don't know the passport. I probably should. I think it's interesting. Yeah. So yeah, that's very interesting. Yeah, but that's the hope, you know.
Listen.
Oh my God, this guy's got a phone in my face.
You guys are live right now on the live stream.
Talking about US immigration, so it's not really remotely related. Be very careful what I say about US immigration thing. Oh, it's amazing. Seamless process. Yeah. Very cool.
So, do you want to introduce yourself on the live stream?
Yeah, George Gibson, tax senior manager at Deloitte. Yeah.
Awesome. Thank you for being here. Have you enjoyed the event so far?
Yeah, it's been great. Very intimate, but very in the right ways. Great content. Great mix of people. So all parts of the industry coming together in an intimate, beautiful setting. It's a lovely way to spend a couple of days.
Awesome. And where are you flying from?
Chicago. The accent gives it away.
So welcome to Florida, and enjoy this beautiful weather in paradise.
I try not to get sunburned. I am staying in the shade.
Awesome. Thank you for being here.
Yeah, thank you.
Enjoy.
Yes, what's that?
Thanks, bro.
Hey, Gary.
I'm so glad this is over. I'm going crazy. I'm exhausted.
Fake news, they didn't adopt it. What's happening tonight? Let's go on it. You know.
Hey, have you been on the live stream yet or not yet?
I have nothing.
Awesome. So we have over 2,000 people watching us. So would you like to introduce yourself and tell us like more about your company, your business, what brings you here?
Hi, my name's Angela Liu, and I run a family office network. So we have about 150 family offices in our network locally. I consult for them. And then I figured, so some of our family offices are very traditional. Making a lot of their fundamental wealth in real estate, and then start diversifying into tech. I think digital assets is another class as well so it's interesting learning about this sector. And then we see probably in the next coming years, there's going to be a lot more interest in this kind of niche investments.
Awesome. And then where are you flying from?
I'm originally from Silicon Valley, to LA, and flying from LA to Miami. There's actually Gary Cardone events as well as co-host with Jennifer, and they've done a really good job. And we're so grateful.
Awesome. Thank you very much for being here. And obviously you live in LA, so the weather is, how is the weather here on the East Coast?
Yeah, we're very lucky. Shout out to LA. The wildfires are there. The community is very strong. I think that reinforced a lot of the love that we have. A lot of people were not aware that LA is so deep in love that everybody has been volunteering and really helping out. So show your love to all the fire victims. Especially to our like so much for everybody. So thanks for listening, and keep the world going and keep it positive place.
Thank you very much. And one last question. Would you invite your friends and family offices to such an event in the future?
Yes, absolutely. Especially those that are, either next generation is taking over the family office and they're looking for new opportunities and really trying to understand the landscape of stories, landscape. Have Pricewater here, have Deloitte, and a lot of these accountants specialize in these kind of areas, so kind of guide you through.
Awesome. I appreciate your testimony and thank you for being here. Thank you. Pleasure to meet you. Martin, by the way.
Sorry?
Martin, my name is Martin.
Nice to meet you. My company is Fellow. We're stealth about it. It's a referral only, but very much.
Awesome. Thank you very much. Appreciate you.
Appreciate it.
Safe travels back home.
There's one now that could be enough. Protocol policy and they generate more teams.
Hey, buddy. How's it going? You want to be on the live stream?
Yeah, sure. Go ahead.
Awesome. So maybe you can tell us more about the experience here. What's your name? What brings you here?
Yeah, so I'm Miguel, my blockchain container online, my crypto handle, and all probably here we just wanted to learn about the connection to Web 2, right? The traditional finance money coming into crypto. Because I'm a crypto company creator, and we get stuck in our own echo chambers, just listening about, hey, this Solana's gonna go up to $1,000. Trump coin's gonna do this, but here is where we're seeing the real development, right? We're talking with people that are working in Washington, D.C., talking about legislation, what's happening in the real world. How is traditional finance coming into crypto, and how is that going to project Bitcoin's trajectory along with the altcoins into the future, right? How is our industry maturing and growing? And that's very important, and it's something that is lacking in the echo chambers of just regular crypto content.
Awesome. Thank you very much, Miguel. Any takeaways from the panels and talks?
Yes.
What was your favorite?
Tokenization is coming. Real world assets are here, right? Whether it's real estate or anything else. And the number one thing on top of that is crypto taxes, bro. You need to prepare yourself for crypto taxes.
most of us that are in here, you're not here to make all this money to then potentially go to jail or go into a lawsuit, right? You're here to conserve your wealth or produce more wealth that you already have. You don't want to get caught up in issues because you're not paying attention to your taxes and your tax liabilities. And Node 40, what was talked about here, if you don't have a CPA that is using Node 40, you're going to get left behind. You're going to have issues. That's one of my biggest takeaways. That's why I'm glad that I'm working with some of the partners here, like Decrypt Tax, that is using Node 40 to make sure that I'm okay. I hope all of you guys, take that advice and go on and make sure your crypto taxes are good. Don't lose your wealth and end up in jail after making all this money in crypto.
Awesome. Wow. What a beautiful, beautiful testimony. Thank you, Miguel. Appreciate you. And enjoy the rest of the conference here. Take care.
Yeah,
Hey guys, can you drop a comment and tell us if you can hear me because there's so much noise. We have still a lot of people to give us some feedback.
Already got the guy.
Our cameraman. So obviously this will be better footage than this one. Were you able to take some pictures of Gary here?
I got this already. Yeah. Yeah.
Thank you for the feedback, guys. I'll move a little bit closer here so you guys can hear the conversation. And sorry for the noise.
Right. We're a banking system. Crypto faces economics. Right. More likely to lose than or somebody walks in and says, hey, right. I'm going to shoot this lady. And give me the cookies. Right. Yeah. So this is we were. I was called a suit when I first walked in. Suits here. And I had to educate the children. I said, look, you guys chose not to regulate yourself. we were taking like Wall Street too. Don't find you. You literally have a decision. So I don't know actually run like a proper business. Me, the ethic. And you can see it's not. It's so it's
Yeah.
I've never had to run.
Yeah.
I'm 52% of this thing now. And I might be 100 in this. Because the more I look at it, I was now really large.
I believe, but it's the pieces of this institution that like undeniably balancing.
It's not the two kids in the basement. Yeah, that's a problem. I mean, the other thing is that would be good is people that see it. Well, they don't, but it's so early that they're like, well, I don't understand Bitcoin so powerful.
Well, but this is like a country because there's the fear and the apprehension.
It's in farms being legacy of them. Wow, here's a company. Like, you don't think I'm going to get the hits?
Yeah. And I mean, in a way, it's softer just on a very particular accent. That's the difficult understanding now. That's the emotions.
All of those assets. In all 42,000 US months. Will not. I mean, I'm confident that let's just go home and yeah, that's a whole different.
Right.
I'll do the biggest. I mean, somebody would help. Joe Wood, try to find Joe. Joe, why don't you just go and get Joe? Because I would reflect, we'll use our information. You go to the stop of it. You always have an institution. They're finding go find some women, some Indians, and we'll fix the government.
Yeah.
This is the win we did.
Right.
And I'm talking about hey, I can bring you a woman who has the socket. I can bring you a woman. If they're going to do it, I don't believe in doing it, but if they're going to do the whole minority thing, okay, let's get back to it. There's just a lot of windows.
Yeah, it's not about.
When you start to see how deep the civilization is,
and you don't need to. Yeah.
I made $70 million a year. 45 of them EBITDA. Dealing is even massive. I had never got over 1% market share. And I made 70 million euros. All self-funded, all owned by my ex-wife. Zero shareholders.
That's a beautiful thing.
Oh my God.
Because
until the family goes stupid, which we did. But my point is, wow, God for me, 50 years later, the credit card industry making $70 million a year building such a thing. Visa and MasterCard have about this stuff. You would think Visa and MasterCard could handle all their clients after 50 years. They have distributors. They can't even handle it. You're 52 million. That's something that's going on. This is just no one can handle it. So it's really the same thing as this. So it's I think what we saw in energy in the 90s is like the whole Iran thing it's going to pale in comparison to the we've been
right. Yeah.
Co-ops.
To your point, with greater transparency and accountability, once the numbers are real and people compare, it's going to.
Well, I don't think people even know how big it is. But yeah, having that transparency is.
I don't think they even know what the existing market is. Like there's this question: is it 4 quadrillion or is it 800 trillion?
Right.
How big is this thing?
I don't think
there's so much paper on it. So there's so many zeros, and we don't know how many times it's been like. But I think it all goes on to. I mean,
it has to. It has to. I mean,
there's going to be a day you and I in our lifetime we will not be in the house. We're not going to be allowed. We will be the barrel. Really?
Which is true.
That's $300,000 worth of so it's sitting in the garage. It's very hard for you. This is not we like it.
Right. Yeah, yeah.
94% of the time, that car's sitting like in the garage. It needs to be needed with clean
Exactly.
service. I'm gonna Uber us.
Yeah.
Reminds me of my favorite example. Think back to cartoons, DuckTales. You got Scrooge McDuck doing this pile of money to swing it in. And that's all he does with that pile of money. Like, it's not good to use, it's not good to anything else. But he just loves that. It's like,
Yes, if you say that, I think it was Jetsons. And like, if you go just look at a couple of the Jetsons, we were going there. Go on, man. I remember him flying his little rocket ship, and he'd give a ticket. You know, or you curse and you get a, you know, you see, that's what you're at.
Yeah. You're right. No, you don't need cops anymore.
I bought a car, and the insurance guy, they sent me a note. It's really hoodwinking. I could not. Hey, if you want a 10% discount, check this box. And it's basically they have for my thinking on the screen. Brain in my brain.
Oh, wow. 10%.
Yeah, and they're like, I'm like, oh, you're gonna check my behavior.
Yeah.
You're gonna actually insure me because I'm a party. Dude, you're not sure. What happened?
Yeah.
Yeah.
I agree.
Were you speaking? I really like it.
But it's to the point of what's happened to the government. You see the malicious intent. When you give people that power, people can misuse it. If you leave that in the hands of the person, not always can be trusted.
Well, I hear this, but
in terms of the blockchain, you know, help with verification.
Yeah.
The point of the
But
third party.
human character flaw. Centralization is possible. If you and I shared the same God, thank you, Denny. If we had the same God, like we all totally agreed on our God, we're centralization. It's when it's very efficient. It's very efficient for us to all join in. Now, could we all die? Yeah, I mean, if a bomb hits the same place, we do have some exposure, but to be able to stick it in a transparent universe would be no everyone's like, oh, they're going to track trace stuff. They're not going to track and trace this if we don't have a bad government and we have how do you solve it? Transparency. All the values.
Yeah.
All the rules, all the government should be doing that. We can decentralize. Hey, the amount of arguments I've had with people. No, dude, that's not right. You've got any influence in every president before this. They're all corrupted. Everyone is being corrupted. Why? It's not getting worse. At least the AI, you write the code and we're done. We don't have a market we're being shown up changing the rules or whoever it is. Evans, but they're not. Just show me what you guys are doing. You're making $1 trillion? Awesome. You want to make $1 trillion? I love you guys making that. Did you raise GDP? That's it. If you did, y'all should all get sick. But we want to see exactly how you got rich and the number. Not good. How does Nancy Pelosi make so much money? This is rich. Just the
Yeah.
We're here now. For transparency, zero excuse other than you are obscuring your black box, bullshit, you're hiding a crime. Something you're really ashamed of. It's the only reason you have to.
We need you too. Thanks for the
Thank you guys. Really appreciate it, man. Let's chat. Okay. Let's.
I look forward to talking to you guys about what you're doing. Okay. Thank you. Yeah, I love like the camera about these traditional rules for industries. And
What's going on, buddy?
How are you?
Good, thank you. Stay here. Hey, John.
How are you, buddy?
Good, good, thank you. You're still on the live stream again.
All right.
Yes. You should
I'm a
tell
little
us-
more alive today.
You're more alive today than
Yeah.
yesterday, yeah.
Yeah.
Maybe after the beer, you know?
Well, I just cracked my first beer, so.
How was the event for you?
It was amazing. Yeah, it really was. The content was excellent.
What was your favorite talk or presentation?
Oh man, there's so many of them. You know, I really enjoyed the ARK Invest guys. They were awesome. I really enjoyed Peter. He was amazing and funny on top of it. And you know, frankly, the Node 40 stuff was amazing. It really, if you have good crypto holdings, you need good software to track for tax purposes. So, just so much good content, and the people have been amazing. The networking and meeting everyone here has been the highlight as well.
Awesome. Thank you very much for being here, and we look forward to seeing you on the next one.
Awesome.
All right. Take care, John.
Thanks, you bet.
Take care. We're joining the conversation with the live stream. Do you want to introduce yourself on the live stream? If you guys recognize this guy, what's your X handle? There you go. Tell us how have you enjoyed the event so far here?
An amazing event. Had a great time. Thank you so much.
People are asking what do you think about Doge?
About Doge?
About Doge, yeah.
Stick to Bitcoin. There's only one. There's no second best.
I think they're asking about the Department of Government.
All for it. Let's cut the waste.
There you go. That's what we think here. Awesome. Thank you very much, sir. And where did you fly in from?
I'm from Vegas.
From Vegas.
Yeah.
Okay. Awesome. So again, from dry climate to humidity a little bit.
It's a little humid here, but it's lovely in South Florida. Thank you, Gary Cardone. What a wonderful event.
Awesome. Thank you very much for being here. So appreciate you. Take care.
So these guys are happy to make everybody give it And it's so fantastic. It's like really passionate about energy. I think money can also and then if they want to have maybe $500 million and the guy's like
We were putting very strategic.
Hey, how's it going? I want to grab a chair and let's have a chat. Excuse me. Hey, so we're live streaming, so perfect. Yeah.
Great.
Waiting
I just want to thank Node 40 and the Alliance. We joined the Alliance.
What's your name again?
I'm Steven Smith.
Steven, nice to meet you. Thank you for being here.
Yes.
What's the company name?
Celestial Mining Management.
Celestial Mining Management.
Yeah, so we're Bitcoin miners.
Awesome. And what brought you here to the family office Digital Asset Summit?
Well, we're in a business that scales with capital, so we're always around looking at how people are raising, talking about our offerings, and looking for partnerships in the space. This has been a fantastic event for us with many important contacts. But I'm also a software developer, and I just have such incredible respect for what they've done with the product. And so I would pay my compliments to Node 40 and their team.
Awesome. Thank you very much. So what are you guys looking for with your business?
About $120 million.
120 raise?
Yes.
Right now?
Yes.
And so who would be an ideal investor?
We have two products, investment products. One is an equity-based product. Both are income-oriented. The equity product is for someone who wants direct exposure to Bitcoin mining, and um, the other is more of a fixed income product, convertible note, like what many of the other miners and some of the other businesses in our industry have done. But in our case, we pay more of a real interest rate. So it's not a zero coupon bond.
So how are you guys different than other miners in terms of approach?
On smaller sites that are not of interest to the largest Bitcoin miners, but have the best power rates, competitive with the best in the industry. Um, and we look for things that we can deploy in 60 to 90 days, 120 days max, from capital in to generating income. And I know that sets us apart from many of the larger players who have to raise hundreds of millions of dollars and may take a year or more to deploy that.
And what sort of conversations have you had with the people here that have been attending? And then
Fascinating conversations about accounting, about potential mining projects, about
what do they say about mining? When you say, hey, Bitcoin mining, do they understand it, or is it something that you need to
not many
educate them?
people understand, but those that do generally have very pointed questions for us. Yes. So it's a variety. I think a lot of people here are investors and traders and looking at the different kinds of assets that they can trade. Mining, I like mining because it is you're buying real world capital assets that produce income, and I'm not speculating on someone else's desire or the potential success for the project. Bitcoin is achieved product market fit, shall we say. So when I produce Bitcoin, I know I have a buyer. And I know I'll have a buyer for the next 5 years.
The most liquid market probably in the world.
What's that?
It's probably the most liquid market in the
It
world
is.
right now.
And I think we're going to cross some key liquidity thresholds in Bitcoin in the near future. Um, when you get to $1 million Bitcoin, which I think is in the cards sometime in the next 5 years, um, you're talking a market that's bigger and maybe more liquid than the treasury market. And so we are on our way to global reserve asset.
Wow. And so last question, what do you think about the HPC deals?
I think a lot of people have been distracted by that. I think when you look at the DeepSeek innovation that just came out and the efficiency gains that can be achieved algorithmically, I ask myself, would I rather own ASICs or would I rather own GPUs? I'm not so sure on the GPUs. I see stuff on Twitter about GPUs selling, H100 selling in China at a massive discount right now. That scares me. I think that there's a lot of room left for innovation on the AI side, whereas Bitcoin went through this ASIC generation, and we're now at the most efficient type of thing that we could possibly build for proof of work. There's potential for application-specific AI chips to obsolete hardware. So it feels more high risk to me as a Bitcoin miner to be an AI compute. But that's it. I look at it, and I'm a user of AI. I work with AI to enhance our ERP systems and other things. But I think a lot of that compute could move to the edge, could move to your device, where the models are running on your device, and so owning a lot of cloud infrastructure would make me a little nervous. That's how I look at it today. I know there's a big push into it, and I certainly have looked at making our sites AI compatible, and that affects some of the infrastructure choices that we make.
Very interesting insight. Steven, thank you very much for being here.
Thank you.
And we look forward to seeing you on the next event.
Great.
Appreciate you. Thank you for being a member. All right, so the music started playing.
Can you spend a little bit, like 5 minutes here if you're up for it?
Absolutely, yeah. Yeah, sure. Yeah. Let me bring it. Yeah. Oh, you guys are gonna be doing an interview with Gary as well.
Yeah, so we
Awesome.
planning to do one in person after the event today.
So your name is maybe you can introduce yourself. Tell us more about your business.
What's your name?
Marty. Nice to meet you.
Nice to meet you, Martin. I'm John. John.
John.
Cullen.
Good
Yes.
to meet you, John.
So I'm with True Capital. It's a crypto fund. I left BlackRock after 6 years. I was on the Latin platform and client services and relationship management. I worked a lot with the digital assets team there and helped out with things like the Coinbase integration and several other digital asset initiatives that I'm working on at BlackRock. But I wanted to go full-time crypto, so I left, work on this fund, True Capital, TRU. And the unique thing about this fund, we're focusing on crypto only. The long-term objective is to accumulate more Bitcoin and high-value digital assets primarily. So the focus is Bitcoin primarily. ETH. Then we have we're trying to bring in some institutional grade investing technology to support this because there's a lack of that in the digital asset space right now. So we have some proprietary algorithmic trading software that we've acquired for several $1 million to help support the fund. Any crypto fund can outperform the market in a bull run. In a bear market, in a crap market, you need another way to make returns and yields other than just going getting degen and DeFi and chasing yield and things like that. The other part of the fund, which is what I'm really excited about, I'm the head of fundamental analysis and market research for the fund. And so I spend a lot of time reading the white paper, going down the pink sheets on CoinMarketCap, researching and understanding all the different altcoins in the space. I think it's really important that first be able to articulate, for everything in the top 100 digital assets, what's the investment thesis, what's the bull case, bear case, who are the founders, where's the yield, the revenue coming from, who are the users, why are they there, what's the competition, and what's the future of that space. So that's kind of where I spend a lot of my time in the fund, and then helping to make strategic investments in high quality altcoin projects to be of confidence in for this bull run for the future. So, you bring a lot of different partners together to bring all these different pieces together, and I think it creates a really unique offering. I think we're getting a lot of success with this. It's a recent thing I've gone full-time focusing on this, but I'm really excited about it. I think we've had a lot of interest and a lot of traction here at this event, and I expect that to continue. The bull run is only going to get hotter from here. I think we're going to have a lot of regulatory clarity, support from this administration, support from capital. Venture capital is going to come back. Traditional finance is going to come in to support the industry. So we're just looking forward to being part of that as this continues to grow in America, and that crypto will be made in America.
So family office is looking to deploy into digital assets.
Yes. Yeah. So family offices, high net worth individuals that understand the value proposition and the investment.
So what's the value proposition? Maybe you can give us a little picture.
I mean, skipping over that part, right? If you understand the value proposition of Bitcoin, you kind of tacitly accept that there's a larger addressable market there. There's a digital asset industry that is emerging, that is still being formed and still emerging. It's difficult to pick winners and losers in this market, and the goal is to not have to. To the last century, and you knew that the automobile was going to be the main drive of transportation in the United States for the next century, it still wouldn't help you much as an investor, because there were, I think, like more than 30,000 auto manufacturers launched in the United States in the 20th century, and only 5 of them are still in operation, and one of them is Tesla. So picking winners and losers at this stage is kind of like looking at a bunch of babies and trying to bet on who's going to win the 100-meter dash at the Olympics. Our thesis is to pay close attention and see what is actually happening now. Where is the adoption? Where is the traction? Where is the use case coming from? A lot of digital assets have been launched. There's now around 37 million digital assets on the market, but not all of them have figured out a sustainable economic driver of value for that digital asset. I took a course at the Wharton School of Business on the economics of blockchain and digital assets, specifically to study that idea, because that is what's going to create and sustain long-term demand and value in these digital assets. So it's just like anything else, any business and bond. The demand comes from actual adoption, actual use case, actual economic value that real users are getting in the economy. That exists in the digital asset space, but it's still being defined, still emerging, and it changes frequently. So you have to pay attention to that. If you're in the family office space, you understand these things, but you don't want to have to, like me, read everybody's white paper, watch what's happening all the time, read all these reports on on-chain development and so forth. We offer that, and we want to help with that. I think people need partnership in this space. Try to go it alone. Wolves hunt lost sheep, so I think getting in the community, getting a partner you understand, people see the value of that. I think that's going to bring us a lot of success in this.
Awesome, thank you. How much AUM do you guys have right now?
We're just now in the early stages of finding LPs, bringing in the capital. Like I said, last month, So we're still in early stages. So we still have a lot of room in the fund to bring in new capital, bring in new LPs, and we're excited to do that. I think we got a lot of interest out of this event, so we expect that to continue to expand.
Awesome. And what are the takeaways from the event? And I hope, obviously, that you found the potential family offices or just connections where
My
you
takeaways
think
from
it's
this event that were
topical.
really exciting for me was just hope, really, honestly. Like, there's a saying, I can't remember where this comes from, but what is past is prologue. So I've heard it said, what is past is prologue. And that's what everything up till now in the digital asset space feels like to me. It feels like we're about to get to the start of chapter one. And so I think a lot of people, if they think of crypto, they think of hype cycles and, fly-by-night degenerate gambling on meme coins and so forth. I really don't think that's the case. I think there's a lot of there. There's a lot of value in this asset class that's being created, that's emerging. And so I think that the takeaway for me was that a lot of people are understanding that, beginning to understand that. Regulators and our government are understanding that. That's going to expand as we get further into this administration, as it becomes more normalized, as there's more adoption and more social proofing, right? I think that's the exciting thing for me. The other thing too is I'll say, about Gary specifically, he's a really interesting example of somebody who built a career and has gotten successful enough to be able to say, I don't need this, I don't need to know about this, I don't want to learn about this. The fact that he is willing to become a student again, to go back and read the white papers, to learn about this stuff, to understand the value here, and to not be so stubborn and pig-headed to say, you know what, that's not for me, I don't need to know this, but to not only learn it, but to get active, involved, and build things that people need, businesses need to be able to do this in a way that's compliant, responsible, sustainable. That's really inspiring to me and encouraging. I think that willingness to adapt and change and evolve is what's going to sustain this industry. And the people who are willing to do that and see that opportunity there are the ones who are going to benefit the most from this early on, because they're going to see change and adapt early. I don't think this industry is going to destroy anybody or kill anybody, but it's going to be really beneficial for everyone. And the sooner that you get involved, the sooner you'll benefit from it. So I think that's been really encouraging. And it gives me a lot of hope that more people will take that posture, benefit from this, get involved, make that change, and adopt Bitcoin, crypto, Web3, and digital assets as we go further into 2025.
Yeah, by the way, love your jacket.
Thank you.
John is dressed pretty sharp. Where are you flying from?
I flew in from Manhattan, Lower Manhattan.
Awesome. So enjoy this beautiful weather here in Florida.
Yes.
Thank you for being with us.
It's a pleasure, Martin.
Look forward to seeing you on the next one.
Yes, sir. Thank you very much.
John, take care. All right, guys, we'll be finishing here slowly. As you can see, Gary has conversations here. People are still networking. The music has started, so we'll be shutting down. Node 40 team. You guys want to say bye?
I want to say hi to the Node 40 team back home.
Oh, right. Exactly. I hope they're watching
On the
us.
floor, yeah.
Yeah. All right, guys.
Node 40 team.
Thank you for your help. Take care.
Thank
Bye.
you, Gary, for everything.
Success.
Wrapping this up. Yes, sir.
Nice.
Showing the view.
Beautiful. How do you see how many viewers you have?
Oh, 7K.
That's awesome. 7K?
Yeah. Yesterday was like way higher.
Heavier?
Oh yeah. But yeah, that's it. We're gonna wrap this up. All right. Thank you, guys. Appreciate you.
You're very welcome.
Jeremy, maybe you wanna just say a few words about your company.
Yes, Jeremy O'Shea. I'm the event planner on the event. My company is called Private Event Group. We handle all the private events, the home events, the corporate events. So look me up if you need a.
What's the link?
Private Event Group on all socials. Mostly Instagram, though. That's our portfolio. So.
Awesome. Thank you, Jeremy. Appreciate you.
Pleasure.
Take
Pleasure
care.
collaborating.
Let's wrap this out. Gary's beautiful office. And guys, thank you for being with us. Hope you enjoyed it. That's it. That's the wrap.